In addition of the above, the regulator also has the Takaful Advisory Council, TAC, who advise the regulator on Sharia in all its regulated activities on Takaful. Another challenge that technological innovation poses is fintech is described as disruptive innovations. Fintech has tendency to disrupt your existing business and create new markets, values, structures, network, market leaders, and alliance. This necessitates changes in product, policy, regulation, and Sharia compliance. Our experience in developing mobile insurance in Nigeria, which was widely accepted and sold, but 3 regulators had to partner and combine their laws or effort to succeed on it. Central Bank of Nigeria, CBN, Nigeria Communication Commissions, NCC, NICOM together supported the product, but the product faced series of conflicts of laws that affected its progress. The introductions of mobile insurance in Nigeria changed the insurance product in terms of wide coverage. It became a mass market insurance, serious development. New market players emerged, such as aggregators who acted as agents and service providers who sometimes earn more than the underwriter's earning. Consequently, there was need to change the regulatory requirement and policy approach, as well as how Sharia will look at the cost of running such a product, whereby huge contribution premium would be deducted to the detriment of participant interest in spirit of financial inclusion. The mobile insurance tampered with other regulatory requirements, such as fiscal and monetary policy of CBN, who disapproved mobile airtime to be used as contribution or premium, or used to settle claims. NCC, as regulator, disapproved their regulated entity to charge lower fee for their service in order to achieve financial inclusion. These and many problems disrupted the insurance product and retarded the progress of fintech. Therefore, we, the regulators and the operators, have to consider such challenges whenever we embark on new fintech product development and designing. In conclusion, I wish to confirm that NICOM will give its commitment and support to any initiative for development of Takaful insurance and Islamic finance in Africa that this conference will bring forward as resolution for this conference. Once again, ladies and gentlemen, on behalf of the Commission, I wish you a fruitful deliberation. Thank you.
Perhaps it is quite telling that Alhaji Abubakar's keynote address included a conversation on technology and its role in Takaful. One of our very first panels actually looks at the role of technology in growing Takaful. But perhaps I will keep the nuggets to myself. And I want to take a moment to acknowledge the presence of Ambassador Shaibu Ahmed. He's the Executive Secretary of the Financial Reporting Council of Nigeria. For Nur Takaful, he holds a special place because he was the pioneer chairman of the company. A big welcome to you, Ambassador. It's a pleasure to have you in our midst. Now, without further ado, our special guest is a man who hardly needs introductions, particularly in circles such as this. In more corners than I can count, he's known simply as SLS. His Royal Highness Mohammed Sanusi II is known for his diverse roles as a banker, a political economist, an academician, and spiritual leader. He served as the governor of the Central Bank of Nigeria before becoming the fourth emir of Kano. Now, with a focus on Islamic finance, he introduced Islamic banking to Nigeria's banking sector and received prestigious awards for his contribution to the field. Sanusi II, SLS, is currently pursuing a PhD in Islamic law. He's been awarded honorary doctorate degrees from several reputable universities. He was also recognized globally by Time magazine as one of the 100 most influential people in the world. He received Africa's Person of the Year award from Forbes magazine. As an author, he has published numerous papers and recently released a compilation of his articles. It is my pleasure to welcome to the stage His Royal Highness Mohammed Sanusi II. Please put your hands together for him.
Bismillahirrahmanirrahim. Let me begin by welcoming everyone to this important conference and thank Nur Takaful for the invitation. Yesterday when I asked Ismaila what I'm supposed to speak on, it's nice. So I think this will be better. Yesterday when I asked Ismaila what I was supposed to speak on, he mentioned technology and Takaful. And unfortunately, I'm not a specialist in any of those areas. I'm a banker. My knowledge of technology is very limited. I know how it works, and I tend to tell the tech people what I want to see, but I have no understanding of the field. One of the great things about speaking after a keynote speaker is I can pretend that I came ready to say all those things that he said, but since he has already said them, I will not waste your time by repeating. And therefore, I'd like to adopt the comments made by the Deputy Commissioner. Let me just say that I'm pleased to see the developments and growth in the Islamic finance industry over the years. And I still remember a little over 10 years ago when we licensed the first Islamic bank, Jaiz. And I remember those periods when we worked towards getting NICOM to be a member of the IFSB. And I do hope that we will begin to see the industry get to a stage where it lifts off, because I now know that there are several more Islamic banks. There are now several more Takaful companies. And we've passed that initial stage of doubt, of cynicism, and Nigerians are beginning to recognize this as a proper business model that is profitable and sustainable. Taking off from some of the comments made by NICOM, I would just like to make a few recommendations. We do have a financial sector regulatory consultative committee under the CBN Act. I know that when I was in the CBN, it met regularly, and the collaboration between regulators in that committee helps address some of these concerns. And I do hope that NICOM will talk to the CBN, NDIC, SEC, and so on. And we used to invite NCC, the Nigerian Stock Exchange, to those meetings. And I made sure those meetings held quarterly, and that helped us reduce some of the issues around misunderstanding and regulatory arbitrage. But beyond that, we've reached a point now where the regulators do have Islamic finance and non-interest banking areas. The central bank has an interest banking department. NICOM, I'm sure it has a unit that regulates Takaful. SEC has its own guidelines on Islamic funds. And maybe as a subcommittee of FSRCC, we can have the Islamic finance regulators come together as a committee and basically work on how they can improve the regulation, because finance now goes beyond one regulator. It cuts across sectors. The units and the entities you regulate sometimes are holding companies that have both banking and insurance and fund management. And now with banks like Sterling getting a banking license for Islamic finance, I imagine the group might go into insurance, it might go into fund management. So having FSRCC have an Islamic finance subcommittee would help move things forward. I'd like to, as far as technology is concerned, I think the Deputy Commissioner has spoken about blockchain. I've seen some articles around big data analytics, some articles around robo-advisory. And I think the point I'd like to make is that most developments in industries follow developments in research. So I would suggest that we familiarize ourselves with the latest research in this area, what's happening in the banking and insurance industry. The great thing about technology, as far as Sharia is concerned, is that technology is just a means. You know, in Islamic law, there's always a distinction between what is called wasila and gaya. Wasila is just a means. And the means themselves don't have any implication in themselves. The judgment and the ruling is always on what the means lead to. So if something helps you achieve what is wajib, it is wajib. If it helps you achieve what is halal, it is halal. If it helps you achieve what is haram, it is haram. So long as your products are in compliance with Sharia, the technology that you use is permissible, so long as the products themselves are permissible. And so whether it's blockchain or AI robo advisory or big data analytics, technology would help you improve service delivery. It will help you improve your efficiency and your cost of production, to help you improve the penetration of your products into the underserved markets in Africa. And I do think that Africa holds great promise of a future for Islamic banking and Islamic finance. I would like to wish all of you successful conference. One of the great things about me not being an expert in a field is that you are saved the trouble of listening to a very long speech, and you're certainly saved the trouble of seeing a controversial headline tomorrow, because I have not said anything that is going to be controversial. So this is the kind of conference I like coming to. Don't invite me to talk about the economy of our life. And I look forward to listening to one or two of the sessions before leaving and learning something that would help me in my next speech so that I can pretend to be an expert in Takaful or in technology. سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك.
Big thank you to His Royal Highness Mohammed Sanusi II for his speech. It's very difficult when a man like SLS tells you he doesn't know much on a subject. You are tempted to not believe what he says, considering the number of things we hear him speak on in public spaces. But I think that in this case, we'll simply give him that. We will believe him as he says it. Now, NICOM makes something of a second appearance, if you like, at the conference this morning. I have the pleasure of introducing a highly experienced chartered insurance practitioner who has over 35 years of both local and international insurance and management expertise. Throughout his career, he has held prominent positions in various sectors, ranging from private to public, and has successfully managed leading companies within those industries. With a strong educational foundation, including a diploma in insurance and associateship of the Chartered Insurance Institute, he has continually expanded his knowledge and skills. Before I go further with his bio, I'm talking about none other than Mohammed Kari. He is the former Chief Executive Officer of NICOM. Mr. Kari has notably served as MD of the Nigeria Reinsurance Corporation and Nikon Insurance Corporation. He has been Commissioner for Insurance, Chief Executive of the National Insurance Commission, after being appointed by the former President Muhammadu Buhari. This was back in 2015. Now, Mr. Kari has actively participated in numerous professional organizations and committees. Some of them include the West Africa Insurance Companies Association, the United Nations Committee on Trade and Development, the African Insurance Organization, and much more. I'll take a moment here. Mr. Kari holds a special place for Nur Takaful because it was under his stewardship that Nur Takaful received its license. It is my pleasure to welcome Mohammed Kari to the stage. Please put your hands together.
Bismillahir Rahmanir Rahim. it is usual for speakers to acknowledge and accept standing protocols, but I will seek for your indulgence to recognize two personalities in this gathering. First, the chairman of Nur Takaful, Mr. Mukhtar Bakari, not for anything, because he's paying the bills. And he's a very humble person I've interacted with of recent. Mr. Chairman, sir. Next, I would like to recognize His Highness, the 14th Emir of Kano, Khalifa Mohammed Lamid Sanusi, the regulator of regulators. He was a regulator before I was. He was royalty before I was, because he was born in it. Actually, as you can see, he has spoken before I, which goes to say that he's always ahead. Your Highness, sir. I wish to start by thanking Nur Takaful for inviting me to say a few words at this function. They have invited speakers from abroad, they have invited royalty, they have invited experts, but they thought I should speak before them. And like His Highness said, speaking after the keynote address tend to give you immunity to claim that everything they have said was in your paper. I would also flash through some slides. When I was invited to speak, I was sent an invitation to just speak. And I took the trouble. It's not usual these days I'm invited to speak on insurance, because I've since retired from the profession, from practice rather. So I researched and made a paper that will take about 45 minutes to present. Halfway through finishing the paper, I called one of the organizers and said, how much time do I actually have? He said 20 minutes. So I modified my paper. I quickly drew up some slides to present in 25 minutes, because I will always ask for an injury time, and I'm always given. When I finally saw the program a few days ago, I realized I had only 10 minutes. And I joked with the personality to say, are you doing this because I'm no more a regulator? All regulators will know that a regulated industry cannot stop them when they are on the microphone. Like when the deputy commissioner spoke on behalf of NICOM, no regulator dare tell him time is up. So I had to juxtapose all these things to come up with some slides that will be presented in about 15 minutes. I requested for extra time and I was given. And I thank the organizers for that. But I will demand extra in case I pass 15 minutes, because His Highness spoke in only 6 minutes out of the 20 allotted to him. So as a second royalty, I'm claiming those time for myself. Thank you very much. The paper I've done explore the role of technology in overcoming challenges and opportunities in Islamic finance and Takaful, with specific reference to Takaful in Africa as the theme provided. I thought that as a non-professional or a non-practitioner, I should avoid jargons, technicalities, and figures and graphs. I will leave those to the professional that will make a presentation after me. So kindly forgive me if my paper is so boring, doesn't have graphs, doesn't have sketches, and doesn't have references to other literary giants. My paper examined the potential impact of digital platforms, and it identifies key challenges and opportunities that are available that can be impacted with digital platforms, mobile banking, blockchains, artificial intelligence, and data analytics on expanding the access to Islamic finance, promoting financial literacy, and fostering trust and transparency through brief. The paper concludes with recommendation to policyholders to regulators, stakeholders, and technology providers to collaborate and harness the transformation powers of technology to unlock full potential of Takaful and Islamic finance in Africa. Some professionals argue that when you say Islamic finance, it covers Takaful. Islamic finance and Takaful can be separated by some simple definition, which I've ventured in this slide. Though similar, they have some distinguishing factors. Takaful, insurance people like to call Takaful as an independent entity from Islamic finance. Not because it is not covered under Islamic finance, but because it has certain peculiarities which incorporates all of Islamic finance and some individuals. That is the reason why His Highness exempted himself from expertise on Takaful. Though he's an expert in Islamic finance, he said he's not an excellent expert in Takaful. But for his modesty, I would have said, sir, you are in all. I considered, first of all, to look at the growth of Takaful in Africa. And I have made an overview in the landscape of Islamic finance in Africa. Countries such as Sudan, Egypt, Morocco, Tunisia, Nigeria, South Africa, and Kenya to an extent have already implemented regulatory frameworks and established Islamic finance institutions to promote Sharia-compliant banking and other financial services. Sudan has a long-standing history of Islamic banking and operates a fully Sharia-compliant financial system when there was a country. Other countries like Egypt, Morocco, Tunisia, and Nigeria have also implemented specific laws and guidelines to facilitate Islamic financial services. And we know the mover of such initiative in Nigeria is none other than His Highness. In Sudan, the entire banking sector operates according to Islamic principles. Other countries like Egypt and Nigeria have witnessed the emergence of dedicated Islamic banking alongside conventional banking institutions. These Islamic banks offer a range of Sharia-compliant products and services, including deposit accounts, financing facilities, and investment products. Countries like Sudan, Nigeria, South Africa, and Egypt have seen the establishment of Takaful companies to cater for the growing demand of Sharia-compliant insurance products. As far as Sukuk is concerned, government and corporations in countries like Sudan, Egypt, and Nigeria have issued Sukuks to fund infrastructural projects amid financial needs while adhering to Sharia principles. Islamic microfinance has combined the principles of Islamic finance concepts, providing interest-free loans and financial services to the underserved population. Education and awareness, academic institutions, regulatory bodies, and industry organizations are conducting training programs, workshops, and conferences to promote the understanding and capacity building Islamic finance. I think today's event is one of such outing, and I congratulate Noor for the initiative. It is worth noting that the development of Islamic finance in Africa is at different stages across the countries, with some being more advanced than others. However, the overall trend indicates a growing interest and recognition of the potential of Islamic finance as a means of financial inclusion and economic development in the region. I also looked at what opportunities exist for Takaful and Islamic finance in Africa. Some of the key opportunities I've highlighted include the following. Africa has a large Muslim population. Though Islamic finance products are not only for Muslim believers, but it is for them in the sense that they appreciate ethical products that comply with their religious beliefs. This size of population presents a potential substantial market for Takaful and Islamic finance products and services. As awareness and understanding in Islamic finance increases, there is a growing demand for Sharia-compliant financial solutions among Muslims and non-Muslims alike. The size of the continent still provides untapped opportunities, because if you look at the penetration of these products in this market, you'll understand there's a lot of potential to develop. This indicates a significant untapped market potentials. By expanding the presence and offering, Takaful and Islamic finance institutions can tap into the underserved market and establish a strong foothold. Takaful and Islamic finance can play a vital role in promoting financial inclusion by offering accessible and inclusive financial solutions that comply with Sharia principles. Takaful and insurance finance and Islamic finance can play a crucial role in financing infrastructure projects that align with Islamic principles. This include funding for transportation networks, energy projects, real estate developments, and more Islamic finance structure such as Sukuk can provide an alternative financing option for governments and corporations undertaking infrastructural projects. Takaful and Islamic finance institutions can develop specialized products and services tailored to agricultural sector and microfinance needs. This can include Sharia-compliant agricultural financing, micro-Takaful for small businesses, and risk-sharing arrangement to support farmers in times of crops failure and natural disasters. Takaful and Islamic finance institutions can facilitate cross-border transaction and investment by offering Sharia-compliant trade financing, investment products, and risk management solution. This is necessarily required with Nigeria being a signatory of African Continental Free Trade Agreement, and most African countries now having signed. I see an opportunity for Islamic finance products and operators. Fintech, as mentioned by the regulators, is a technology that is most required, either called InsurTech, or somebody mentioned Takatech. Any fintech innovation that includes peer-to-peer financing, crowdfunding platform, digital wallets, and robo-advisory services can be a solution that can enhance financial inclusion and improve access to Islamic finance products and services, particularly for the tech-savvy younger population. The opportunities in Takaful and Islamic finance in Africa are vast. By leveraging these opportunities, Takaful and Islamic finance institutions can contribute to economic development, financial inclusion, and sustainable growth in Africa. With every opportunity is a challenge. We know things in life go in pairs. Day and night, life and death, black and white, so opportunity and challenges. I've identified a few challenges to complement the opportunities I've already mentioned. There is limited awareness of these principles and these products in Africa. Many people are unfamiliar with the concept of Takaful and the principles of Islamic finance. This lack of awareness hinders the adoption of Islamic financial products and services. While some companies have extended themselves and gone ahead in regulation of insurance, Takaful insurance, and Islamic finance, there are still inconsistent regulations. Some countries are way behind. Lack of standardization and inadequate legal frameworks can create barriers and uncertainties to industry players. The inconsistency is not only based on the legal system of the operators. There's a different school of beliefs in the mazhabs in Islam, and depending on which mazhab you follow, in some cases they have different interpretations of such rules. So there is need for standardization to overcome that problem. There's also need for continuous product innovation and diversification to cater for the diverse needs of individuals and businesses. Developing tailored products that align with Sharia principles can be a challenge for institutions. Lack of adequate technological infrastructure hampers the adoption of digital solutions, mobile banking and online platforms that could enhance access to Takaful and Islamic finance services. There is still a shortage of qualified individuals who possesses the necessary knowledge and understanding of Islamic finance. Ensuring compliance with with Sharia principles, managing risk efficiently, and maintaining robust governance structure can be challenging for institutions that may lack the necessary expertise and resources. Lack of standardized guidelines and practice can lead to inconsistency in products offering, pricing and contractual arrangement. Developing common standards and promoting harmonization can enhance the credibility and integrity of the industry. As His Highness mentioned, there exist international bodies like the IFSB and IOFI. I can see some of them are speaking today, that guides all regulators and operators worldwide to conform with certain acceptable principles of Sharia in the practice of Islamic finance. So we should take advantage and participate fully in the activities of those organizations. Incorporating ethical and social consideration into business practice and operations can be a challenge for some institutions. Balancing financial objectives with these principles requires a deep understanding and commitment for Islamic finance principles. And for this reason, I personally do not believe in windows operating in Islamic finance industry. There will definitely be some compromise along the way. A conventional provider cannot respect the social ethics and requirements of Sharia products. So I advise the regulators to continue to insist on separation or nothing else. Despite these challenges, it is important to note that Takaful and Islamic finance industry in Africa is continuously evolving. Efforts are being made by various stakeholders to overcome these challenges and create an enabling environment for the industry growth and development. Technology can play a transformative role in addressing the challenges faced by the Takaful and Islamic industry in Africa. And I have advised some key areas where technology can be leveraged, because that is what the theme of this conference said. Takaful and Islamic finance institution can develop mobile banking apps and digital platforms to offer accessible and user-friendly financial services. Using analytics and artificial intelligence, Takaful and Islamic finance institutions can gain valuable insights into customer behavior, develop tailored products, and enhance risk management capabilities. Using blockchain technology also, as mentioned by the regulator, this can automate claims settlements and ensure fairness in profit sharing arrangements. It can reduce fraud, streamline processes, and enhance transparency. Financial education and awareness will help in building trust and increase the adoption of Islamic finance products. Online courses and webinars and other mobile apps can boost awareness. Regulatory technology. It's important at this juncture to have a look at how the African Takaful and insurance finance regulator can leverage technology to enhance their regulatory capability and ensure effective oversight of the industry. Here are some ways they can use technology to regulate more efficiently. This section is not telling regulators that they should do this, that they don't do it. What I have put here is just for regulators that are not in the field already to learn that these opportunities and this technology exist. The presentation by the Nigerian regulator indicates that they are already way ahead of other African regulators. What I have here is what is generally needed for an African regulator to improve his regulation. He can use digital reporting and monitoring to enable real-time monitoring of analysis and analysis of financial activities, ensuring compliance with regulatory standards. They can use big data analytics to help identify patterns, trends, and potential risks, allowing the regulator to take preemptive action when necessary. They can use specific automated compliance processes, perform risk assessment, and facilitate regulatory reporting, streamlining the overall regulatory framework by the use of regulatory technology solution, which can be specifically designed or bought off the counter. Coming back to blockchain technology again, blockchain can help prevent fraud and ensure Islamic finance products and services adhere to Sharia principles. I'm sure the expert will explain more. I noticed some headings that indicated that these subjects will be discussed in details. Specific and specialized supervisory softwares, like I said, can facilitate data collection, analysis, and reporting, thereby optimizing the regulator's resources. This can be achieved by conducting an on-site inspection and off-site monitoring of efficiency. The regulator also mentioned fintech sandboxes. This will enable the regulator to assess potential risks and ensure compliance with regulation before granting approvals. Because by allowing sandboxes to operate, you can investigate, observe, and allow products to be tested in the market before they are formally approved. The regulator also spoke about cyber security measures. Regular security audit and adoption of best practice help protect against cyber threats. I've already mentioned a little bit about the need for digital training and education to improve awareness so that at least the young savvy tech population in Africa can accept Takaful for what it is, a good product that can save, that can provide ethical consideration and also give you ethical and social comfort to support your belief if you are a believer in those. Mobile apps for consumers foster financial literacy and enable consumer to make informed occasions. By leveraging technology efficiently, the African Insurance and Islamic Finance Regulator can promote a more robust and inclusive Islamic finance industry while ensuring adherence to regulatory standards and safeguarding the interests of consumers and investors. The organizers confirmed that the paper will be posted on the website for anybody to have a full read. So I've skipped a lot of chapters to ensure that I comply within the 10 minutes they have given me. And I've noticed I've just spent 6 minutes, so I just have 4 minutes to conclude. And thank you for your understanding and listening. The little examples I gave as some examples from Africa are specific to some countries and how far they have gone. I've mentioned Sudan, which I've mentioned earlier. Sudan, Takaful actually was the beginning of Takaful in the world. And Malaysia adopted it and refined it in 1984. And since then, Malaysia can be argued to be the leader in this industry. In Kenya, you have the Takaful Insurance of Africa, which was established in 2008, which has been forging ahead despite the lack of adequate regulatory guidelines to guide the industry. Egypt has become a very serious market for Takaful. It is a very big Muslim community. It has advanced technological apps, and it's also near to the Arab world and the Arab insurance industry. I noticed also the Africa Re Takaful MD is making a presentation here, and I'm sure he will tell you the strategy of Egypt also helped determine Africa Re to locate it up. The host is, as the front runners in this industry. And I can see they have excellent followers that are giving them very tough competition. And it is competition that will bring the best out of operators in all fields. Morocco has also been a notable success. It is closeness to the Francophone market, and it has done very well as a leader in this industry. This example highlights the successful implementation and growth of Takaful and Islamic finance in different African countries, especially Takaful in these examples. They demonstrate the increasing demand for Sharia-compliant financial services and positive impact of Islamic finance and promoting financial inclusion and addressing the need for Muslim population. In conclusion, I would like to assert that the growth of Takaful insurance and finance and Islamic finance in Africa present significant opportunities, and technology can serve as a catalyst for unlocking this potential by leveraging digital platform, data analytics, blockchain, financial education tools. Takaful and Islamic finance institutions can expand their reach, enhance efficiency, and promote financial inclusion within the African continent. I believe by examining the potentials of technology and applications in Takaful and Islamic finance, this conference will serve to stimulate dialogue among policyholders, industry players, and technology providers to foster collaboration and seize the opportunity for inclusive and sustainable growth in African insurance and financial sector. I thank the organizers for the opportunity given me to tease out a few areas for the topic that will hopefully increase dialogue between service providers, consumers, regulators, and technology providers towards achieving the desired objectives of this conference. I thank you very much. Thank you.
Alhaji Kari is the one of our few speakers who use slides. Perhaps I'll take a moment to introduce him, one of his other caps. He happens to be the Pro-Chancellor and Chairman of the Governing Council of the Federal University, Dusama in Katsina State. Newly minted, by the way, so he's been wearing this cap for a few months now. A big thank you to you, Alhaji Kari, for your presentation. I do crave your indulgence. In a few minutes, we will start off our very first panel for the conference. As I did announce a little earlier, this panel focuses on the role of technology in the growth of Takaful. While that is going on, so you're not distracted by what's going on the stage behind me, they're just trying to set up very quickly. Now, at Nur Takaful, we're very big on teamwork, as you saw in our values. We're very big on a family that works together. And typically at events like this, it would be at the end that members of staff are acknowledged, right, as being the backbone of a conference that works. I want to take this moment to acknowledge the effort of the staff of Nur Takaful. They happen to be in the room, and I've asked them to please wave or stand where they are so we acknowledge them. There they are, right there in the back. Now, if you walk through, by the way, as His Royal Highness makes his way through, again, a big thank you for your presence here. chance to stop at the exhibition area when you came in. During the tea break, you will get a chance. I encourage you to visit Nur Takaful's booth, right? You will see a range of services offered by the company. Perhaps I'll just use a few moments to list a few of them just before we introduce our first panel. Now, a range of products are offered by Nur Takaful, right? Including, but not limited to, Nur Education Plus Family Takaful Plan, right? And this is a plan that starts with as minimum of 5,000 naira, our slogan, if you like, your win-win insurance. It's very critical to how Nur Takaful functions. It's very critical. It governs every single part of our operations. The idea is no matter who you are, no matter where you are from, you can partake of Takaful. Having said that, I've been informed that we can start with our very first panel. Now, it's not every day that the managing director of one of the, very well-known commercial banks in Nigeria is referred to by a three-letter name, right? It is in essence a short form of his actual name. And for those of you who know many Abu Bakrs, you're used to calling them Abu. He is fondly known as Abu. But for the sake of being on a stage where we acknowledge his presence through and through, I will introduce him by his full name. And just before we go into that, I've been informed earlier we had a montage play. I know that you missed some parts of the audio in the very beginning, and we want to give you a chance to listen to it afresh. So we'll play that, and then we dive into our first panel.
Ever heard of the tale of the merchant and his camel? He left the camel by the acacia tree and went in search of rocks for his tent without securing its noose properly to the tree. Upon his return, the camel was on the loose, nowhere to be found. He wailed and shrilled, yelling aloud about how God failed his camel. A sage traveling along the desert saw him and asked why he failed to secure his camel and blamed the loss on God. One might wonder where the story leads. Talk about firmly securing our priceless assets for a better future. Now here's a more secure story. In April 2016, in the vibrant heart of Nigeria, a groundbreaking vision was born. Nur Takaful Insurance Limited became the first full-fledged composite Takaful insurance operator licensed by NICOM. 100% indigenous owned, we embarked on a mission to transform the landscape of ethical financial services in Africa in line with our vision to be the beacon of ethical financial services in Africa. At Nur Takaful, we understand that financial protection is a fundamental need for everyone. Guided by our commitment for innovation and exceptional services, we continuously leverage the latest advancements to redefine the insurance experience. Our core values are at the heart of everything we do. Equity and fairness, teamwork, honesty, innovation, compliance and competence, accountability, leadership and professionalism. An entity where ethical financial protection meets unwavering dedication. We believe in creating win-win situations for our valued customers because at Nur Takaful, Takaful Insurance is for everyone. Join us on this remarkable journey as we shape a brighter and more secure future together. Again, remember the tale of the merchant and his camel. Have you secured your camel? Ladies and gentlemen, welcome to the first African Takaful conference hosted by Nur Takaful.
Here's to a conference that helps you learn to secure your camel. Thank you for your patience. Without further ado, we dive straight into things. I'll take a moment to acknowledge the presence of our live audience. They're joining virtually. So just want to say a big thank you to everyone who's following the conversation from wherever they are. Now, the very first panel, once again, speaks to the role of technology in the growth of Takaful. Abubakar Suleiman, fondly called Abu, typically to disarm you and not allow you even remotely consider that this is a man whose vast knowledge of the finance sector can, well, at the very least, it does make you want to go to school and sit and learn. He happens to be the Chief Executive Officer of Sterling Bank PLC, and he's carved a niche for himself in a fiercely competitive financial services landscape. He's done this by providing innovative responses and solutions to complex problems. He started his career at MBC International Bank, which is now known as, or consolidated into First Bank PLC. He was there before joining Citibank Nigeria 2 years later, and joined the turnaround team of Trust Bank of Africa Limited, which, as I said earlier, we now know as Sterling Bank. At Sterling, he served in senior leadership roles that include interim CEO of Equatorial Trust Bank Limited and integration director, responsible for the integration of Equatorial Trust Bank into Sterling. He was chief financial officer and executive director before his appointment as CEO. For many of us who know his name may have thought that he started off right at the top of Sterling Bank. But with this bio, it tells you that he did climb up the ranks. It is my pleasure to introduce Abubakar Suleiman as the moderator of this very first panel. Please put your hands together as he makes his way to the stage.
Good morning. It is still morning. I reached out to my panelists last night and I told them that we have the best spot when people are still alert and we try not to waste it. I'm going to start by inviting the young men and women that hopefully will help us lay the foundation for this conference. The first person I'll be inviting to take a seat here is Mr. Ibrahim Babalola, who is the founder of ETAP. Ibrahim is a visionary leader and the CEO of ETAP, which is not his first company. I knew Ibrahim as the founder of a different company, so it's fair to say he's now a serial entrepreneur. But the work he's doing at ETAP is quite unique. He is one of the first to bring technology into the Takaful industry, not just in Nigeria, but across Africa. So I think we have a unique opportunity to hear from someone who is actually at the forefront. Ibrahim has been recognized for his achievement, and he has been featured in major medias across the world, including CNBC London, MSNBC, and the BBC. Please welcome Ibrahim Babalola as he takes a seat. Next panelist, as they say, needs no introduction. Her name is Dr. Ola Brown. Safe to say that everyone in this room must have heard of the Flying Doctor. Dr. Brown is a venture capitalist. He's the partner of Healthcare Capital Africa, also known as HealthCap. But beyond that, Dr. Brown is someone who has a voice in almost everything that is of national interest, not just in the field of capital, but in the field of the economy and just about any other field. Along with the directorship of that he holds, she's also the co-founder, and she runs an early stage venture capital firm called Green Tree Investment Company, and they provide growth capital to some of Africa's most exciting startups. Please welcome Dr. Brown. And my third panelist, my brother and friend, and he is the vice chairman of Takaful. Thanks to him, this event is happening today. Again, Aminu Tukur, at least in this room, needs no introduction. Welcome Aminu Tukur to join us, who has been at Takaful since 2018 and has been responsible for some of the most exciting things we've seen at Takaful. Aminu, please join us. And finally, to our exciting speaker, Dr. Tariq Saif, who is the Secretary General of the Insurance Federation of Egypt. Dr. Tariq is a seasoned insurance professional who has 3 decades of richly diversified experience in the insurance industry as a practitioner, a consultant, and a trainer. He's an expert in underwriting management, Takaful Micro, and sustainable insurance. He's the author of books on Takaful in English, which were translated to Arabic. Dr. Tariq has a PhD in maritime economics and has a postgraduate diploma in Islamic studies, diploma in Islamic finance, and is a fellow of the Chartered Insurance Institute UK. Welcome, Dr. Tariq, to podium. Dr. Tariq will please walk straight. He's got an exciting 15-minute presentation for us. Thank you very much.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, everyone. First of all, I would like to thank the organizing committee of the conference for this very crucial topic today, to invite me to this very prestigious panel and to give me the opportunity to present. Actually, my presentation aimed to trigger some ideas and to put the sense for the discussion in this panel. So can we share the slides, please? Actually, today we are going to talk about technology. Muslim science has a very glory and very good history and technology, very good heritage. And I think it's not very difficult to hope for a renaissance of this technological innovation by the Muslim scientists, the old days. About Takaful, actually, I will start with the status quo of the Takaful, the current situation of the Takaful insurance industry, focusing on both challenges or obstacles and opportunities as well, and to see how to turn obstacles or to challenges or to opportunities. Actually, this heat map, it's very illustrative. It illustrates the insurance density, premium per capita, and insurance penetration, the premium as a percentage of the GDP of different countries with Islamic population. So it's very clear that many countries in Africa, they are considerably below the average for both the insurance density and the insurance penetration. For example, in Egypt, we have a protection gap of 100%. What does it mean? So to reach the targeted or the benchmark of emerging EMEA markets, we have to double the insurance premium in Egyptian market. And this is the case in different markets in Africa. So this is for insurance, Takaful, and the non-Takaful, conventional, and the Takaful as well. For Takaful, the picture is not still bit gloomy because the market share, the global market share of the Takaful is actually less than 0.5% of the global insurance market. It is accurately 0.47%. So we have a problem of the very lower market share, very low penetration rate, and low insurance density. We can turn all of these obstacles to opportunities, because here the good news that the Takaful is growing industry actually. We expect the accumulated gross rate of 13% in the upcoming 5 years. Also, one of the main problems in the Takaful, that the Takaful and Islamic finance generally are still focusing on the top of the pyramids of population. We have a great opportunity to go down and to serve the bottom of the population pyramid. But to serve the bottom of population pyramid, actually, we need to have a new products and to use technology. Technology is the name of the game, and the developing products to meet the actual need of the poor people. In Africa, we have about 500 million people are living below the extreme poverty line. So we have to work hardly to serve this unserved and marginalized population. I think this is the name of the game today in insurance and in Takaful as well. Just to summarize, we have low penetration rate, low insurance density rate, considerably low market share, except in few countries in Malaysia and GCC. I mean the Takaful market share of the whole market. We have no or limited access to most of population so far, regulatory and governance challenges in some countries. So I will focus only on macro environment challenges. We don't need to discuss micro environment challenges for our purpose, but I would like to discuss the first point because it's a very important one. Selling Takaful, Takaful has been sold for a long time as a religious product. Even if we see the ads of the insurance of the Takaful companies, we'll see many Islamic features like domes, like rosary, like praying mat. Actually, Takaful has a lot of benefits and features, and it can be distributed, marketed, and promoted as a product based on its benefits and features. So actually, this is a piece of steak. Is it prohibited? Is it haram or halal according to Sharia? Simply, it depends on the slaughtering process. If the process is Sharia compliant, this piece of steak will be halal. If the process is not Sharia compliant, it would be haram. So this halal food can be eaten by non-Muslim, and the Takaful too can be consumed by non-Muslim. So we have to promote Takaful to all population, Muslims and non-Muslims, based on its features, benefits, and ethical consideration. Actually, I talk a lot about obstacles, but we can turn obstacles to opportunities. This is a very nice story I would like to share with you, the story of the two shoe salesmen in Africa. Once upon a time, probably in the 19th century, a shoe company sent the two salesmen to Africa to determine the market potential for their products. The first salesman reported, "No one here wears any shoes. There is no market for us here." The second one said, "No one here wears any shoes. There is a huge market for us, sending inventory quickly." So simply, we can consider the low penetration rate as an opportunity, as we consider it as a challenge or obstacle. Low penetration rates mean that there is a huge market opportunity. There is a big potential for the Takaful industry today in Africa. Also, we have some good news, some opportunities. 70% of world mobile money transaction today is generated in Africa. There is 50% of all digital financial services user lives in Africa. 53 of adults in Africa had financial service or at least mobile account. So we can build on these positive features to develop the Takaful future. So the Takaful future simply depends on the two dimensions: developing new products to serve unserved population and build on technology or InsurTech. Today, our focus is on InsurTech. Actually, InsurTech is not about marketing insurance digitally or marketing insurance online. InsurTech is a concept should cover all the product life cycle, starting from product development, distribution, underwriting, and claims administration as well. So we have to work on the whole supply, whole value chain of insurance industry to use the InsurTech and to benefit from InsurTech. So here I used one of the artificial intelligence platform, the Chat GPT, just to answer a question, our question today: how InsurTech can grow Takaful? And this answer is generated by artificial intelligence platform. So this is indicating how technology can be used and how technology is useful for insurance and the Takaful today. The answer, we can use it for digital distribution, enhancing the customer experience, data analysis, automation and efficiency, financial inclusion, risk management, partnership, and collaboration. So all areas of the value chain of insurance and the Takaful can be covered by InsurTech, and the InsurTech can support the whole value chain of the Takaful industry. For product now, there is many products can be developed based on InsurTech and technology, like peer-to-peer model, peer-to-peer business, pay-as-you-go insurance. This is very important and very common in Europe today. If I use my car heavily every day, I have to pay premium higher than the person who uses his car only in the weekend. So pay-as-you-go insurance. Also on-demand insurance. This is very important for sharing economy concept today. Indexed or parametric insurance, and parametric insurance has a very important and a crucial application in agriculture insurance today. Also, we can use InsurTech again in distribution using artificial intelligence or robotic process automation. The same for administration and the claim, or underwriting, big data, wearables, Internet of Things. We have some concerns about the regulatory issues of using big data and the ethical issues, but all can be overcome with good operation and good rules and the guidelines. This is InsurTech in Africa. Many countries already started InsurTech. Many companies and startup companies are working, but again, the Takaful still lagging behind the banking, Islamic banking, and even conventional insurance. So that we have to ask why, and we have to work hardly to overcome this problem as much as we could. For big data and InsurTech, we have some ethical and regulatory concerns can be overcome. We have the problem of data ownership and the privacy, non-technical price discrimination, also the segmentation risk, that if you understand the client with a very high details, we may exclude some people from the cover. So this is against the concept of inclusion, because inclusion is about serving everyone, especially the financially and the socially marginalized people. Compliance, anti-money laundering, and enterprise risk management aspects and the challenges. And I think many regulators over the world, they solve this problem by issuing regulation and setting a standard. Also the commission allocation between different parts and the insurance value chain. So actually here, this is very important question. Technology will support inclusion or exclusion, Because if you see this very poor people, they don't have even a mobile to be used for InsurTech. So I think this is one of the good and important area for the social responsibility of insurance and Takaful companies to support these people by creating awareness, educating people about insurance and technology, and may also to deliver the needed devices to be used for InsurTech. So this is what I like to say today. I have done. Thank you very much for your attendance and for listening to me.
Thank you very much, Dr. Tariq. I'm going to start by quickly summarizing some of the critical things that Dr. Tariq has pointed out. He highlighted the low penetration of both insurance and Takaful across Africa. And as you looked at that slide, you could see that Nigeria was at the bottom of it. Across all the major parameters, we were way below the sub-Saharan African average. However, he also highlighted that it represents an opportunity, especially given the demography, as well as the preference of many Africans who would opt for Takaful if it is sold to them properly. Also on the bright side is the high level of digital adoption, especially digital payments and digital financial services. Again, we looked at the possibility of the use of advanced technology like ChatGPT to help architect a better framework for building Takaful, especially since we are in the early days. He introduced a few concepts like the concept of pay-as-you-go insurance, which I like to call pay-as-you-drive, and on-demand insurance. These are all ideas that are still fairly new in the insurance space, but because Takaful is at the point of takeoff, it can very easily be integrated. He looked at the role of technology across product ideation and the product itself, across the distribution or the channels, across underwriting, and across claim processing. And finally, we summed up by looking at the risk of technology and data, specifically in terms of data privacy, as well as fairness or equity, because the adoption of technology can also create inequality. Thank you very much for the presentation. I believe that he's set a solid foundation for our conversation. I am going to have a sort of take us around a little bit around what the reality is for us today. As we sit down here today, not many of us realize that the size of the global insurance sector or industry is more than 2 times the size of the entire African economy. Last year, it closed at about $6.4 trillion. The African economy today is about 2.7 trillion. That's how huge it is. But when you look at that and you compare it to the size of the global Takaful industry, it is at $30 billion. It's such a tiny fraction that I couldn't work out what percentage it will amount to. So for a start, at a global level, Takaful is still a very tiny percentage of what is possible, of what is necessary, of what is required for the economy to function properly. And then I decided to bring it to Nigeria, hence we are here in Nigeria, and I realized that while the banking industry itself, it now has assets of over 78 trillion, the insurance industry celebrated 2.5 trillion in assets. Again, for those who have looked at the global economy, you would see that the size of insurance relative to banking is not in the percentage or the ratio that I have just stated. And then, of course, up until about 5 years ago, the size of Takaful as the percentage of the Nigerian insurance industry was barely existing. It's taken the effort of the last 3 to 4 years for that sector to start coming to play. Why have I taken us through this journey? If we want to talk about the use of technology, historically, technology has been used to optimize sectors that exist, that are vibrant, that are buoyant, but are inefficient. So when you go into sectors like Airbnb, or you look at ride-hailing app like Uber, or you look at the fintech industry, what they all have in common is that these are very sizable sectors that have existed for a long time. And what technology did was to optimize. Effectively, it brought in the innovation that made it cheaper to serve, made it easier to distribute, made the customer experience much more comfortable, and in many cases, reduced the price to the end user. We are about to have a conversation on technology in a sector that has not yet been established, that does not yet have the penetration, that does not have the customer count, that does not have the product sophistication. And therefore, our conversation here may have to dig deeper and see if it is possible that technology can be used as a market creation tool rather than a market optimization or a market exploitation tool. All of the instances of the use of technology that we have celebrated have tended to take existing markets and exploit them better than the traditional users. And so I'm going to start first and foremost with our host, who is here today to answer my question. I'm going to give him a 5-minute period to quickly take us through what his experience has been with the Takaful industry, especially with the use of technology as one of the foremost Takaful and also one of the foremost to have deployed technology. But as you round up your 5 minutes in the spotlight, I would like you to answer a simple question, which is, given the low penetration of Takaful and the lack of product sophistication, as well as the poor awareness with the consumers, are we asking too much of technology too early? I would like you to answer that as you round up. No, before we leave that, I'll ask you a question. I want you to look at all of us in the eye and tell us. Is regulation an obstacle to the adoption of technology in Takaful today? I insist. Because if you don't speak up, the deputy commissioner will not know what your obstacles are. Is the regulation an obstacle today? Thank you very much. I'm glad that we can speak directly to our regulator. That is the best kind of relationship you can have. I'm going to come to you, Ibrahim. You have started by building a company that is first and foremost a technology company, even though you desire to deliver services in insurance and Takaful. And you have looked at the use of technology across the entire value chain, starting from product ideation to the product itself, to processing and operations. You've used technology in distributing and marketing. And my question to you is that, at which point in the adoption of technology did you get to an aha moment where you say, this is the obstacle to growth, this is the problem that if I can solve, then I can scale? Have you reached that point, and what is it? And please, first and foremost, take a couple of minutes to tell us about your experience, especially when you decided to onboard Takaful products onto your platform.
My boss and leader, Abu, thank you very much. My name is Ibrahim. I am the CEO at ETAP. We are an insurtech, and ETAP is an acronym for easiest taking a picture, because we think that the insurance experience in Africa should be as easy as taking a picture. Now, with technology, we don't think that the inclusion of technology in insurance should be just digitizing existing long processes. We think it should be about redesigning the processes and redesigning new products that serve the customers of today. I believe that products that would move the needle with millennials and Gen Zs are fundamentally different from products that served my father's generation. And the things that, the things that are concerned about around flexibility, around speed, around transparency, particularly around pricing, are very important. So we set to use technology to do a lot of that. And we've gotten, I'd say, some success in trying to do that. And you spoke around market creation. Today, around 80% of our customers are first-time policy holders, which essentially means that we're creating a new market that didn't exist before us. Now, why would these people, trust us versus, the traditional way of doing insurance? We started with trying to solve for car insurance, so that we can take them one after the other. And with car insurance, we essentially built the technology that allows customers to be able to insure their cars in 90 seconds, including a virtual pre-loss inspection, make claims and have it processed and settled within 3 minutes. Today, our technology has the fastest claims processing in Nigeria because we are able to do instant claims payments. Now, the AI does a lot of the processing, compares the accidented condition to the pre-loss inspection, and able to immediately see where the new damages are. And because we've built a really large database of car parts pricing, it's able to also say, okay, it's going to cost 20,000 naira to fix the side mirror of a Toyota Camry 2016, of course, marking up for dollar adjustment and inflation. But more importantly, we've also made it a shared value system such that we're able to profile the risk of customers at the beginning and give them a pricing that is tied to their risk profile. But it doesn't end there, because on an ongoing basis, through the app, they're able to get telematic information on their driving behavior. So they see how they're accelerating, how they're braking, how they're turning, when they're texting and driving. And every time that they don't drive like lunatics on the road, They get safe driving points that they can accumulate and spend at ShopRite, spend on Jumia, etc. So it becomes a driving pattern-based product that is also gamified because you can also compete with other users on the app on who's safer on the road. I met the governor of Lagos State in Marrakesh, and I said to him, Mr. Governor, I think that we are the largest contributors to safe roads in Lagos State today with what we're doing with ETAP. And we've been very lucky to also have, partners that are very big and supporting what we're doing, including, MTN, Suzuki, and the Toyota Corporation in Japan, who are, one of our investors. On the aha moments, as we continue to build, we realized that we couldn't necessarily solve on the fundamental problems around unlocking insurance and the real value of insurance in Africa without solving distribution. Now, in Nigeria today, around 60% of the premiums collected are brought in by agents. Now, the agents still have to go in a very manual to semi-manual process where they'll go to know, get registered, then go to customers, get the information, go back to know to do the booking, wait for 4 weeks before they can get a commission because Noor also has to validate that the check that Ibrahim gave the agent is not going to bounce and the payment processing etc. would go. We started to work with the partners and realized that there is an opportunity in fixing that, right? And the opportunity is fixing it for the insurance companies so that it can be fixed for their agents, but more importantly, open it up to the gig economy so that we can expand the distribution pool beyond just the traditional agents, right? So we built Balloon. And what Balloon does is that it enables insurance companies to be able to accelerate their distribution and revenue by giving them an all-in-one app that they can give their agents to use for all the booking. Now, with Balloon, all the agents or anybody that wants to sell, once they've been, licensed and accredited by the insurance company, will need to do is just download the app on their phone, and they can start to make instant income. We've reduced the time to pay and process commissions from 4 weeks to instantly, leveraging virtual accounts that are tied to individual transactions, while enabling financial inclusion because now when you create an account on the app, it automatically opens a bank account for you while your commissions are paid into. We've digitized the entire process for distribution because everything that you need to book is done on your mobile phone, right? Sales performance tracking, business analytics, customer relationship management, and everything is done, right? And now we're working with partners for them to take it to market in their own branding and their own customization. With Takaful, we saw an opportunity to be able to introduce ethical insurance, right? But done in a way that is a bit different from do it and be Sharia compliant. So we looked at what was important to the younger demographic, which I think that's who we serve. And the fact that they can get something back was already in our model because we say, when you don't get into an accident, your premiums will go down naturally, right? But now we've then said, beyond what ETAP is doing from our marketing budget, the Takaful concept essentially allows for surplus to be redistributed. But here's something that makes it more interesting for you. You can choose to collect your surplus and use it as part of your next premium, or you can use it to support a cost that is important to you. And that was very interesting for people. Now they've been able to draw a straight line from their car insurance to a breast cancer awareness cost that they care about, And with that, we've been able to see some adoption since we've partnered with Noor to introduce the ETAP Takaful. And I think that we're probably the first insurtech on the continent to introduce Takaful.
Thank you very much. Before I go to Dr. Brown, one question for you. Have you seen the growth you were looking for when you went on the journey of digitizing and simplifying insurance?
I think that we're seeing the growth. I don't think that we've seen the growth. I think that we're seeing the growth particularly because, as I've said, like a lot of the adoption has been in a new customer segment. Where we need to hack is the existing customer segment as well. But I think that, you know, the existing customers beyond the diggy diggy techie techie also prioritize brands that they've been seeing for the last 5 decades, you know.
Thank you very much. Well, that takes me to the person with the deepest pocket on stage. Dr. LeBron, you're known for having a conversations that start at the macro level, long before you get into the sector and therefore into the specific company. My question to you is, as you take us through your own expectation of this industry, what do you need to see in the Takaful industry and in Nigeria and in Africa? What is it that will make you interested or pay more attention to this space? Because capital eventually is the ultimate proof that the sector is going to grow, because it needs capital to grow, and you are a capital allocator. What are the things that you need to see? And more importantly, what have you seen in other industries where you have allocated capital that if you were to replicate the same in the Takaful industry will get you excited? Thank you.
Absolutely. Thank you for inviting me. I was just telling the organizers earlier that I wanted to try and do this virtually because my flight was cancelled. And at the last minute, it was either that I try and do it virtually and not have the level of engagement, or I get on a ferry. And I'm already scared of water, but I think last month there was a submarine accident and some billionaires died on the sea. So I was very nervous about getting onto the ferry yesterday, but I'm glad I did, because it's a very interesting conversation and really important for Nigeria. Takaful Insurance, we have one of the lowest health insurance and general insurance penetrations in Africa. And that's partly due to the fact that people have personal beliefs about insurance and want to make sure that whatever insurance product they purchase conforms to their personal beliefs. So I thought that this was a very important conversation to have, because insurance is not just a insulated product. It's highly connected to economic growth. It's highly connected to the way that people can save. One of the biggest causes of bankruptcy is sudden, large health expenses that are unexpected and people don't make provision for. So I think that insurance is a major key to lifting people out of poverty and growing the economy, as well as having, protection of people's savings. So I'll just explain about myself in the context of this discussion. My name is Ola, and the doctor is not actually a doctor of finance, not yet. My original profession was actually as a medical doctor. My career in finance started around 2015 when I raised my first venture fund along with colleagues, and our thesis then was to invest equity, so buy shares in early stage companies that were essential to life in Nigeria. We exited or had a large exit of one of the companies that we invested in 2020. And by that time, I'd completely left the medical profession. I now hold a master's in finance and economics, currently doing my PhD in finance. So I'm very, very far away from medicine. But in 2020, I decided to start my own firm that, again, buys shares in early stage companies, but very focused on my 2 areas of expertise: health tech, which is healthcare technology, and fintech, which is financial services technology. And of course, InsurTech is a perfect combination of both, particularly in the health insurance industry, but also life insurance has elements of health. And we invest in InsurTech as part of our fintech thesis. Currently, we have almost 20 companies in our portfolio. They create the companies together create over 1,000 jobs and have almost 1 million customers. So the question was, what would we be looking for when we're investing in a company? So I guess the way that bank finance and venture capital finance differs is that, number one, bank finance traditionally is loans. So you give out a loan in a bank and you have a collateral for it. and at a certain period of time at an agreed interest rate, you give back the money. In a venture capital firm, there's no collateral. We're buying shares in an early stage company. And the only way that we can get our money back is if the company either sells to another company, lists on a Nigerian or on a stock exchange, on a public stock exchange, or raises another round of money, which means that we can take a secondary exit. So it's a lot more risky than the traditional loan finance, which is often fully collateralized. And I have a lot of experience because before my career in finance, I also started an emergency services company, and we had to take a few loans from the bank. And whenever I was taking a loan from the bank, sometimes the collateral was even cash. So I'll use cash to get my loan. So let's say that I have, what, $500,000 cash, and I need $50,000 maybe in Naira. They'll take the whole $500,000, and then like it's that collateral that I'll now take the small Naira that I need. So they were effectively not taking so much risk, but in venture capital, we take a lot of risk. So we're looking for a much higher return. So what I would be looking for is a market that can scale exponentially, meaning that if I put $50,000 inside, the return that I would be looking for is in the range of probably 10 times that amount, if not more. 10 times, getting a 10 times exit from any firm. Actually, if I put $50,000 in and $500,000 out, it wouldn't really return my funds. In order to return my funds, I would need to put $50,000 in and probably get $1 million or $2 million out, which means that I'm expecting super exponential growth or super normal growth in quite a short period. So that's what will drive capital and venture capital into the industry, being able to see a path to exponential growth and using that capital to be able to drive exponential growth and adoption. What do I feel are the things that make Takaful Insurance interesting to venture capital? Number one, there are about 1.2 billion people in Africa. Probably close to 50% are Muslim. So between some estimates say 30%, some estimates say 50%. But there's a huge population. So that alone, in terms of population, make it an interesting value proposition. Number two is one of people's biggest problems with insurance is how can they be paying every year for 10 years and not see any of that money? So even for people that aren't Muslim, the idea of getting something back and not just paying into what seems like a black hole is very, very attractive. And number three is the ethics behind it. And I think that this is really important for Gen Z, especially. When you look at the movements across the world and what young people seem to be thinking about now, they really, really care about how things are made. So there's a brand, I won't mention the name, but they make cheap clothing. And the share price and the valuation has fallen quite drastically. It's one of the biggest firms in the world. And the reason why the Gen Z stopped buying the clothes is because there was a video showing the way that the clothes were made. People having to work 24 hours a day without a break, people having to sleep in the factory. And it wasn't like the Gen Z people didn't like the clothes, but they didn't like the ethics behind the clothes. So if we can put a lot of education behind the fact that this is not just a niche for Muslims, but anybody that cares about the ethics behind the product that they're buying, then that quadruples the opportunity for scalability and also for global scale across the world. So I see that products developed in Nigeria can scale into America and scale into Europe because of this focus on, number one, the ability, the market size that is nascent. Number two, the ability to get some money back. And number three, the ability or the propensity of the younger generation to care so deeply about the ethics behind the products that they patronize. Thank you.
Thank you very much. Before I ask my next question, I want to be reminded when we are 5 minutes to the end of our time. It's our desire to finish right on time. They care deeply about how things are made, right? I think this is something that everyone in this room can relate to. You would recall that none of the solutions that we are seeking to provide, none of it is non-existent. In some way, they all exist. The problem is the way they are provided is something that we care about, right? If you already have a 6.4 trillion naira global insurance company, it exists. But I'm going to go back to Dr. Tariq, and in Nigeria, and I suspect you would have observed this across Africa, we are a low trust environment. People don't trust a lot. And that is why in many instances where we've decided to move away from brick and mortar, people prefer to see a human being before they are onboarded, at least for the first time. If you have a continent where the per capita income is very low, and therefore the financial services that you can offer is a function of that, the savings to GDP is very low, and the trust quotient is low. How do you use technology? How does technology play a role when the size of the cake is small and the people are suspicious of the cake that you have baked? How does technology become the solution in a circumstance? Or is there something else we should do first before technology can help us?
Yeah, it's a very good question. Actually, the lack of trust is very common in over the world in insurance industry. Even the Chartered Insurance Institute conducted a study with a CAS business school, and they found there is lack of understanding and lack of trust for insurance industry over the world. Definitely the problem is more chronic in developing countries. Why? Actually, there is lack of awareness, and the ugly truth, there is bad practices and fraudulent mis-selling, sometimes fraudulent selling by the salespeople in insurance company. So to overcome these two problems, technology can help in creating awareness and in eliminating fraudulent and mis-selling, because it is reducing the face-to-face contact or human contact with the client, especially client with no background in insurance. But I do agree that this is not enough. Simultaneously, we have to build the trust by showing that insurance company is a reliable partner, and the payable claims are to be paid without a lot of nagging with the client, a lot of negotiation, even if the client has no knowledge about insurance. Thank you.
Okay, thank you very much. I want to take it a little bit from what Dr. Brown said, that we've got this huge population, and we've already established that a significant number of them are young people who are tech savvy. We've got this low insurance penetration. Yet, Aminu, it seemed to me that the tech ecosystem is not interested enough in Takaful. They don't seem to bite or to buy what you're selling. What seems to be the problem? Why is it, first and foremost, that of this 1.2 billion potential customer base, we can't find 10 million in Nigeria of the 200 people that are here? And of all the startups that is emerging across all the various tech ecosystem, there don't seem to be enough of them that think that Takaful tech is something they should be investing in. What seems to be the problem?
My background has, excuse me, my background is investment banking. So when I came into insurance, I didn't understand insurance. But what I personally felt was we are selling insurance in a wrong manner. So what we have tried to do at New Takaful is sell Takaful as a proper solution and make it more appealing. Insurance has not been appealing, Takaful has not been appealing. But what we will try and do is to make it more appealing, especially to the younger generation. Why do we focus in on the younger generation? Especially in Nigeria, they are the majority of the population. So we have to look at these set of people. We have to look at them. They have their phones all the time. And what we are going to do in the next few months at New Takaful will most likely change the landscape, will most likely change the approach of how people would view Takaful as a solution. We have to make people realize that Takaful and insurance is a required tool to complete the whole financial planning of every individual. Thank you.
Ryan, do you think that Aminu can survive without becoming a technology company? Do you think he has any chance at all in this niche sector where a lot of people don't even know about it? Can he survive without becoming a technology company?
I think he can certainly survive without becoming a technology company by becoming an enabler, right? So like an ecosystem enabler that enables insurtechs to build on top of their actuarials, on top of their technology, and allows the insurtechs to be able to scale and scale faster. That might be a faster route to market, but it has to be a lot of internal innovation that happens as well, within the Takaful segment. I think that it may also be a lack of understanding when it comes to like the technology startups adopting this opportunity, as until you start to get closer to the Takaful product, from far it seems like an Islamic product, right? And then when you see it as an Islamic product, you start to ask the question of what is the point of building solely for that segment, right? Particularly in a country like Nigeria with distributed faith, right? As we have more understanding of the product and its benefits, you start to see that Takaful actually is better than conventional insurance when it comes to what you get back as a customer, right? There's a lot more looking after of the customer in the Takaful segment than in the conventional segment, right? So I think that a lot of the slower adoption when it comes to technology companies building on top of the Takaful segment is around a lack of understanding of the product and the opportunity.
So, Dr. Brown, he who owns the customer owns the profit. Who would you buy? Are you buying North Takaful? Are you buying ETAP? Where does the value lie?
That's
when she's done, I can tell her why ETAP versus.
That's an interesting question. I just wanted to double tap on the point around technology and technology adoption, because technology has actually made us do a lot of things that previously we would have never done. To tell me 10 years ago that I'll go to the house of a stranger and feel comfortable just on the app, I've not met the person and I'm going to sleep there overnight, it was impossible for me to think about. But Airbnb came and told me that it's okay. And eventually the idea scaled so that millions of people around the world are turning up in a country, taking a taxi to the house of a complete stranger that they've not met before, and sleeping in the house and feeling comfortable. Even up to 5 years ago, I still had my checkbook and I wanted to write a check to transfer money. And this was just 5 years ago. A few years ago, I had to throw away the checkbook because it became useless. Tech changed my behavior. I was one of the last people to let go of my checkbook because that's the way that banking has always been done. I want to see my account manager. I want to know the ED. I want to know the GM. I want them to come to my house. But I realized that was no longer necessary to get my banking done.
So who will you invest in?
Even Treasury. So I think tech changes behavior. Now, who would I invest in? Venture capital is actually the finance of innovation. And where we invest is a company, well, we look at companies that when they scale, the marginal cost of scale eventually becomes zero. So it would be, ideally, we like software companies. We like high margin businesses. So in venture capital, you see gross margins, companies of gross margin 70%, 80%. These are the kind of companies that we like, where the product that they're actually selling is the software. So in that sense, I would look at the fundamentals of an aggregator. I'd look at the fundamentals of the base product that is being sold, and look at what is venture fundable, in that the eventual margins that can scale to the point that the eventual marginal cost of serving an additional customer becomes zero?
Well, I asked that question because I also want to leave something with the regulator. As you can see, the people with the deepest pocket want to see technology in the product they put money behind. And therefore, if you want to help our industry, it's important that you enable the adoption of technology on a grand scale. We are out of time. I will, however, be able to take 2 questions from the audience. And please keep the questions short. If it is an advice, you can pass that on to the organizer. I only take questions. Any question from the audience? Thank you. There is someone there, straight down. Can you get a mic?
Yeah, there's a mic. Thank you.
Is there a mic there, or should someone get one of our mic?
Okay.
Okay, thank you. Oh, absolutely.
Thank you. My name is Halima Suleiman, and my question goes like this. Every time I hear Takaful, I hear I hear venture capital, financial literacy. I hardly hear about agriculture. So I want to confirm, why do we sort of like seclude agriculture when we know that this has more in-depth to growth and development? And in Nigeria, I have noticed that for us to drive agriculture, we need to have Takaful and all of that, because we have so much unbanked people with access to mobile device. And I tell people, if somebody can use a phone, that person can be banked.
Okay.
Thank you.
Okay, thank you. I will take that question. Let's take the second one and then we can distribute it around. Thank you.
Thank you. My name is Hassan Bashir, and I'm following the question around, can technology build the confidence in the Takaful space, which was a very good question. We've seen tech systems like, I think you have taken some examples like the Airbnb, the Uber, the mobile money that are very flourishing in the African continent. Build confidence among the community to the extent that, correctly you said, these industries are not new. They have been revolutionized, rebuilt. We used to use taxis. We used to negotiate. Now we have reached a confidence where you can put your daughter in an Uber and send her to school. That confidence, I believe, came from the system, not from the driver, not from the car. We have seen mobile money build a similar confidence. We have seen...
Sorry, if you can go to the question.
Yes, so my question is, can that kind of confidence be built using a system and combined with a Takaful product, which is a confidence builder itself?
Correct.
Is that a game changer?
Okay, thank you very much. I'm going to attempt the first question, and my response is that for insurance, and in fact for any financial product that's going to be technology-based to get into a sector, the sector itself has to first be formalized. It is almost impossible for a sector that is primarily informal to then benefit from what we're trying to deliver. So I think the real task is to formalize the agricultural sector, and what you have seen in the instances of what the investment has gone into agri through using aggregators is that level of formalization has now meant that products are actually being insured. So I think the objective is to formalize the sector, then Takaful itself will follow with other products. Ibrahim, you're the one person that has been at the forefront of direct engagement between the consumer and technology. Would you say that technology is bridging the trust gap?
Absolutely. Absolutely. We've been able to deploy technology to increase the trust and transparency between, the product and the consumers, to the extent where leveraging technology, when customers even get into accidents, they get a notification on their phone saying crash detected, you need emergency support, and they're able to automatically get in touch with 112 and get emergency services. When they make claims, they are confident that the claims would be processed and settled. One of the reasons why, traditional insurance companies have to go through a longer claims process is because there's a prevalence of fraud, right? But we've used technology to significantly reduce the possibility of that happening. So there's been a lot of confidence building because of the way that we're leveraging technology and artificial intelligence to make the process transparent and efficient and fast.
Thank you very much. As we round up, I would say that the takeaway here is that the trust gap that exists, technology can be a solution for it. The return gap that Ola Brown is looking for, technology can also be a solution to deliver the multiple investment return that he's looking for. We're also aware that the desire to take a bigger share of the market, not Takaful, Aminu has promised us that they're bringing in products that will scale beyond our imagination. And finally, let me thank Dr. Tariq once again for letting us know that the challenges we face is an Africa-wide challenge, and that once we find the solution, the product can also be delivered across the continent. Thank you very much.
Our panelists take a moment to grab a quick photograph, I want to say thank you to each and every one of them. Earlier, when SLS was speaking, he did say something about at least not saying anything controversial on the stage. It seems Mr. Bakr Suleiman decided to pick up that mantle and poke a few bears here and there. Thankfully, not too much blood was shed on this stage. Once again, thank you to each of you. Now, it is time for some sustenance. We're going to take a quick break, 10 minutes tea break. There have been a few snacks and fruits and drinks provided for you. Once you walk through the pavilion, the exhibition area, just through the door, you will find snacks. Please, we reconvene here for the next panel in 10 minutes. Thank you for being a lovely audience.
Takaful distribution ceremony. Welcome.
Before a broker will become a partner, serious partner with an insurance company, it means they are fulfilling their promises in terms of claims, in terms of what they promise they are going to do, which surplus is one of it. I must commend the staff of Takaful for their efficient, dynamic, and prompt to any demand. And you are just starting. The surplus is times 2. The rest assured 2023. We are anxiously waiting for times 10.
It is with great pleasure that I, on behalf of the board, management, and staff of Takaful Insurance Limited, extend a vote of thanks on this memorable occasion. It is another day for us at Takaful to keep our promise to our participants. I say for all that have graced this occasion today, may the Almighty Allah bless each and every one of you and grant you all journey mercy back to your various destinations. Thank you so much.
Did you know that it is possible for you to get something back from your insurance company when you don't make a claim during the insurance policy period? Yes, in the Takaful insurance model, it is possible. Takaful is derived from an Arabic word that translates to shared responsibility or mutual undertaking. In Takaful insurance, the participants contribute a sum of money as a donation known as tabarru into a common fund, which will be used to mutually assist the members against a specified type of loss or damage. This is the exact same model we practice here in Takaful Insurance Limited. As our slogan reads, your win-win insurance. You can either benefit from a claim or from surplus when you don't make a claim. Ever since the commencement of our company, we have consistently distributed surplus every year for participants who did not make a claim. So, whenever you have an insurance need, your best option is Takaful Insurance Limited. You can reach us via our customer care line 080-9872-1000 or send an email to help@notakaful.ng or via our social media platforms at notakaful.ng. We can't wait to hear from you. Thank you. Did you know that it is possible for you to get something back from your insurance company when you don't make a claim during the insurance policy period? Yes, in the Takaful insurance model, it is possible. Takaful is derived from an Arabic word that translates to shared responsibility or mutual undertaking. In Takaful insurance, the participants contribute a sum of money as a donation known as tabarru into a common fund, which will be used to mutually assist the members against a specified type of loss or damage. This is the exact same model we practice here in Takaful Insurance Limited. As our slogan reads, your win-win insurance. You can either benefit from a claim or from surplus when you don't make a claim. Ever since the commencement of our company, we have consistently distributed surplus every year for participants who did not make a claim. So, whenever you have an insurance need, your best option is Takaful Insurance Limited. You can reach us via our customer care line 080-9872-1000 or send an email to help@notakaful.ng or via our social media platforms at notakaful.ng. We can't wait to hear from you. Thank you. Did you know that it is possible for you to get something back from your insurance company when you don't make a claim during the insurance policy period? Yes, in the Takaful insurance model, it is possible.
Oh, hello? Hello, sir. My name is Harris, and I'm calling you from Takaful Insurance Limited. We are calling you today in respect to your insurance policy with us. You have had a claims-free insurance period in the previous year, and as a result of that, you are entitled to a surplus payback from Takaful Insurance Limited. Adekom.
Did you know that it is possible for your insurance company to pay you something back at the end of the policy year? With Takaful, it is possible. When you insure with Takaful and you happen to not make a claim by the end of the policy year, you can be entitled to some certain percentage back from your premium contributed, which is called surplus. Takaful, since its initiation, has remained the only Takaful operator in Nigeria to ever distribute surplus. We have been able to pay surplus for 2 consecutive years, and right now, we are on the verge of paying the 3rd consecutive surplus. This is scheduled to take place on Wednesday, 18th of August 2021. We look forward to you joining us virtually.
Oh, hello? Hello, sir. My name is Harris, and I'm calling you from Takaful Insurance Limited. We are calling you today in respect to your insurance policy with us. You have had a claims-free insurance period in the previous year, and as a result of that, you are entitled to a surplus payback from Takaful Insurance Limited. Adekom.
Did you know that it is possible for your insurance company to pay you something back at the end of the policy year? With Takaful, it is possible. When you insure with Takaful and you happen to not make a claim by the end of the policy year, you can be entitled to some certain percentage back from your premium contributed, which is called surplus. Takaful, since its initiation, has remained the only Takaful operator in Nigeria to ever distribute surplus. We have been able to pay surplus for 2 consecutive years, and right now, we are on the verge of paying the 3rd consecutive surplus. This is scheduled to take place on Wednesday, 18th of August 2021. We look forward to you joining us virtually.
Oh, hello? Hello, sir. My name is Harris, and I'm calling you from Takaful Insurance Limited. We are calling you today in respect to your insurance policy with us. You have had a claims-free insurance period in the previous year, and as a result of that, you are entitled to a surplus payback from Takaful Insurance Limited. Adekom.
Did you know that it is possible for your insurance company to pay you something back at the end of the policy year? With Takaful, it is possible. When you insure with Takaful and you happen to not make a claim by the end of the policy year, you can be entitled to some certain percentage back from your premium contributed, which is called surplus. Takaful, since its initiation, has remained the only Takaful operator in Nigeria to ever distribute surplus. We have been able to pay surplus for 2 consecutive years, and right now, we are on the verge of paying the 3rd consecutive surplus. This is scheduled to take place on Wednesday, 18th of August 2021. We look forward to you joining us virtually.
Oh, hello? Hello, sir. My name is Harris, and I'm calling you from Takaful Insurance Limited. We are calling you today in respect to your insurance policy with us. You have had a claims-free insurance period in the previous year, and as a result of that, you are entitled to a surplus payback from Takaful Insurance Limited. Adekom.
Did you know that it is possible for your insurance company to pay you something back at the end of the policy year? With Takaful, it is possible. When you insure with Takaful and you happen to not make a claim by the end of the policy year, you can be entitled to some certain percentage back from your premium contributed, which is called surplus. No Takaful says its initiation has remained the only Takaful.
Driving around town peacefully with your partner could be one of the best moments you could ever have until...
Hey babe, can you remember the trip we spoke about? So I and my friends are planning the end of the month to go to Dubai.
something unfortunate happens. But not to worry, all you need to do is call your insurance company and let them know.
Hi, good morning. This is Nur Takaful Insurance Limited. How may we be of help today?
Hi, my name is Amir. I just got involved in an accident. I have a comprehensive motor policy with your company. Please, what do I do?
We're sorry to hear about that. Please take a clear picture of the accidented part of the vehicle and please send it to us, and also a detailed incident report, and we'll take it up from there.
Thank you. I'll do that right away.
Carry out all the procedures and steps requested by an insurance company, and you will get reimbursed back to the position you were prior to the incident as soon as possible. Nur Takaful, your win-win insurance. Driving around town peacefully with your partner could be one of the best moments you could ever have until...
Hey babe, can you remember the trip we spoke about?
Hi, my name is Harris, and today I just wanted to answer a question that has been coming up so often lately. What is insurance? So stick around as I take you through this scenario to help you understand it even better. This is Amir. Amir just got a new house, and he, being a very careful and wise person, he decided to reach out to his insurance company in order to insure the entire house, everything in. Amir always takes care of his house on a daily basis until one night something unfortunate happens. Amir lost everything in the fire and was very, very devastated. After everything had happened, Amir reached out to the company and claim. Within some hours, the claims was processed and the insurance company reinstated Amir back to the position he was before the incident. And that being said, I would recommend you try Nur Takaful Insurance Limited today. You might be wondering, how can I reach out to them? Well, that's easy. You can just dial our number at 080-9944-4448, or you can check us on our website at www.nurtakaful.ng, and we're always available on social media at nurtakafulng. Can't wait to hear from you. Nur Takaful, your win-win insurance.
Ever wondered what uninterrupted power supply feels like? I mean, the no random power outage in the middle of a task. Well, I know it's my reality. How? With the reliable alternative, Alt Power.
Introducing Alt Power, the alternative solution to power outage and interrupted power supply. With Alt Power, you can be that guy. I'm in, the one with a constant power supply.
Yes, you can be like me and enjoy constant power supply. And it comes with perks, like being able to own now and pay later, and being able to make payment across convenient installments. What are you waiting for? Switch to the convenience side and enjoy uninterrupted power supply in your hands.
Ladies and gentlemen, if I can have your attention, please. Many of you are in the exhibition area. You can walk back with your snacks. You can walk back with your snacks, please, so that we can resume and begin the next panel. The ushers will show you the way back in. You can come back to your tables with your snacks. If we can please make our way back to our tables, you can come with your snacks. So we begin our next panel. The ushers will be showing you the way back. If we can please make our way back to our tables.
What does it mean to power your journey?
My name is Jude. I own a factory. I own a pure water factory in Bagada, where we produce sachet water and distribute to retailers in that area. My factory is heavily dependent on electric power, from pumping water to filtrating the water to packaging. Sadly, in that area, light can be very disappointing. We have a production target to meet every day, and any issues with light can prevent us from meeting that target. Yes, we own a generator, but everyone knows that generators can develop faults unexpectedly. From rising fuel prices to scarcity of fuel, and constant servicing of this generator can make production very difficult. Thankfully, now I have more stable and reliable power ever since I got solar inverters for my factory from Alt Power. Ever since I got this inverter, life has been easier.
What does it mean to power your journey?
Hi, my name is Patrick and I am a barber. My shop is located within the market in Uju Elegba, and in a day I cut like 6 people's hair. You see, I've been doing this for like 4 years now, and with it, I've been able to feed my family. You see, light is an essential part of my job, yet one of my
Ladies and gentlemen, if we can please make our way back to our seats so that we can begin the next panel. You can return to your tables with your snacks, and the exhibition booths will be available at any point later. If we can please make our way back. If we can please make our way back with our snacks in hand. The table is big enough, it can take your snacks. We start the next panel in less than 2 minutes. I implore you to please return to your seats. Thank you for making your way back. A number of you have responded to the call to return to your tables. A lot of us are trying to rush our meal. I implore you, it's not too healthy of an option. You can have the rest of your meal comfortably at your table. A few of you have decided to visit exhibition booths. The exhibition booths will be available at the end of today's sessions. So we are beginning the next panel. If we can please return to our tables. I'd like to encourage us all that we can eat the rest of our meal at our tables. And the sooner we begin, the sooner we can end. Also, your next meal will be right handy. Once again, a big thank you to you for being a very respectful and responsive audience. That should be a cue to return to our tables.
Ever heard of the tale of the merchant and his camel? He left the camel by the acacia tree and went in search of rocks for his tent without securing its noose properly to the tree. Upon his return, the camel was on the loose, nowhere to be found. He wailed and shrilled, yelling aloud about how God failed his camel. A sage traveling along the desert saw him and asked why he failed to secure his camel and blamed the loss on God. One might wonder where the story leads. Talk about firmly securing our priceless assets for a better future. Now here's a more secure story. In April 2016, in the vibrant heart of Nigeria, a groundbreaking vision was born. Takaful Insurance Limited became the first full-fledged composite Takaful insurance operator licensed by NICOM. 100% indigenous owned, we embarked on a mission to transform the landscape of ethical financial services in Africa in line with our vision to be the beacon of ethical financial services in Africa. At Takaful, we understand that financial protection is a fundamental need for everyone. Guided by our commitment for innovation and exceptional services, we continuously leverage the latest advancements to redefine the insurance experience. Our core values are at the heart of everything we do. Equity and fairness, teamwork, honesty, innovation, compliance and competence, accountability, leadership and professionalism. An entity where ethical financial protection meets unwavering dedication. We believe in creating win-win situations for our valued customers, because at Takaful, Takaful Insurance is for everyone. Join us on this remarkable journey as we shape a brighter and more secure future together. Again, remember the tale of the merchant and his camel. Have you secured your camel? Ladies and gentlemen, welcome to the first African Takaful conference hosted by Takaful.
I want to say thank you to those of you who have taken your seats. We begin our next panel immediately. Now, a quick reminder, we do have an online audience following our conversations, and I would like to re-establish our ground rules. As much as possible, let's try to keep the walkway right in the middle of the room free and accessible at all times. Our phones, I ask that we put on silent or vibrate. I ask that side conversations be put to a barest minimum. Tea break is over, so I shall not be establishing that in our ground rules. Now, we are working to manage our time as much as possible, so I once again crave your indulgence. Now, our next panel is on the Islamic finance values and its potential growth. The moderator of this panel is a managing partner of the Metropolitan Law Firm, which is a prominent Abuja-based law firm. It specializes in Islamic banking and finance. Our moderator happens to be the co-founder of this firm. It was founded back in 2008 and has since advised corporations, government agencies, and regulators on various transactions, including corporate matters, securities, mergers, and acquisitions, as well as project finance. Ummahani Ahmed Amin is no stranger to the matters of Islamic finance. Her expertise has been demonstrated through her involvement in landmark transactions such as Nigeria's first corporate sukuk insurance program, which was by Family Homes Fund. Now, her bio is much longer than this, but perhaps one of the more important bits, she is the current chair of the African International Conference on Islamic Finance, and she will be moderating this conversation over the next few minutes. Could we please put our hands together as she makes her way to the stage? Please join me in welcoming Ummahani Ahmed Amin, managing partner, co-founder of the Metropolitan Law Firm, been in operation since 2008. You're on the right track. You can keep applauding. Thank you.
Good afternoon, everyone, and thank you again. Well done, Takaful, for putting up this. I'm very happy, very excited that it's not just ISIF now. We have another kid on the block, as it is. So thank you very much, everyone. Without wasting our time, I'll just call on our panelists to join us on stage. The first panelist I'll invite to the stage is Moshood Babatunde. Moshood Babatunde is the Group Chief Financial Officer of Lotus Capital Limited. He has over 15 years of financial experience and business management experience in financial sector and the capital market. He has previously worked as an accountant with the consulting and project management firm Mikoiza, Nigeria, where he was responsible for the project management and business operations, financial management, and reporting. Moshood is a fellow chartered accountant, and he holds an MBA distinction with specialization in management. He's an alumnus of the Lagos Business School. Please welcome Mansour. Our next panelist is the erudite Sheikh Ziad Mohammed. Everyone in the Islamic finance industry in Nigeria is familiar with Sheikh Ziad. I remember his sojourn to Nigeria from 2009 when he started, and we all thought he was Osama bin Laden when we first saw him. Sheikh Ziad is an associate professor of INSEV. That's the International University in Malaysia. He's currently the lead researcher for Sharia for the Center of Excellence in Social Finance and head of online programs for INSEV. Sheikh Ziad serves as the chairman of several Sharia boards internationally, including HSBC Amana, Malaysia, Taj Bank in Nigeria here, and the Takaful companies and fintechs in Nigeria, Maldives, and the UK and South Africa. He holds PhD and CFP in Islamic finance from INSEV in Malaysia, an MBA in South Africa, business finance from the UK, and a lot of certifications in Islamic finance and sciences from South Africa, Jordan, and specializes in Sharia, sustainability, and social finance. Please welcome again to Nigeria. Our third panelist is Mr. Hamid Joda, who is a banker with over 20 years banking experience, covering treasury, business development, consumer retail banking, branch banking, and the public sector. He began his career at Niger Insurance PLC in 1999 before moving to the Express Bank Limited, Lagos, and the same year where he held the position of senior supervisor. He has also worked at Continental Bank Limited as a senior analyst at the defunct Oceanic Bank. He was also the pioneer manager of Fidelity Bank. He has extensive experiences that led him to Finland Bank, Abuja, as group head retail banking, where he rose to become the divisional head retail banking. He is from the University of Maiduguri. Right now, he's the co-owner of Taj Bank. Please welcome Mr. Hamid Joda. And our speaker for this session is Professor Abdulrazak A. Alaro. Professor Abdulrazak is also very well known as a regulator, as a lawyer, and as an industry expert in the Islamic finance sector. He has a multi-award winning scholarship from the University of, please pardon me. So Professor Alaro is an award-winning scholar, is a professor of law, Sharia consultant, barrister and solicitor of the Supreme Court of Nigeria, and an internationally certified arbitrator. In May 2023, he won the Islamic University of Medina, Arabia Award of the alumnus with the most outstanding intellectual impact. Professor Alaro was also announced in 2018 as the overall winner of an international research competition organized by CDA Riyadh, Saudi Arabia. He was certified in 2021 by the Global University Network for Innovation and African Quality Assurance Network, an accreditor for universities and other institutions. Professor Alaro is the current head of Research, Studies and Translation Committee in the University of African Scholars, with headquarters in Bamako and Mali. He speaks and writes fluently in both English and Arabic. Welcome, Professor Alaro. So I'll call on Professor Alaro to come to the stage for his paper presentation. Thank you.
بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وصحبه. Having started in the name of Allah, the most beneficent and the most merciful, I want to crave the indulgence of the organizers and the totality of the members of audience as well as my co-panelists that you just simply allow me to adopt the already established protocols. I learned I have only 15 minutes to do the presentation. And I don't even know up to now how I'm going to do that successively. Because as a university lecturer, I teach for an average of 2 hours each time I enter a lecture room. So asking a lecturer to talk in just 15 minutes is actually challenging, but we will try to keep to that as best as we can. My own topic of discussion, as you can see on the screen, is to talk of Islamic finance, values, and potential growth globally, but I will place some emphasis on the continent of Africa. Bearing in mind that this is a conference that is African-centered, it's African Takaful and non-interest finance. And because of the time constraint, permit me to skip, this is the agenda that I have, the items that I intended to run through, but I will have to skip the preliminary slides because of the time constraint. Issues relating to definition of Islamic finance, the growth, the size currently of Islamic financial market worldwide. By the time you get the full presentation, you can access all that. When we talk of values of Islamic finance, yes, Islamic finance is actually value-oriented. It's guided by core values that are all derived from the Sharia principles based on the authorities of Al-Quran and Sunnah. And these principles that are guiding the operations of Islamic finance, they offer a range of benefits and opportunities, not only to individuals, but even to businesses, corporate entities, governments, and the society at large. I have identified about 5 of those values for my presentation this afternoon, and I will go through them one after the other. The first value of Islamic finance is that it is a socially responsible investment. This is very important. Yes, I heard one of the speakers this morning mentioning the fact that Islamic finance is not a religious institution. It's actually a profit-oriented institution that is there to do business with intention of generating profits. But it is not a free-for-all investment that we allow under Islamic finance. It's actually guided by this value of looking for what will be socially responsible, what will be ethical conscious. When you put your money in an investment, you must never do it in a way that will be detrimental or harmful to the well-being and welfare of the society. So that is the first major value of Islamic finance, that it actually promotes only socially responsible investment. And when we talk of ethical or socially responsible investment, it has its own market as well. And that is why, as Africa, we stand to gain, as Africans, we stand to gain by attracting those investors that actually prioritize environmental sustainability, fair labor practices, and community welfare wherever they put their money. So it's an opportunity to attract that class of investors when we accommodate Islamic finance on the continent. The other value is that when we talk of Islamic finance, principally, we are talking of a risk-sharing mechanism. What do we mean by that? It actually states that based on a principle of Sharia that says, al-gunmu bil-gurmi wal-kharaju bil-dhaman. Profit, dividend, and losses or risks, they are actually inseparable. You cannot separate one from the other. Wherever you stand to gain, you must also be prepared to share part of the loss, if any. That is the true essence of Islamic finance. It promotes risk sharing. And this is a conference organized by a Takaful entity. Takaful, as a product of Islamic finance, is actually a good illustration of the risk-sharing mechanism that is promoted by Islamic finance. When we talk of Takaful, it is different principally from conventional insurance, because in conventional insurance, risks are actually transferred. But in Islamic Takaful insurance, risks are actually shared among the participants or policy holders. So this is an important value of Islamic finance, that is a financial system that takes very, very important the issue of risk sharing among the players. Value number 3 is that this Islamic finance looks after financial inclusion and ultimately economic empowerment. And that is why it ensures that individuals from all socio-economic backgrounds or strata of the society are actually accommodated and given access to financial services. One unique characteristic of financial inclusion under Islamic finance is that Islamic finance does not see financial inclusion as an end on its own. It actually looks at it as a goal leading to an end. And what is that end? It is economic empowerment of the so included population. So we should always bear this in mind as a value of Islamic finance. We include people financially with a view to empowering them. And how do you achieve that? Through a number of steps. Product of Islamic finance that are geared towards financial inclusion must actually make sure that the poor, the less privileged in the society, are considered as economic actors. They are given access to relevant markets. They are also exposed to suitable investment opportunities, and they are given supporting infrastructure, appropriate funding, and creation of smart partnership with them, and also building their capacity. If we do all this, we will actually be moving from financial inclusion as a means to an end, which is economic empowerment, and that is where how the value of financial inclusion manifests actually under Islamic finance. Value number 4 of the values of Islamic finance is the sustainable and ethical investment. And that is why you will realize that when we talk of, let's take SDGs, the Sustainable Development Goals, the 17 goals of SDGs, or which are usually summarized under ESG, environmental, governance, and social. You will see that all these align with the overall objectives of Sharia, which we know as Maqasid Sharia, and by extension, with the overall objectives of Islamic finance. Look at all these social, environmental goals of SDGs or ESG. They are actually either to protect our lives, protect our wealth, protect our procreation by way of ensuring the continuity of human race, and to protect our intellect. These are the 5 major objectives of Sharia, which by extension become the 5 fundamental objectives of Islamic finance. So it's a value of Islamic finance that it takes care of investment. It's only interested in investments that are sustainable and are ethical in nature. And lastly, prohibition of interest is an important value that cannot be glossed over when we are talking of Islamic finance. This is an identifier, one of the major identifiers of Islamic finance. Yes, it prohibits dealing in riba, either by way of giving or by way of taking. Why? Because riba is considered to be interest, is considered to be exploitative. And I can't see a better statement to illustrate this fact than what we have. The operator, these slides are not moving at all. What is happening? I'm supposed to be on slide 10 now, but I still found the second slide being displayed. Who is in charge of that, please? We want the audience to follow. Okay, you can stop there. I said it's an important value of Islamic finance that it prohibits dealing in interest because it sees it as exploitative. And this is one of the best ways of illustrating it. A statement made by former President of the Federal Republic of Nigeria. Go back to that slide, operator. Abba. No, this is not the slide. I'm talking of slide 10, prohibition of riba or interest. President Obasanjo in year 2000 lamented that Nigeria borrowed $5 billion, ended up paying $16 billion, and yet was owing $28 billion. And he concluded by saying, if you ask me what the worst thing in the world is, I will say it is compound interest. So it's a major value of Islamic finance that it actually prohibits dealing in interest. Now, if we apply all these values that I've just enumerated, they must lead us to a destination. And that destination is to see the impact on the society. Meaning that wherever or whenever we are not seeing some of this impact that I'm going to mention now, it means we have to look back and see whether we are holding dearly, whether we are actually implementing, applying the true values of Islamic finance. Now, so let's talk briefly about the impact that Islamic finance should have automatically when we bring on board all these values that I've just mentioned. Value number 1, impact number 1, still not moving. Operator. Okay. Okay. You want me to do it myself? Okay. 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 No, it's not moving again. So, the first impact that we expect to see in the society, if we truly implement what Islamic finance is that it must result in poverty alleviation and social welfare, especially through what we call Islamic social finance. The next slide will give us some figures coming from an internationally reputable organization, UNHCR, that is United Nations High Commission for Refugees. It stated in its report in 2022 that in 21 countries and impacting about 1.5 million refugees and IDPs through the instrument of Zakat and Sadaqah. You can see the statistics, including some African countries, Nigeria and other African countries, that people were actually impacted, especially the poor and the less privileged, through the instrument of Zakat and Sadaqah as product of Islamic finance. We also expect to see in the society as an impact for the implementation of the values of Islamic finance that women, who are usually considered in every society as having lesser opportunities to economic advantages, we want to see the empowerment of women. So women empowerment is actually a major impact that we should expect to see if we bring on board all the values of Islamic finance. Number three, even in terms of education and healthcare initiatives, there is another product of Islamic finance that we call Waqf. Waqf has been used all over the world to establish schools, universities, hospitals, and other institutions that have a lot of benefit to the society. And at this point, because this is a Takaful, essentially a Takaful centered conference, I want to throw up a challenge for the operators in Nigeria. We are talking about the impact of Islamic finance in the area of education and healthcare initiatives. I don't know what is keeping you away up till today. As far as my findings are concerned, I've not seen any Takaful operator venturing into the healthcare product of Takaful, using Takaful for healthcare. All what I've seen in circulation, either NHAIS, that is the national one, or state-based one, they are all conventional insurance-based. Why? Takaful is a good product that can work effectively by letting people see the benefits and the real values of Islamic finance. So that is a challenge for our Takaful operators, and I think we have a golden opportunity at a conference like this to throw up such a challenge. This is another impact that automatically we should expect to see by way of supporting small and medium enterprises. I've given the figures that is coming from IDB, Islamic Development Bank, mentioning the billions of dollars that have been spent in intervention in various areas, energy, agriculture, by way of supporting SMEs through Islamic financial products. Sustainable development initiatives, particularly when we talk of green sukuk that are being issued all over the world today, is part of the way of seeing the impact of Islamic financial values implemented in the society. The social impact is also part of it. Social impact of Islamic finance is also a good way of seeing the impact. Recently, a few days ago, I read an online news item announcing that a UK-based firm actually launched a social impact sukuk for housing, bridging housing deficit in the UK. And if UK is thinking in this way of trying to bridge housing deficit, I don't know where we will be in Africa. The truth of the matter is that housing deficit is a global phenomenon, is a global challenge, but it's felt more on the continent of Africa. The reason being that many studies have established this. One of the major contributors to housing deficit in the world is what we call rural-urban migration. And this is happening at a very large scale on the continent of Africa. But there is a study by UN Habitat that states that by year 2025, just 2 years from today, almost half of the population of Africans will be living in urban centers. So we'll have more problem in this area. And for those who will argue that we have no deficit, we will have no deficit, there are houses. I think we should look at the scientific definition of housing deficit its own. How do we arrive at a conclusion in any country that you have a deficit or we don't have? We have two parameters to that. It's either you have affordable housing that is inadequate, or you have adequate housing that is unaffordable. Either way, there is a deficit. Deficit does not mean we don't have enough houses. You can have adequate housings, but not affordable. Sometimes you can have affordable housing, but they are not inadequate. So I think this is should be an eye-opener. If UK is thinking that way, I think we have a bigger challenge in terms of housing deficit. And Sukuk, social impact Sukuk, could be a succor in that regard for us on the continent of Africa. At the last lap of the presentation, we were to talk of the values as well as the potential growth, particularly in Africa. Here I've identified, but before I go there, I think I mentioned something, okay. In 2017, Bank Negara Malaysia, that is Central Bank of Malaysia, released findings of a study on Islamic finance in Africa. And it identified 3 key pillars that are driving Islamic finance in Africa, namely financial inclusion, stimulation of economic activities, especially through funding and financing of SME activities, and infrastructure funding. These are the 3 key pillars of Islamic finance on the continent of Africa. But beyond that, we can also explore other potential, other key factors that could contribute to the growth of Islamic finance on the continent. And I'm going to mention about 5 of them speedily. Number 1 is the rapidly expanding market. Africa is a natural market for Islamic finance. I'm happy I heard Alhaji Kari mention in this morning that Muslim population on the continent is in the region of 300 million men and women. So when you have such a huge market, natural market for you, that should be an opportunity that should be explored and exploited towards enhancing the introduction of Islamic finance on the continent. Number 2, we have many untapped potential. What do we mean by that? We go back to the issue of financial inclusion. If you look at the rate of inclusion on the continent of Africa, it's one of the lowest in the world. It's like a parable that was given this morning that nobody is wearing shoe here. Here is a market for you to sell shoes. In Africa, we have very high rate of financial exclusion. People are excluded financially. I've given some of the statistics here. Like in Niger, our neighbor here, the financially included adult population in Niger is just only 3.5%. It's only 10.9 in Congo. Is only 7.9 in Somalia, is only 19% in Tanzania, and 17.2 in Zimbabwe. I didn't omit Nigeria, but Nigeria is doing fairly well this day. We have about 44%, 44.2% rate. And as I mentioned in my inaugural lecture delivered about 2 years ago, that studies upon studies have established this. Introduction of Islamic finance is a major driver of financial inclusion, the growth in financial inclusion that the country is experiencing. There is no doubt about that one. So we can take that beyond Nigeria, look at markets that are, we still have very large percentage of people that are financially excluded, and that could be an opportunity of introducing Islamic finance to such markets. Number 3 of the factors that could boost the growth of Islamic finance on the continent is the government support. We have very, very friendly, I'm almost done. Very, very friendly regulatory environment on the continent. I don't think they have it on other continents, maybe Asia. But in Africa, we have very friendly regulatory environment. Many countries are coming up now to introduce one form or another of regulation of Islamic finance, though they are ready for you. About 3 months ago, I was privileged to be invited by the Central Bank of Nigeria as a resource person for staff from Tanzania. The Central Bank of Tanzania, sent a team to Nigeria to come and understudy us how we are regulating Islamic finance in Nigeria to replicate same at home. Uganda has even like a new law of regulating their financial sector with a view to accommodating Islamic finance. So we have a very friendly regulatory environment, which I termed as being the government support for the growth of Islamic finance. Number 4 is that we have diverse economies on the continent. It's not limited to banking. You can come through banking, come through insurance, come through capital market, come through microfinance initiatives. So there are a lot of opportunities that could be seen as factors for the growth of Islamic finance in Africa. And finally, one of the potentially major drivers in future, in the next few years, of the growth of Islamic finance in Africa is the emerging market of Islamic fintech. This is a new and emerging market, and I'm happy it's part of what is being discussed here in this conference. It's an emerging market. But Africa is still playing minimally in that market. Look at it, look at it, look at the statistics here. The market is still being led by Indonesia with 20%. Imagine, surprisingly, followed by UK. UK is following in Islamic fintech. I'm not saying fintech generally, Islamic fintech. Fintech meant for Islamic finance. UK is having the share of 15% of that market, followed by UAE with 14% and Saudi Arabia with 13%. We have some players from Africa, but I said minimally. Egypt and Nigeria have each 2% of the share of that market. So we need to do more. It could become another booster for the growth of Islamic finance on the continent. In conclusion, by tapping into Africa's potential for Islamic finance growth, financial institutions can strategically position themselves to benefit from the continent's expanding Muslim population, untapped opportunities, friendly regulatory environment, diverse economies, and the emerging fintech market. Ultimately, all this will contribute to inclusive and sustainable economic development for all, and I thank you for listening.
Thank you very much. Oh, I'm sorry. I can change seats with you. Then I'll sit. No, then I'll sit by the side. Thank you, everyone, for listening to Professor Alaro. I'm sure you must have learned. It's very precise, very easy to understand. Take away from what he has said, I've just tried to see that he talked about Islamic finance as a system of financial principles rooted in Islamic law, also known as Sharia. It operates on the basis of ethical and moral values, promoting fairness, transparency, and social responsibility. Some of the key principles will include the prohibition of interest, which is the basic bedrock of Islamic finance, and of course speculation, which has to do with insurance, and investment in certain sectors like alcohol and gambling and the transactions on pork or eating of pork, etc. And then he talked about the potential for Islamic finance as is very significant. It has gained momentum globally with a growing number of Islamic financial institutions and products, services, as Muslim population increases and the demand for Sharia-compliant options rises in the industry, which is expected to expand further. He also spoke about several factors to contribute to its potential growth. First, the principles of risk sharing and asset backing in Islamic finance, which can foster financial stability and resilience. And additionally, he said Islamic finance appeals to a broader audience beyond Muslims. as it is, and it aligns with the ethical investing and sustainable development goals. Of course, there are challenges, which include the need for standardization and harmonization of Islamic financial regulations globally. And I am happy that African countries are understudying Nigeria. That means we're doing very well in that sector, in that area. So before we conclude on this, I'd like to just ask our panelists here, and we were told we have just five minutes each. Islamic finance is very broad, so I'd like to ask my panelists to be quick in answering these questions so we can move and finish on this session quickly. Thank you. So I'd like to start with Hamid Joda. The first question I'll ask is, we all agree that fintech and technological advancements will play a significant role in driving the growth for Islamic finance in Nigeria and globally. So can you provide an insight into the bank's long-term vision and strategy for expanding Islamic finance portfolio?
Okay, thank you very much for that question. I think there is no gainsaying the fact that fintech, or the use of technology generally, is the way of the future. Let me put this in proper context. There is a fintech in Nigeria today. I don't want to mention the name. They started banking 3 years ago, and today they have 30 million customers. In fact, the biggest banks in Nigeria, I don't know if there is any bank in Nigeria today, even the banks that are over 100 years old, I don't think there is any of them that has up to 30 million customers. So within just 3 years, ask any teenager today to send you an account number. More often than not, you are likely to see an account number of a fintech. So it means the teenagers are migrating. And the entire industry is changing. The dynamics are changing. And the fintechs are changing the game, and they are disrupting the banking market in a very fast pace and in an unbelievable manner. So that is one. So if you don't embrace technology, I don't see how you can create a bright future for an institution. What have we done in Taj Bank? We created a digital bank in response to what the fintechs are doing. It's called Tajway. We just launched it. And Tajway is about 2 months old. And Taj Bank is also about 3.5 years old. And within the last 3.5 years, we have signed on about 300,000 accounts. That is in 3 years. But by the time we launched Tajway, which is a digital bank, almost more like an Islamic fintech, if you like, we onboarded more than 100,000. We have so far onboarded more than 100,000 customers on that digital bank. So that is the major difference, and that is what technology can do for you. Today in Nigeria, we have one of the highest financial exclusion rates, as Professor Alaro has pointed out. And just 3 weeks ago, we went to Kano for a roadshow. And you will be surprised that majority of the people that came for the roadshow don't have bank accounts. They are unbanked. Majority of them, up to 80%, but they don't even have BVNs. And that is why the fintechs are doing so well in the market, because what they operate is a wallet system. So without BVN, you can still onboard a customer. And that is a challenge of traditional banks, why we are unable to scale up. So until and unless the traditional banks wake up to the reality of the market, I think in the next few years, the entire landscape will be taken over by the fintechs. And so technology plays a very, very important role in determining the future of an institution. So there is no doubt about that.
Thank you very much. I feel you. My mother has never had a bank account or even seen the four walls of a bank because she's excluded like a lot of other people. So I understand where you're coming from, and thank you for the good work so far. Moshood, please, how has Islamic funds performance been in recent years compared to conventional funds, and what factors contribute to this success, if any?
Okay, thank you. That's a good question. In the recent years, we can see Sharia compliant fund performing very well. And I can say it's now more competitive than ever before. Let me put it in a context. I think recently there was a report released by Nairametrics. And on that report, you will see that one of the top 10 funds, Sharia compliant fund, is there. The reality is that investors, in addition to looking for the investment that is compliant, that aligns with their value, they're also looking for the investment that will give them good returns. So if you look at the landscape of how the Sharia compliant fund has performed, let me put it in a context. In 2008, we barely have Sharia compliant fund or maybe Sharia compliant instrument. And I think in 2008, we started having mutual funds. But at that time, we barely have investable instruments. The only instrument that the fund can invest in, maybe Sharia, maybe stock market. And this hasn't really given opportunities to the funds or the instrument to perform very well or to compete with the conventional fund. But thanks to the landscape, the support, and the enabling environment that has been created, either from the government or from the regulators, that has come up with different policies, different rules that support issuance of investable Sharia compliant assets like Sukuk, like some other assets, and the emergence of other financial institutions like banks. Touch Bank came in along the line, and all these have created opportunities for different products that mutual funds or maybe the Sharia compliant fund can invest in. What we are seeing now is a mass migration of the flow, cash flow, from the regular market into Sharia compliant fund. And you will see that the growth that the mutual fund or maybe Sharia compliant fund has recorded in the meantime has really been so phenomenal. Just in 2021, the asset as a whole went up by almost 71%, just in 21 year on year. It's an indication that there is something good that investors are seeing, which one of them is the competitive return. And we can also see that in the capital market, the issuance of Sukuk has grown phenomenally. Today, we have almost 756 billion in FMDQ listed. And if we consider all these factors together, it has created opportunity for the Sharia compliant asset and fund to perform very well, because we have good assets that the Sharia compliant fund can invest in and can give, that can offer competitive return, even much better than other contemporary funds. I think those are the factors that I can really mention at this point. Thank you.
Thank you. Interesting times for Islamic finance. Sheikh, how do you see the future of Islamic finance evolving from where it was before, and what steps can be taken to unlock all the potentials we see on the global scale?
Bismillah ar-Rahman ar-Rahim. Alhamdulillah, wassalatu wassalamu ala Rasulillah. Thank you for the opportunity to discuss this issue. I think that sitting back, looking at Nigeria's progress over the last 15 years, you can actually start mapping out what the potential future for Islamic finance can look like for the West African region to begin with, and then for Sub-Saharan Africa and Africa as a whole. So, to keep my answer brief, every region will experience a different level in terms of their Islamic finance development going forward. For the Southeast Asian region, they are fairly well developed, specifically countries like Malaysia. Indonesia, known as the sleeping giant, is just growing at a ridiculous pace right now. And then when you move quickly across Europe and now into Africa, you find that there are significant gaps that Africa still needs to fill in to actually achieve a benchmark of where countries like Malaysia are at today. So the future for African Islamic finance should be focused on, number one, benchmarking. Benchmarking against good models, models that are successful, but those models cannot be cut and paste models. There needs to be a replication, but there needs to be a customization. So if Islamic finance is to progress significantly from where it is right now in Africa, it does need to look at its own cultural issues, its own behavioral challenges, its governance challenges, and then only would you see Islamic finance being robust in terms of a strong foundation going forward. And I say this carefully because you have an example in Kenya, and this example is using social finance, as Prof. Alaro mentioned earlier, social finance as being a key element of Islamic finance. This model has actually turned $1.2 million into $20 million for people that could not even afford to plant seeds in their farm. So it's really shown how Islamic finance, using concessionary finance tools, can move people forward, can actually empower them economically. So can that model be replicated in the rest of Sub-Saharan Africa? The answer is yes. But in order for it to be replicated, you need to be able to customize it to cultural and behavioral norms within the region. So what I'm saying is, the future of Islamic finance in Africa needs to focus on a customized, replicated model of what already has been successful. It can only be achieved through proper governance. An example here is Nigeria, sitting with 56,000 abandoned infrastructure projects as documented. And now introducing Islamic finance into the system is not simply going to fix the problem. You need to have a behavioral change, a governance mentality, a high level of integrity and independence, because with whatever system you place in, the future really depends on how we act today. And this is important. If you want to see the success of Islamic finance going forward, you do need to really look into behavioral change, the moral hazards, the agency problem that has been affecting us for so many years. So I'm going to leave it there, and perhaps if you go on to another round, we can try to cover it.
Okay, I'll ask you again, as the watchdog for Islamic financial institutions,
yep.
I mean, as a Sharia advisor, you're often entrusted with, to ensure that financial products and services comply with the Sharia principles. So how have you worked with the financial institutions and stakeholders in promoting Islamic finance values and to ensure compliance with the Sharia principles while maintaining profitability and competitiveness in the respective markets?
Yeah, I think that's a very important question. So briefly, to share experience, being involved in the industry for almost 25 years, we've gone from the checkbox, formal legal approach of Islamic finance and Sharia compliance to a spiritual, substance-based approach. Now, this does not negate the commercial, profitable activities. But what we try and do for the institutions that we supervise is to nudge them towards good behavior. And good behavior means taking the ESGs, as Prof. Alaro was talking about, the SDGs, and the maqasid, specifically the objectives of Islamic law, and instilling it within the corporate value intent, which means that the vision, the mission, the products, the services, the culture of the institutions, they need to espouse responsibility and sustainability. Because if that behavioral model change is not taking place, we're not going to be seeing the success of any industry or any market going forward. So today, the mantra is all about reducing carbon emissions. Our focus is to look at how we can encourage institutions to reduce that, how to economically empower the customers and SMEs, and ensure that the institutions are offering solutions for these vulnerable groups, for the SMEs, the micro and the nano SMEs. And the way to do that is from the Sharia committees and the Sharia boards, instilling a maqasidic dimension within the Sharia decision-making process. And we've been training a lot of Sharia scholars to be able to do that, and I think that that is going to be how we've been implementing it and how to go forward. Inshallah.
Thank you. Moshood, in a minute, explain, tell us what Lotus Capital's outlook for the future of Islamic finance is, and how does it plan to position itself to take advantage of the growth opportunities?
Okay, from Lotus Capital point of view, we are seeing a bigger Islamic finance market. If I want to look at it from the perspective of the market itself, I mean, the market started with barely one commercial bank, and today we one non-interest bank. Today we have four. We have four Takaful as well. We have several asset management companies. Just within how many years? So what we are seeing in the next few years, we are seeing a bigger market with a bigger, several numbers of non-interest bank. We are seeing bigger market with sukuk issued by federal government. Just recently this year, Lotus Capital advised Lagos State for the first time in the issuance of sukuk. We are seeing other states coming into the market to issue sukuk. As of today, we have only 650 something billion issued as sukuk in the market. Based on the master plan of the Security and Exchange Commission, it is planned that by 2025, minimum of 15 listings will be on the exchange with minimum of 5 trillion. We are seeing bigger market whereby many people are coming to the market. And what is Lotus Capital doing? Lotus Capital is strategically positioned itself in a way that it will build capacity in the market, to deepen the market, as we have been doing, to offer all these capacity building and advisory services to either government or corporation, even to the institutional investors and the retail investors as well, because this is financial intermediation at that peak, and that is one of those things that we are also trying to do. And in addition, we are also trying to see how we give value for the values that most of the investors are looking for. I think I will stop it at this point.
Thank you very much. Hamid, what are the potentials? What potentials do you see in Islamic finance to grow in the global financial landscape? And are there any specific products or financial products or instruments within the Islamic finance industry that have shown remarkable growth, and what we should look out for in the next few years?
Okay, thank you very much. The size of the Islamic finance market in Nigeria, according to research, is $2.9 billion. And $2.9 billion, that includes the banks, the Takaful companies, and the asset management companies. And the banks have the largest share of the $2.9 billion. And I'm sure a lot of people here will be saying, oh, $2.9 billion, that is actually a lot of money. But by the time you gaze at other markets, you look at Malaysia, for instance, according to the Bank Negara website, the size of the Islamic banking market in Malaysia is $254 billion. $254 billion. That's about over 200 trillion naira. The size of the Nigerian banking industry is somewhere around 70 trillion. Between 70 to 80 trillion. It was 65 trillion about a year ago. Now it's between 70 to 80 trillion. But in Malaysia, the size of the Islamic finance market, or banking market rather, is, as I said, 200 and I think about 3 trillion naira. That is the major difference. And what does that tell you? It tells you that there is a lot of potential and scope. Because Malaysia started long ago, we are more like newcomers, because the first Islamic bank started about 11 years ago, thereabout. And it took about 7-8 years before the second Islamic bank came on the scene. And by comparative size, the GDP of Nigeria is much bigger than Malaysia. So it tells you that there is significant potential, untapped demand, and like I said, potential for growth in the market. Let me narrow it down to the performance of the Islamic banks in Nigeria. Because we all remember when the license was issued, when the first license was issued, and the uproar that greeted it, and so on and so forth. But within 3 years, that bank achieved break-even, demonstrating that yes, there is potential in the market, and yes, it can be done, and yes, there is future for Islamic banking in Nigeria. Taj Bank achieved break-even in 6 months, wiped up pre-operational expenses within the first year, and the bank has remained consistently profitable all through the years. Likewise, the other Islamic banks that we have in the industry today. So a lot of potential out there. But speaking of instruments, just briefly, the other day we were interviewing a gentleman in the office, and we asked him to define sukuk. And he's a treasurer in one of the banks, and we asked him to define sukuk. He said the definition of a sukuk is an instrument that is used to build roads.
Is what?
An instrument that is used to build roads. So, so the government has done a very good job in building up the sukuk market. Today we have the largest sukuk market in Africa, thank God. And the government has done a very good job. And Taj Bank also introduced the first sukuk in the industry last year, and it was massively oversubscribed. So I think sukuk is an instrument that can be used to unlock the growth potential of Nigeria, and of course embark on a lot of infrastructure projects, as we have seen in Nigeria from the roads that have been built with sukuk funds.
Thank you. I honestly feel we have very limited time, but there's so much out there to learn and to understand about Islamic finance. But then we'll have other platforms, inshallah. I'll just go back to Professor. I wanted to ask you, as an advocate for ethical finance, how do you assess the social and ethical impact of Islamic finance products on individuals and communities? And what do you see as the unique value proposition for Islamic finance compared to the conventional finance?
Thank you. Let me start from the concluding side of the question. I think we've spoken a lot about the values, the value proposition of Islamic finance.
As a teacher, sir, I'll just ask you for a minute. I know you can, we
Okay.
don't have time.
Well, I think I was able to manage that in the first leg of the presentation. I should be able to do that now.
Yes.
Well, let me then go straight to the issue of the social impact of Islamic finance in the society. And to make it more meaningful to my audience, I would like to limit that one to the society in which we are, that is Nigeria. I think it's a challenge for my brother Hamid Joda, and other operators. The truth of the matter is that the social aspect of Islamic finance is not sufficiently promoted. People still see, in most cases, Islamic finance as behaving in a similar way to the conventional finance. You see, they are coming from an erroneous understanding in the beginning. An average African man, an average Nigerian man is seeing an Islamic bank as a Sadaqah and Zakah foundation. So by the time they approach you and you start telling them that this is our own rate of profit, they are shocked originally. So that is there already. I believe that is an erroneous understanding on their part. But what will remove all these misconceptions is for them to see that difference. And one major way of showing the difference is through the social impact of Islamic finance in the society. And I want to encourage you, the operators, to do more in this regard.
Thank you very much. Sheikh, what can you say about that as well? Just a minute or so, then we round up.
I agree 100%. If you look at the existing ESG and sustainability models, there's one particular gap that we identify, and that is social impact. So they talk about economic well-being, etc., but when it comes to social impact, that part can actually be filled in using an Islamic ethos, and that method can be established through the maqasid, through the objectives of Islamic law. The success of it is not just about philosophical ideas, but it's about real products. We've developed them. We've integrated them in some of the largest Islamic banks in the world. We've piloted them over a period, and they've increased the income of those that could not afford to even purchase these basic kits for basic sustenance. So we've seen this being practiced. So social impact is the way to go, and the way for Islamic banks or non-interest financial institutions is really to integrate it within their products and services. That's the way to go forward.
Thank you very much. Like I said, I was meant to ask about four questions each. Unfortunately, they keep giving me papers to say I have a few minutes. So lastly, I'll just ask again 2 questions so we can quickly round up this session. Please, if you have any question for any of the panelists or the lead speaker, raise up your hand, then we can be able to finalize this session. Any question? Okay. Well, thank you. Thank you very much. Okay. Thank you very much, everyone. And we hope to see you at the 6th ISIF in November. Thank you. Yes, unpaid. But we're all in this space together. We're working together.
A big thank you to our guests and our guest speaker, moderator, and our panelists. You can just come together in the center, take a quick photograph. Please, a round of applause one more time for our panelists speaking to us on the Islamic finance values and its potential growth. Now, I'll dive very quickly into an introduction of our next panel so we can use as much of our time as possible. The next panel will be speaking on financial inclusion and technology, looking at Takaful as a form of financial inclusion. The moderator, Oluwatomi Eromosele, has over 10 years of experience with a specialty in economic development, financial inclusion, and employment creation. She happens to have worked on the achievement of the Sustainable Development Goals with a focus on financial health, agricultural financing, and women's economic empowerment. Jean currently leads programs such as the ILO's ASOL Africa Social Finance Program, and she's worked in evaluating Nigeria's national employment policy. As you know, at the moment, the stage is being set just very quickly for our panelists, but they will make their way shortly. And Ms. Eromosele will be introducing the speaker for this conversation. Please a round of applause as she makes her way to the stage. Good afternoon, ladies and gentlemen. I will stand on existing protocols. Thank you to all my panelists for coming on the stage. We know that we are pressed for time, so we will jump right in. This session, we want to talk about financial inclusion and technology, and we're looking at Takaful as a form of financial inclusion. Basically, in the next, we've been told we have 30 minutes. We would want to leave you with practical steps on how you can drive Takaful that can also result in successful financial inclusion. We've heard a lot today, but what we want to leave you with is simple, practical steps of how you can transform, your Takaful and the design to products and, approaches that can actually reach the unbanked and the underserved, because that's our interest. My first panelist is, I have Mrs. Fatima Abdul Rahim. She's the assistant director. She's an assistant director at NICOM. She has over a decade banking and insurance experience. She is representing Mr. Zubeiru Suleiman Darazo, who is currently the technical assistant to the Deputy Commissioner for Insurance. I also have Mr. Abdul Rashid Babalola, who is an accomplished professional in the financial service industry with over 24 years of experience. I have Mr. Michael J. McCord, who is one of the world's leading experts in developing and managing microinsurance products. Mr. Michael has worked in over 75 countries, leading consulting projects on various risks that low-income clients face. Please help me welcome Mr. Michael to give us the presentation, and then we can move into the conversation. Thank you.
Excellent. Thank you so much. It was very kind. One of the world's leading experts. Wow. Kind of impressed. Where are the buttons? The buttons for the presentation? Okay. I want to talk about, thank you. Okay, good. So I want to talk about Takaful, and I want to link that to microinsurance a little bit. I'm going to come down here with all of you because I want to be even with you, because that's what we do in microinsurance. We're even with our clients, and we help them to understand. It's what we do in Takaful, right? So I'm going to talk about a couple things here. Okay, first of all, the SDGs. You heard a little bit about them before. And what I wanted to say is that without good Takaful, without good microinsurance, without good risk management, we can't achieve several of these items, right? We can't achieve no poverty. I was in China. They told me a few years ago, they said, oh, we're going to eradicate poverty on December 31st of 2019. We're going to eradicate poverty completely. And I said, okay, fine. Eradicate poverty, but what you're not going to have is that you're going to have, on January 1st, you're going to have poverty again because you don't have good insurance. You don't have good ways for people to manage their risks, okay? So the ones that are in solid, those are ones that we can't have without good risk management. And I think Takaful is a critical piece to that. Let me say, we've talked about the principles before, and for me, the principles of Takaful are perfect for getting risk management out there and to people. We need to have cooperation, we need to have mutual responsibility, we need to take care of ourselves, and that's what people want to do. In most of these countries where I go, countries where you all live, we have mechanisms that people have developed indigenously to help manage their risks, to help manage their community risks. That's what Takaful is. People helping their friends, their neighbors, their family. Okay? So let me go on and talk. So Takaful and non-Takaful, I think the big key for this is that what we're talking about in traditional insurance, I think like Dr. Tarek said, is that what we're talking about is a risk transfer. And in Takaful, we're talking about risk sharing. Okay, and I think that's really important. And of course, the Takaful component is governed by Sharia law. Okay? And so I want to say that what we have here is a huge market. I've heard different numbers in every session, so I don't know, this one references one, but 44% of Africans are Muslim. That's a potential of 500 million people. Let's say you've got average family with 3 kids, so you've got 40% of that, which is what, 200 million people that are potential direct clients. And what you've got is you've got our friend Hassan Bashir said in 2014, okay, old, we should be looking at these numbers more recently, but he said 15% of his clients were non-Takaful, were non-Muslim members, okay? And then we also see the IMF talking about how this is a huge market for non-Muslims. And the fundamental piece is what people want are good products. Yes, if you're Islamic, you want them to be Sharia compliant. That's like the foundation to the building, okay? You need that, but what you build on top of that has to be good quality and good value. Must be good quality and good value for these markets, for these customers. Okay, so this is actually a part for you. So we've got here 2 products. Well, same product, conventional and Takaful, maybe somewhat like Dr. Tarek's piece of steak, okay? Same thing, premium is 1,000, payout is 30 days, coverage is 500. They're both the same. How many of you would buy the Takaful product? Raise your hands. Raise your hands, please. I would, right? More, there must be more. How many of you would buy the conventional product? Why? If it's not Sharia compliant, why would I do that? So, okay, so most people said they want the Takaful product. Now, what happens? We've changed the coverage. Takaful product now provides the same amount. Conventional product provides 200,000 more. How many of you would buy the Takaful product? How many of you would buy the other product, the conventional product, with a higher benefit? Don't be embarrassed in front of your friends, okay? A lot fewer people are raising their hands, but I know that many of you are thinking, that's what I'd want, right? Okay? Next one, conventional and Takaful. Takaful has a payout of 30 days. Conventional has a payout of 2 days. Which one are you going to want? Conventional? Raise your hands. Yeah, we get some of them. Okay. And then the other way around. Now we have premium is more expensive for conventional. Premium is less expensive for Takaful with the same benefits. Who wants that? Takaful, right? We did a study in a country that is one of the most prolific of Takaful, okay? We talked to low-income people from all around the country, sampling effectively and like academics, and we went through and we did this study, something very much like this, more sophisticated, but very much like this. And what we found was that even in this country with its very strong Islamic culture, people chose the better product. They chose the product that gave them more value. I think we have to think about Takaful as something that is important, but it's not the primary factor that's going to get us to sell more product, to get more risk management in the hands of people, okay? So I think this is really important. Looking at this, I think when we think about Sharia compliance, this is necessary for Muslim clients, but it's not sufficient. What we need is products that have more value. And so what I want to take a few minutes to talk about is what makes more value. I think we've talked kind of high level on a lot of things, but we need products that people want to buy. Products that people get value from. And I call those suave. Simple, understood, accessible, valuable, efficient, simple products. We don't need complex products. We need simple products. When we're talking especially about low-income people, we need simplicity. We don't need all that language that regulators often require. We don't need all the complexities. We don't even need a list of exclusions. We shouldn't have that many exclusions. Make the product simple. Making the product simple makes it simpler for you to manage and therefore brings down your costs to offer it. Simple products. I often advocate that the product itself, the policy, should be the size of a business card. Very, very simple. It has to be understood. For, I want to say, hundreds of years, insurers have been giving information to clients that they don't understand. I have insurance policies that are, thick. I've never even read them, and this is my business, right? I've never even read those policies. That stuff is thought to be consumer protection, but it's not. If people don't read it, how is that consumer protection? We have to get people to understand their products. I saw this thing in Ghana. This work that GIZ had done to inform clients and the market to say, said something like microinsurance is a risk management mechanism that serves to protect people from the misfortunes of life, right? Why? People aren't going to understand that. Help them understand. If they don't understand your product, they're not going to want your product. It has to be accessible, not just when it's time to pay premiums or contributions, but when it's time for claims. We have to be able to provide them with access. Okay? It has to be valuable for them. If we give them a payment, if we give them a benefit that doesn't help them, that's not valuable. If we give them a benefit that takes 30 days when they need it today, that's not a benefit. We need to understand value. We need to understand our clients. We need to talk to clients better, more. We need things to be efficient so it keeps our costs down. We need to keep our costs down to be able to do this, because even in Takaful, we want a surplus. Right? We can't advertise that we're going to distribute a surplus if we don't make a surplus. So we need to be thinking about efficiencies. How can we get things down? And these are places, all of them are places where technology can potentially fit in. We can use technology to help people to understand. We can use technology to help increase efficiencies. We can use technologies to help make our products more suave. Okay? Let me just go quickly on. And then when we're looking at the countries and the markets where we work and we live, there are 4 things that we need. And without any one of them, you won't be successful. You need an enabling environment. Primarily, that's regulation. You need regulation that facilitates, it allows you to do what you need to do in an efficient manner, right? You shouldn't have to have every agent that sells your product be licensed as an agent by the regulator. It's crazy. It's crazy, and people aren't going to buy the product. Let's think about how can we make this more efficient. The enabling environment is also actuaries. We need more actuaries. In Nigeria now, I think you have 54 insurance companies and 27 accredited actuaries. Am I right, Yesidi? Okay, close to right. Okay? That's not enough. And you need them to understand Takaful and micro Takaful and these markets. Okay? You need to have an understanding of demand. What is it that these clients want and need? Your members have particular needs. How do you create that value for them? Okay? You need supply, you need insurers who are there, you need Takaful operators who want to serve this market and who make the effort to satisfy the principles and the objectives of Takaful, to work with those clients. Use technology where you can. Sometimes you can't. Not everyone has fancy phones, right? So you have to make sure that you're not excluding people through technology. You also need distribution. How are you getting your product out there? Okay? Let me go on to the next one. So you've got a lot of issues here through with technology. You've got the streamlining issues. You've got accessibility from demand. You've got mobile payments that we see on the distribution side, and you've got transparency and efficiency and important other components on the enabling environment side. This is critical for Takaful. It's critical for microinsurance. It's critical for insurance and for Takaful, for even the upper market. Why wouldn't you have Schwab products? Even for your upper market. Okay, so I've kind of rushed through this, but what I want to say is I like to be action-oriented. And so I also like to be practical. So what I hope I've given you is some practical ideas about how to make things better. If you don't have better products, it doesn't matter if it's Takaful or not. And your people will choose, not because it's Takaful or not, they will choose because it's a good product and it's Takaful. So some actions, all of you, this week. Before I go, a good product is what? Schwab, I heard it. Okay? Everybody, good product is what? Schwab, yes, okay? So, a couple things. Do a self-check on your products. Look at your products. Look at your regulations. Look at what you have and compare that against Schwab. I have things. Anybody who's really interested, I have things that can help you to do that. Okay? So just let me know. Talk to people. We don't talk to people enough. Talk to 5 people who are members, 5 people who are not members. Talk to them about your product. See what they say. So often when people do that, they get a surprise. Oh, that doesn't mean anything to these members. Okay? Do that. Consider ways that technology can help you get to Schwab. We looked at a couple of those. Also, discuss with your Sharia compliance board. I think the board shouldn't just pound you when you do the wrong thing, but they should help you to construct products in a way that makes sense, both for Sharia compliance and for your members. Okay? Do those things. I hope everybody can take out your phones, your phone cameras, and take a picture here, because I do hope that in August you all will do that. The one that you can't see says, plan for the changes you're actually going to make in September. Look through these things, think about these things, and then plan for implementation. Okay, thank you.
Thank you very much, Michael. And thank you to the audience for listening. We do appreciate giving us your attention. So, like we mentioned, we're talking about financial inclusion, and just to set some context, in 2020, we recorded 51% of the adult Nigerian population that were formally included. In other words, they had access to a formal financial account. Out of that, 45% of adult Nigerians are banked, okay? Now, only 2%, or approximately 2% of the adult population actually have access to insurance. But what we saw at that time, obviously it was during COVID, that 3 in 5 Nigerians actually report that they've gone through some kind of shock that's led to some unexpected expenditure,
And about 2 in 5, about 40% of people who go through shocks actually do nothing. So they just go through that stress. They don't have any effective coping mechanism, right? Those who have mechanisms that they use are using non-financial social mechanisms to cope with shocks. And so this is a very important conversation because we also know that today in Nigeria, we are going through several shocks. And this is an opportunity, like we had in our earlier sessions, for the insurance sector, for Takaful providers to step up and help Nigerians meet these needs that they have of coping with shocks. So thank you very much, Michael, for sharing some of those useful insights. I will go straight to the questions. Mr. Abdul Rashid, one of the key things that Michael pointed out is the issue of tailor-made products. We talked about SWAV products that are simple, that are understood, that are accessible, valuable, and efficient. Just so that we leave here with some practical steps. When we talk about simple and understood, what do we mean? And how do we drive simple and products that can be understood?
Thank you very much. So I'll just jump straight to your question. I think the first thing we need to do is to first understand the customer. And that brings us to research. Insurance companies or Takaful companies can't sit in the comfort of their offices and design products. They have to go out. And so I'm reminded of a product that was pioneered by Takaful Africa, TIA Africa. It's called IBLT, Index-Based Livestock Takaful Product. And what that product did was that they relied on data. They relied on data to predict droughts, to predict the number of claims that will occur. And once the claim, so there was a benchmark that was set. Once it falls below 15%, automatically claims are paid. And if you notice very well in Africa, most poor people, their wealth is in livestock. And so understanding the customer and creating responsive products. So we must identify their priority needs to be able to create SWAV products. Thank you.
Thank you very much. Before I come to accessible, I will come to you. But before, just Michael, can I ask you to speak a little bit more on simple and understandable? I mean, you talk of a policy that's on a business card. Is that possible? I mean, from other climes that you've been in, what do we mean when we say products should be simple and accessible, particularly because we're talking about financial inclusion for the unbanked, the underserved, rural women who are not educated?
So if you think about simple, we look at marketing, for example, in simplicity. And we oftentimes market, if we're talking about the rural area or even really low income urban areas, we talk about using posters that are visual. They have pictures and designs of people and processes so that people, even if you can't read, people can understand what they mean. I'll sometimes put them up when I do a presentation like this. I'll have somebody from the audience come, even if it's completely different language. They can come and they can tell me what that poster says. We need things to be very simple so people can read them. When we talk about a business card size policy, okay, what I'm saying is it forces you as the Takaful provider to think about, what do we really need in our policy? Why do we need to include that? Everything we have in a policy should be a question. Why do we need that? What's necessary here? How does that tell clients? On the front side, it should tell us what we're covered for. On the back side, it should tell us how to make a simple claim.
Thank you very much. And just to say, there's data to show that, particularly in northern Nigeria, 40% of people who are unbanked cannot read in English or do not understand English. So in terms of how we communicate our products as well, that's part of understanding, making sure that we're communicating it in English, in languages that people can understand. So if we move on to accessibility, and so here we're talking about distribution, because one of the when we talk about financial inclusion, at the bedrock of that, we talk about access to financial services, which means that there must be a touch point, there must be an opportunity for you to actually interact with that. So I want to go to Madam Fatima to ask, with regards to insurance, we've had some conversations around distribution and how you actually get into these areas where we have high exclusion. What is the regulator doing to enable penetration and distribution, particularly using technology? Because, one of the statistics that we have is that a lot of people who are taking up insurance products are doing this. Distribution is basically still within the financial institutions, the agents and the brokers. But we want to enable technology to drive penetration. How is regulation going to enable that?
Okay, thank you. From the regulatory perspective, we have some guidelines that are issues, and we try to simplify them. We know Takaful is part of a financial inclusion, but also to bring it to home at the very exclusive environment, the real rural area, we encourage the operators to do more of micro Takaful, which can serve those at the rural area, which it doesn't require so much. It's simpler than Takaful. It doesn't require so much resources to engage in. So with the expansion in micro Takaful, I think we'll be able to penetrate more at the local level. And talking about technology, yeah, rightly said earlier about regulatory sandbox, guidelines on InsurTech and all of that. Those will not work except you have the penetration first. When you have the penetration, people know about Takaful, micro Takaful, then you can now leverage on that using technology. So the first thing first is penetration, which we'll get through collaborating with the operator by deepening insurance, by having more awareness. When there's a lot of awareness, you have more people coming into Takaful business, people taking off Takaful, even at the micro level. And then when we get to that, we already have guidelines in place to assist technology. So when we have the penetration, it seamlessly, technology will seamlessly help to make it more efficient.
Okay, thank you very much. Mr. Abdul Rashid, I'll come to you as a player within the space. So just to piggyback, just to ride on what she mentioned, there is regulation, but we know that, non-interest finance, I believe the first regulation was in 2013 or thereabout. It's been over a decade, and I know that yes, we've made some progress, but we've not seen the kind of progress that we want to see, particularly with regards to how it has been able to drive financial inclusion. As a provider in this space, what kind of regulatory changes would you want to see, particularly around to facilitate this collaboration that we talked about, that we're talking about, for penetration's sake? There is, within the banking space, you see a lot going on within partnerships between the fintechs and the banks, the agents. There's a lot of handshake going on in that space. For Takaful and for insurance, what do we need to enable those partnerships, both from a regulatory and a non-regulatory point of view?
So for the regulator, I think the regulator should push towards interregulatory alignments, because you need other sectors to be able to deepen the market. I remember, I think there was a pilot that was done on mobile insurance, and I think it was quite successful in terms of insurance penetration. From the lessons that we've taken from that scheme, I think the regulator should take it further. So partnering with other regulatory bodies is very, very important. So with the likes of NCC, even for DMO, I've sat at Islamic finance sessions and I've asked those who are structuring sukuks, in your structuring of the sukuks, is there a Takaful element in it? So I'm expecting that our NICOM will begin to engage with the DMO, for this handshake so that we can increase penetration. So that's from the regulatory point of view. Product development, I mentioned research earlier. With research, you'll be able to identify the needs of the customer, their wants, what are the obstacles, and you'll be able to design products that will de-risk all those barriers to taking up insurance. So research is required, product development is required, and distribution. I gave an example in the back room. Babangona is an aggregator of maize farmers. If a Takaful company is partnering with Babangona, you have access. And so I'm expecting that the regulator would facilitate such kinds of engagements. Thank you.
Thank you very much. Michael, I will come to you just to provide some statistics. In 2020, 18 million adults without insurance, without microinsurance, were interested in microinsurance just because it was properly explained to them in a simple and clear way. 54% of them were banked, 86% owned mobile phones, 43% were business owners. Particularly for the low-income market, we've talked about partnerships to enable the reach to these underserved, people who are interested and are being served elsewhere. I want to also ask the question of, is technology enough? That we can enable this with technology. Is that enough to drive, microinsurance or Takaful, just to reach the financially excluded? Or is there more that needs to be done?
Thank you. There's more that needs to be done. Technology is critically important for helping us to improve distribution, to improve efficiencies. But what we're finding, let me say as an example, two of the largest micro insurance organizations in the world were Microinsure and Bima. Both of them have been in Nigeria. Both of these expected to do this completely through mobile phones. And what they learned was that you can't just do it with mobile phones. People aren't going to just buy with an SMS. You have to have some level of interaction, human interaction. That doesn't necessarily mean one-on-one. It means people that they trust, helping them to understand. And so there is this level. Let's use technology to have our transactional efficiency, but in terms of getting clients to understand the product and purchase the product, there is a level of human touch, if you will, that is necessary.
Thank you very much. I've been told that we have 1 minute. Before we wrap up, I'm just going to take one question. If there's any question from the audience. Do we have a question? Okay. If not, for the sake of our time, I'm just going to wrap this up based on some of the things that we've spoken about. So we've heard about the importance of client-centric products that are simple, understandable, accessible, valuable, and efficient. And we've heard also that technology can enable some of these things, but it is not enough. We've heard that regulation should facilitate some of this collaboration that needs to happen between Takaful providers and the traditional players to ensure that we reach the unbanked and the underserved. I just want to also mention that, Michael had given us some insights, again, back to research that Mr. Abdulrashid mentioned about, as a CEO, as a manager in this place, we really want you to take this step because financial inclusion is important to everyone on this panel, and I'm sure to the the organizers as well, please, when you go back, get somebody on your team to carry out the research that Michael talked about. Speak to 5 people who are users, speak to 5 people who are not users, get to understand, again, get to understand your client or prospective clients so that you can design products that can be useful for them. Again, back to our key message in this panel is that Takaful is good, technology is good, but these are necessary but not sufficient factors to drive the uptake that we want to see. Today in Nigeria, like I mentioned, we have 1% formal financial inclusion. The National Financial Inclusion Strategy expects us to hit 95% by 2024. We are hoping that Takaful can play a major role in helping us drive financial inclusion, but beyond that, financial health of Nigerians. Thank you very much for listening to us, and thank you to my panelists.
Another round of applause for our panelists, please. They have done well to manage our time. So while they take their photograph in just a few seconds, we will have our next panel. The next conversation looks at capacity. The next conversation looks at the need for collaboration within the Takaful industry. And on this conversation, our moderator is none other than the COO of CityServe Limited. Jibril Abdullahi Salahuddin holds degrees in accounting, finance and control, business administration, and Sharia. He also has multiple postgraduate degrees in fields such as economics, management informatics, Islamic finance, and development finance. Mr. Salahuddin has held managerial positions in sales at Promasador and at the National Oil Downstream. He worked as manager trainee at the Islamic Bank of London. He also happens to have served as general manager at Security Print Nigeria and currently holds the position once again of executive director at CityServe Limited. Mr. Salahuddin and his panelists will join us in just a few moments on the stage. And I do want to take this time to say a big thank you to you. You have been a lovely audience. And if you feel yourself waning, a sip of water would do you well, I promise. If you don't want water, we can get you some juice, a little sugar in your system. Right, so I think that the stage is set and ready for them, and they will make their way out immediately. I don't want to preempt Mr. Salahuddin by introducing his panel. He joins me on stage in just a moment. There he is. A round of applause, please.
All right, good afternoon, ladies and gentlemen. This afternoon we will be taking very little time, and but we promise we're going to have an engaging time, quite engaging. We will be talking to the topic of collaboration, and collaboration, that's what we'll be talking about this afternoon. And I have an important, very, very important panel, starting with Dr. Wan Zarre. Please come out to the table. Please give him a round of applause. Like I said, we're not going to take a lot of time. We see that quite a lot of people are tired, but I can bet you this is going to be a fascinating moment this afternoon. Dr. Wan Zarre will be leading the discussion this afternoon, and he will be doing a presentation. And he will also thereafter join the panelists, and we'll be asking them a few questions. Dr. Wan Zarre is the pioneer MD of No Takaful, and one of the pioneers of Takaful in Nigeria, and a very respectable person at that. Dr. Wanzari, please. I will also be calling on my sister. I call her Ajia simply. She's one of the pioneer of the, Doctor. She's one of the pioneer, actually the pioneer of the insurance industry, Takaful industry in Nigeria as a window. And she has had a lot of contribution towards the development of Takaful in Nigeria. May I invite to the table Ajia Taibat. Please give her a round of applause. I will invite my host last, but before I do that, I will invite my brother Ibrahim Shehu, who is the current MD of Jais Takaful. And he so much also have no Takaful engraved at the back of his suit. So I will invite him to the table. He's a marketer like myself, a salesman, and very seasoned at that. Please give him a round of applause. Thank you, brother. Okay, so last but not the least, I'll be inviting brother Mr. Suman to the table, to the high table, to join the panelists. He's the current MD of No Takaful. A round of applause for him, please. May I please invite Dr. Wan Zerme to do his presentation on the need for collaboration in the Takaful industry.
Slides. Okay. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and very good afternoon. I'm sure you're missing lunch. This is past your lunch time. Past 2. 50 minutes past 2. We will not take too much of your time. We will not take your lunch time away from you. My name is Wan Zamri, Wan Ismail. I'm from Malaysia. So as the first MD of Nur Takaful. Thank you for the organizers for inviting me to be with you this afternoon. What I'm going to do is to share with you what we did for Takaful in Malaysia, how we collaborate. So my short presentation will discuss, I will share with you the areas of collaboration between the Takaful operators in Malaysia and how Takaful operators in Nigeria can learn, lessons to be learned, and how we can adopt some of the strategies taken by the Takaful Association of Malaysia to deepen Takaful in Nigeria, to strengthen the industry in Nigeria. I'm also happy to see Mr. Juf is also here, all the way from Gambia. Welcome, Mr. Juf. Juf is my old colleague. And can we start the presentation, please? Okay. Okay, in a free market economy, not in a communist economy, in the free market economy, you do all these things to compete. In the free market economy, we do all these things to compete. Where either you accommodate, you avoid, you compromise, you compete, or you collaborate. Whatever you want to do. Either you compete has this good positive aspect, it has a negative aspect. If you want to accommodate, there are also positive, negative aspects. If you want to compromise, there are also positive, negative aspects. But what we're going to discuss today is to collaborate. You see in this graph, collaboration has the highest points in terms of level of cooperation and level of competitiveness. So our aim is to go for collaboration. Competition will still be there. We still need to compete. Okay, sorry. So in our industry, we need to collaborate. We sometimes need to compete, But most of the time, we need to collaborate. Sometimes we need also to cooperate. I'll discuss briefly the areas that we're looking into. Either you compete, you collaborate, or you cooperate. What is competition? It refers to a situation in which individuals or groups or entities vie against each other to achieve specific goals, to attain a reward. It involves rivalry. Compete means you want somebody to lose and you want to win. Competition means win or lose. Is that good for the industry, for Takaful companies in Nigeria? I'm sure that's not good. We want all the Takaful operators in Nigeria to succeed. Or competitions are also subject to rules and regulations, because as the regulator, they want the players to compete in a healthy manner. So there are rules and regulations which we have to abide to. In terms of cooperation, refers to acts of individuals who work mutually to achieve mutual goals. But then this is still not the ultimate, this is not the form of cooperation. We need to go to the next step, which is collaboration. Collaboration means it's a win-win situation. Everybody wins. There's no loser, there's no winner. Everybody wins. So the aim is for us to collaborate. Where we can, we have shared goals, we have open communication, there's synergy, there's trust and respect, and there's consensus building. To Takaful in Nigeria, we listened this morning that what is the state of Takaful in Nigeria? We're still very small. We command the share for Takaful in Nigeria in terms of the insurance shares, that's less than 1%. So there's a lot of room there where we can work together, where we can deepen our penetration and hence increase our market share. That can be done only through collaboration. So these are the differences. I'm not going to go in detail on the differences, but I will go straight to collaboration. Collaboration means to achieve shared common objective that benefits all participants. It emphasizes working together as a cohesive unit to achieve certain collective outcome. So the Takaful operators in Nigeria need to identify what are the collective outcomes. The main collective outcome of Takaful operators in Nigeria is market share. We want to increase from our meager less than 1% share of the market share to higher goals. How can we do that? Through collaboration. Collaboration requires high level of integration, where participants actively share resources, ideas, responsibilities, and decision making. The outcome is achieving shared goal with all participants, contributing to and benefiting in the final result. It involves a win-win attitude, seeking benefit to all parties involved and finding solutions that meet everyone's needs. Now I'll go to the most important thing. Why do we need to collaborate? One, we need, because of synergy. We want to achieve synergy, innovation, expertise. Takaful players can work together by combining their diverse skills, knowledge, and perspectives to create innovative, unique Takaful solutions. The market is waiting for Takaful in Nigeria to come up with solutions that meet their needs. We have a lot to offer. The values of Takaful are noble values that can capture market share. But to do that, we need to do it together. And the most important thing is industry advocacy. We have our regulator here. When we meet the regulator, meet as a cohesive team. We should not meet the regulator to air our grouses with the regulator individually. This is lesson learned that when you meet the regulators, go and see them as a group. We have shared values, shared problems that to be managed, to be solved by the regulators. And number 3 is resource sharing. You can share a lot of resources, technology, data sharing, training. We can leverage on each other's strengths to achieve this. So these examples are areas of collaboration that I'm looking into. Data and analytics, collaboration, data sharing can help Takaful to gain deeper insights into customer behavior. Risk assessment, fraud detection. By pulling this data, we can effectively analyze trends and patterns to make better underwriting decisions. Fraud prevention, for example. Takaful operators can collaborate on fraud prevention initiatives, sharing information. I have 3 minutes, okay. And then we can do, set up industry standards and best practices. We are Takaful, we are new. We are not tied up to the, to all habits. We can come up with new habits of doing business, new standards of doing business. How do we do that? As a group. Let's say if one Takaful want to do something good, something which is ethical, if everybody, all the Takaful operators approach this ethically, then the whole industry will look as an ethical industry. We don't have all baggage of the insurance industry. We can create new ways of approaching the market. Then we have risk pooling, for example, and then educational awareness. We can do it together. Then industry research and thought leadership. This also can be managed. So the most important thing now, this is, I have the remaining 2 minutes, is the case study. How these collaborative efforts are undertaken in Malaysia. As you see, the Malaysian Takaful industry is more than 30 years. It is quite old, okay, but still young as compared to in Malaysia. It is a legal requirement that all Takaful operators must be a member of the Malaysian Takaful Association. It's a requirement. It's a legal requirement. It's a regulatory requirement that all Takaful operators must be a member of the Malaysian Takaful Association. It's by law. Maybe our regulators in Nigeria has not come to that stage yet, but let's start first. Let's start that thing. Okay, its main purpose is for self-regulation. Industry self-regulation through uniformity in market practices and promoting high-level cooperation. Okay, that's good. But so these are key initiatives of the Malaysian Takaful Association. They have a plan that by the end of 2024, some or major Takaful products will be affordable, simple, in the marketplace where we have established easy reference program. So the purpose is to ensure that Takaful products and solutions are available to the market at affordable prices and in a manner that is easily accessible. So this is the main thrust. This is the plan. It's called value-based intermediation, set up by the association to ensure, for example, financial resilience among the players, community empowerment, good self-governance, best conduct, capacity building. So they have all these initiatives drawn up that by a certain period of time, 2024, we will be able to achieve better market penetration. These are some of the activities. Let's look at some of the subcommittees. These are real committees, technical committees that is been set up to realize, to functionalize our efforts towards collaboration. For example, we have the finance subcommittee. Yes, these are areas we look into our subcommittee, the finance committee, to recommend, the accounting standards and when including sharing of data. Then we have the family business technical committee, where we share information on how to strengthen our family business. Okay? Then we have the Takaful subcommittee to synergize, to have better Takaful solutions to our business. Then we have family distribution, how to sell family Takaful products, how to distribute our Takaful products in a fair manner, effective manner, so that we can have a higher penetration rate. Then we have for general business, how to distribute general Takaful business, and then governance, to ensure that all the Takaful operators under MTA will have what we call is self-governance. Okay, to ensure that meet our role as the responsible corporate citizens, and to what we call it, to contribute to the growth of the Takaful industry. Okay? Then we have corporate communication. In certain issues that affect the Takaful industry, we speak as one voice to the public. In certain issues that affect the industry, we speak as one voice. So we have issues, let's say, people complaining about Takaful, so we speak as one voice to the public. Okay? Then we have claims and operation. And then we have Sharia advisory. Finally, we have this basic examination, where all Takaful agents in Malaysia, under one umbrella, will have to go a basic Takaful examination so that they will go to the market as informed agents. So this is done under the umbrella of the association. So no Takaful agent in Malaysia can sell Takaful products unless they go through this examination. This is a joint effort by Takaful operators to ensure that our agents have basic knowledge on Takaful Islamic finance. So with that, I end my brief presentation. Thank you very much. Thank you, sir.
Thank you very much. Thank you for bringing the paper, and thank you for noting that it will be of no use. The presentation is highly enlightening, and what I see, and I can deduce from it, is collaboration and competition. So you can actually collaborate to compete, and that is very, very deep in itself. And you can draw parallel from quite a lot of industries, even in Nigeria. I will not take hook, line, and sinker what you've done in Malaysia and try to juxtapose it in Nigeria, because these are two different markets. However, there is so much to learn from this. But before I go into the details of that, I will allow the panelists to actually look at each of the items that you've brought forth. Starting from my far left now, I will ask my sister Ajia to look at the issue of capacity development within the Takaful industry in Nigeria and how we can collaborate to actually leapfrog in terms of our capacity as practitioners. Thank you.
Assalamu alaikum warahmatullahi. Actually, if you look at the Takaful industry, there's need for real capacity build. Assalamu alaikum warahmatullahi. Just thank you very much, Mr. Moderator. When we say capacity building in Takaful, I remember Takaful came to Nigeria far back to 2003. As at that time, there was no regulation, even hardly most people understanding the knowledge of Takaful. But alhamdulillah, today, Takaful is growing. But unfortunately, we still need to build the capacity, or else it's going to take a time when we not have most people to be so dedicated to take up Takaful. So how can we build this capacity? First and foremost, some speakers spoke on IT. Currently in Nigeria, we don't even have start to finish Takaful infrastructure in place. It's a very big challenge if you really want to automate Takaful. Currently, we are dealing with a particular provider, and that provider is using us as guinea pig to build its own capacity. That is collaboration. He is even giving us freebie, if I can use the word. So the extension of what he has done in the past is a way to build it to suit other Takaful operators. We are ready to give the knowledge. So if we continue to do this, definitely it's going to help the industry to grow better. That is one leg. Another thing is our agents. In order to avoid misrepresentation, There's need for us to give constant training to avoid misrepresentation of Takaful. Currently, we have very limited financial planners, marketers, dedicated individuals that is willing to take up this Takaful. So the more we do this, definitely is going to help us. For me, I always believe, let's catch them young. Let's move as a team of Takaful operators to most of the tertiary institutions, to most of the secondary schools, so that they can equally incorporate it as part of their curriculum. The more we do this, the better for us. If you look at Nigeria as an industry, as a nation rather, we realize in the past, we have what we call practice and principle of banking. I doubt if it exists as of today. Nothing stops us from having practice and principle of Takaful in most of the tertiary institutions. I believe the more we do this, the more it helps the industry. But also, we need to continue to organize training, either for group, for association, or even within our local area. We need to do more of this. Like the program we are here to tap knowledge. Workshops, conferences, seminar. The more we do all this as a team of Takaful operator, definitely is going to continue to build it and to even make the industry to be more stronger and other international world become and tap from our knowledge. Thank you.
Thank you very much, ma'am. And that is Ajay Taibat from Hilal Takaful, talking to us about capacity building. Please give her a round of applause. Okay, so I will quickly go to my friend, Mr. Ibrahim Shehu, to talk to us about how we can collaborate about Takaful operators and how we meet the operators, between the operators and the regulators, and how we need, what is the synergy that we need to build in this regard. Thank you, sir. You have 1 minute.
Hello, thank you very much, the moderator and everybody. Afternoon. I want to look at this in 3 major perspectives. First and foremost, we have 3 major stakeholders I would consider as an operator. Now, first is the regulator. You need to be licensed to work. So for us, we need to work as a team to ensure that our relationship with the regulator is excellent. I must say at this point that NICOM had been very cooperative, supportive, and had gone extra mile to ensure that Takaful operators really succeed. And but there are still a lot, because first, in terms of compliance with regulations, in Nigeria today, we're still talking about minimum share capital and companies. And I know that all companies, all operators have received letters from NICOM telling us to inject funds into our operations and all of that. So we need to do a lot in that respect, collaborate with NICOM a lot to ensure that our operations are actually smooth and hitch-free. That's one major stakeholder. Then the second one is between ourselves as operators. Because when you market, and if you are a well-good driver of insurance, you know that no one company can take business all itself and alone. So in that wise, and based on our principle, we need to share businesses together through FAC, where you take businesses that are much more higher than your capacity, you FAC it out. Then you have internal co-arrangements where you help one another to grow. And the next other stakeholder is the customer themselves, the participants. And in this participant, I still mean the brokers are part of it. We can be broker-centric. We concentrate and select friendly brokers to deal with, which is very, very important. The NIA are stakeholders. Our participants, we must know that our product, just as was shared, must be simple. First, for every product to be taken by a participant, it must at least meet 3 criteria. 1, they must trust the brand. The customer must believe in the brand or the model that you are selling. 2, the product must meet the customer's need. In other words, any product you are selling must solve some problem for the customer. When it solves the problem, it then meets his needs and it again gives him value. Because these are three critical things that every product must meet before it gets the support of or the buy-in of any participant. First, he must know the model or what you are selling. He must, must necessarily see that, yes, it solves his problem. So it means for us, for instance, for ethical products that we sell, for average Muslim, yes, it's a problem in terms of interest, so it's a problem solver for him. And again, he must trust the process and the operators and the brand. Because trust for every business is key. If you don't have trust, business will hardly flow. So these are major steps we must take to ensure that our customers and our collaboration between all of us happens. Program like this, for instance, we've always said through the Takaful committee, which was anchored. Fortunately, I think I will give credit to Nur Takaful here for the fact that they initiated the issue of Takaful committee. And we took this up to the regulator, and the regulator championed it and said, look, we're going to work along with you on this drive so that we have it much more collaboration. In the same light and in the same vein, regulator led us to Casina last year for sensitization and awareness campaign. It was a huge success for all of us. At that forum, we're not talking about Jais Takaful, Nur Takaful, or Salam Takaful, or Hilal Takaful. We're just talking about Takaful, so that people will appreciate the value in Takaful and what they stand to benefit, different from what they used to. So there's a lot more to do, and there's much more for us to do as operators. But I think largely, to an extent, our board of directors needs to support us as well, because they set the objectives, they set the fees, they tell us what to do. And so therefore, as we are being guided by what they've said, we need to engage them to appreciate that a lot needs to be put in terms of resources and support, so that we'll be able to deliver and achieve the goals for which we are set. And I think this is one major area of collaboration that I think I'll mention. Thank you, sir.
Thank you very much for this. Please give him a round of applause for this. Thank you. It's interesting. I attended a function after the Ramadan, and myself and Hajia Taibat were at the function. And a judge in a state in Nigeria asked a question. She stood up and asked, is Takaful legal? You're all quiet. My hand was trembling. She asked. So I said to myself, if somebody has taken a motor vehicle cover from a Takaful company to our courts, she will send the person to prison. She asked, is Takaful legal? And this is what is driving me to my next question, which is on publicity and marketing, which I'm going to direct to Brother Simon. How do you collaborate in terms of publicity and marketing as Takaful operators in Nigeria? Thank you.
Thank you so much, Mr. Moderator. I think the MD of Jais, Takaful, has spoken about the importance of we collaborating for publicity's sake. But I want us to look at the model Takaful itself. If we really review Takaful as a model, I think Takaful is all about collaboration. It's all about cooperation. It's all about risk sharing. So all these elements are already embedded in Takaful as a model. So I see no reason why, as operators, we should see ourselves as competitors. We are yet to even scratch the surface as far as Takaful penetration is concerned in Nigeria today. And also, I want to look at it based on your question, publicity and marketing. I pick on publicity. Publicity is letting people know, understand your model and what you said. That's all about publicity. Now, if you are talking about publicity, let me cite an instance that it relates to collaboration now. On the average, if you want to have a billboard strategically located in Lagos today, you expend a minimum of 1 million monthly for a billboard in Lagos. Now, if you want to run that for 12 months, that's 12 million. Now, we all know in Lagos, as businessmen, if you want to be strategic about this, you need to have a billboard on the mainland, and one on the island. That's 24 million in a year. That is huge for a Takaful operator. Now, if we collaborate, if I'm looking at the billboard, what am I looking at? My company logo, my locations, and my products. If you come together and collaborate, we can have the same billboard at a cheaper rate for each of us and also get the mileage that we target. So that is where the issue of collaboration would easily come in when we talk about publicity. Now, through publicity, once you've been able to sell your products or create that awareness about your product to the market, your marketing activities will become easier. The people you want to sell your products to already know about your product. They understand the features of your product. So it is easier for you to sell. You waste less time and you waste less resources. So thank you.
Thank you very much, Rasman. And you can see the power of collaboration, and he was able to simplify it in terms of the economics of it. We can look at collaboration and see the way it's going to benefit us. I've been given a paper that we have 3 minutes to go. But before that 3-minute roundup, I want Malam Ibrahim Shehu to speak to this issue of publicity and marketing as well.
All right, thank you very much. First and foremost, before you start going into publicity, you need to understand the market requirement. What does the market need? So right from product development up to the target area that you want to market, you must be very, very strategic. Otherwise, you just be working in the wrong direction. You can be working hard, but not really hitting the target. So first and foremost, we as Takaful operators must work to create the necessary awareness. And how can that happen? Now, you have about 3 medium with which you can make publicity. First, the print media, which is again very important. Then the electronic media, which is through the television and co. Then the one that you carry out physically. I can just give you an example. Only recently we did a road show in Abuja. And what will surprise you is that your next door neighbor does not know what you are even doing. So we need to move fast. We need to meet people. We need to go with our flyers. We need to have people that can talk to people, to associations and the rest. And everybody that needs to, all insurance consumers in Nigeria must get to know about Takaful because of the value addition in it. And it is important for operators to know that when you are marketing, your strategy is that you must have clear market segmentation and demarcation. And then you deploy energy and resources to target that. Because if you target strategically, you'll be able to spend less effort, less resources, and then you'll be able to achieve the result. And by the time the companies are well funded and we have the resources to do what we need to do, I can tell you, in Nigeria today, the rate at which, or the position of the Takaful industry is even less than 1%. But the progress in terms of growth is so geometric that if we are really strategic in our marketing and we're able to achieve the target and meet the goals, we can achieve supersonic speed of growth within a very short time. And the SMEs, let me just mention this point. The micro, small, and medium enterprises are major areas. They're virgin land for us as Takaful operators. When you make the huge sums, please create the retail space, create the market segments, have Takaful ambassadors all over, grow the market, have them in clusters and groups, and then you'll be able to talk to them individually. You have coordinators running in all locations. You don't necessarily not have physical offices there. With technology and all of that, we can have people that can run all of this, create franchise offices where people can relate with us without necessarily having to see us at the head office or at the branch offices. And people will be our customers without even having to know where we are and how to find us. So I think it's important. We all need to work, and we need to be very, very skillful. We need to develop our skills and capacity to be able to know what to do and how to do it, and at what time are we supposed to do it right. Thank you very much.
Thank you very much. And the rounding up thought, I will not be, unfortunately, this panel session will not be asking you to I will not ask you to ask question here because we've taken our time. A number of things have come out very clearly. Our collaboration with the regulators is very important. Our collaboration among ourselves is very important. There are skill gaps that we need to fill. There are marketing and publicity gaps that we need to fill. And there is also data that is actually missing within the industry. Today, if I have to rate all of you operators in Nigeria, Takaful operators in Nigeria, on the basis of your publicity and marketing, on a scale of 10, 10 being the highest and 1 being the lowest, I'm sure you know what I'm going to score you. Yeah, and my marks are not very cheap. My marks are not very cheap. Your marketing collaterals are also not there. You're talking about billboard, the smallest of things you are not doing. You're looking at billboard, that's too big. You're not doing the smallest of things, and you need to do them and do them consistently before you become successful. So on the note of this, we say thank you very much for being a wonderful audience, and good evening.
Please, a round of applause for them one more time. Dr. Salau decided to bring a little fire to the game. Ubuntu is a Southern African philosophy, and it essentially means I am because we are. And this conversation that speaks to collaboration clearly tells us that without Jaiz Takaful, you can't talk about Nur Takaful, you can't talk about Hilal Takaful, and this is why collaboration is critical to growing the sector in the country. Now, our next panel is very much ready to speak to you on capacity building in Takaful. The moderator, I have the pleasure of introducing. You actually had the pleasure of listening to him much earlier in the day. He gave us our opening prayer. Professor Abdul Salam Onogun is a professor of Islamic economics and finance. He holds a doctorate degree in Islamic economics law from the International Islamic University in Malaysia. Professor Onogun has worked as a senior manager in Noor Islamic Bank in the United Arab Emirates. He's currently managing director at Dar Gitmir Smart Consultancy, and also an adjunct professor at Hamdan bin Muhammad Smart University School of Business and Management. Nur Takaful, he's not a stranger. He happens to be a member of the Advisory Council of Experts. Now, I must warn you, this panel, and please, Professor Onogun makes his way to the stage. This panel happens to be full of academics, but they have promised us that they will keep within an acceptable time frame. So by the time they're done, if they do keep within this time, they deserve a resounding applause, because we all know what it's like to sit under professors in school. A round of applause for Professor Onogun.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon, everybody. Based on the time, as we know that the time is money, the time is life, and Islamic finance and Takaful also based on money. So we need to manage the time. But the topic we are going to talk today is one of the things which is our discussion today is the thing which is very important in Islamic finance, specifically in the Takaful undertaking, Takaful business. So without in managing the time, I would like to call our sorry. The time we have, I would like to call our speaker and together with the panelists. So I'm having the problem with everything. So our speaker today is Mr. Farhan Noor. Mr. Farhan Noor. And the panelists which we have leading by Professor Binta from BUK. So, and we have in our panelists Dr. Yesterday, okay, Kasim Oyitayo. Thank you very much. You are welcome. And we have Abimbola Teamiyu. So thank you so much. So without further delay, we will allow our speaker today to talk on it because of the time. So to talk about the capacity building in Takaful business. So over to you.
Thank you so much. Can I have my slides, please? Bismillah ar-Rahman ar-Rahim. So within the next 10 minutes or so, I'll basically be talking about the need for capacity building in Takaful industry or Takaful sector. And I'll basically be answering two big questions in my talk today. The first big question is, why do we need to invest in capacity building of Takaful? And the second big question is, how can we exactly go about doing that? How can we invest in capacity building? So these are the two big questions that I'll try to answer in my talk today. Before I do that, let me just make very quickly a few preliminary points. The first point is that when I talk about, rather when I use the term capacity building, I actually mean three things. First is the development and strengthening of the infrastructure. The second is the development and strengthening of human resources, and development and strengthening of institutional capabilities. So these are the three things that I'm basically referring to when I use the term capacity building. And this is important because many of us believe that capacity building and human resource development is interchangeable in terms of definition and concept, which is not really so. Capacity building is a much broader concept and which encapsulates human resource development. So this is first point. Second point is that capacity building is not the job of just one person or one institution. It's a collective effort. It's a collective responsibility. So the government has to pitch in as well. They need to show political will. The regulatory and supervisory authority then needs to take charge. The institution and the individuals, the professionals, then they need to actually play their part and contribute their bit in their respective capacities and mandates. Another point I want to make is that capacity building is not something that you do overnight, right? It's not something which is done in a year's time or a couple of years. It takes decades, basically. So the best time for capacity building for any sector of Islamic finance industry is actually right now. So if you haven't done it 10 years back, you have to do it today. You cannot wait for tomorrow because you need to plant the seed today in order for the tree to bear fruits tomorrow. So with this, let's get back to the two big questions. The first big question is, why do we need to invest in capacity building of the Takaful sector? And you can understand this, rather you can answer this question from two different perspectives. The first is the negative outcomes, and the second is the positive outcome. So what will happen if you do not invest in capacity building? What would be the negative outcomes? First and foremost, the Takaful market will stagnate. Okay, so no new products and services and solutions and technologies will come to fore. The Takaful market will be vulnerable to external shocks, susceptible to economic downturns, which means that the market will be less resilient and less stable. Similarly, the Takaful market will witness an abnormal increase in the cost of doing business because of operational inefficiencies kicking in, which means that the institutions, they will find themselves bankrupt and insolvent, okay? And Takaful market will also find that they will not be able to cater to larger segments of the population. So financial exclusion will become a reality. And ultimately, you lose all trust and confidence in the Takaful market to deliver on its promise, which would basically signal the death and destruction of the industry. Now, this is the negative extreme of what's going to happen if you're not going to invest in capacity building. So this is an imperative. This must be done. From the positive perspective, the positive outcomes of investing in capacity building. Okay. First and foremost, you will be able to secure, strengthen, and promote integrity, which means that you'll build trust and confidence and credibility in the Takaful sector. Second positive outcome is that you'll have a robust legal and regulatory framework, which means that you'll be able to safeguard the interest of different stakeholders, which means that the Takaful market will be more resilient, more stable, and more adaptable to market changes. Third positive outcome is that you will have a highly skilled workforce, and having a highly skilled workforce means that you'll have high quality products and solutions, you'll have innovation and competitiveness, not competition, but competitiveness in the Takaful industry. Fourth positive outcome is that you'll enhance accessibility and affordability of the Takaful products and services, which means financial inclusion. In other words, you'll be able to reach out to a wider segment of population, be it low-income families and small businesses as well. Another positive outcome is that you'll be able to leverage technology for advancement, which means that you'll achieve operational efficiencies. The cost of doing business will radically reduce, and you will drive and foster innovation as well. Another positive outcome is that you will build or foster synergistic collaboration among stakeholders. And this is important because you need to have a unified ecosystem where each stakeholder and each market player is coordinating and collaborating and cooperating with each other, sharing their resources, sharing their knowledge, transferring best practices to different stakeholders. So this is also important and one of the positive outcomes of investing in capacity building. And last but not the least, you'll raise the public awareness and education about benefits of the Takaful. This obviously is important because given this outcome, you'll have well-informed population about the benefits and features of the Takaful. They'll make better informed decisions, and demand for Takaful products will increase radically. So these are some of the reasons why you need to invest in capacity building. Now, the second big question, how exactly to go about doing this? So when we talk about integrity, the first thing that you need to do is you need to have a value, a vision, mission, value statement for the Takaful industry at the national level, regional level, international level. You need to have a clear roadmap and a strategic game plan, a strategic plan of what you need to do or what you want to do within the next 5 years, 10 years, 15 years. You need to have a roadmap and a plan in place. Okay. The second thing is you need to establish a robust governance and compliance frameworks. And this is important because two of the most important governance principles, which is transparency and accountability, this needs to be increased. And this can only happen through proper frameworks. Another thing that you need to do is adopt global standards and best practices. And whereas there are many different benefits of adopting international standards, one of the most important value proposition of standardization is that you achieve consensus and you avoid reputational risk. Okay. Last but not the least, you have to institutionalize ethics. And I always say this, that one of the most important topics in the world of Islamic finance is also one of the most neglected topics, which is ethics. You have to embed ethics in your core culture and your core operations so that every stakeholder basically hold themselves accountable to higher standards of excellence and conduct. I'll skip most of these points because I don't have the luxury of time, but I just want to highlight a couple of points. Okay, let's take the last one. Engage religious leaders and scholars. So when we're trying to raise public awareness and educate the public about the benefits and features of Takaful, one of the important things that we can do and should do is reach out to religious leaders, because these are influential individuals and their advocacy and endorsement for Takaful is going to go a long way in driving acceptability of Takaful as a financial risk management tool and as a product. So this is something that the industry needs to do. One last point I want to highlight is succession planning as well. This has not been talked about in this conference up till now. I just want to highlight and make a point here that we have leaders and they have incredible level of knowledge and insight and wisdom in Islamic finance, how to get things done. What happens is, because of lack of succession planning, there's the knowledge, the insights, the wisdom is not transferred to the next generation. So the next generation have to start from the scratch rather than build upon it and take it forward from there. So there has to be some kind of platform, mentorship programs or something like this where, succession planning is duly catered to. I think this is it from my side. Assalamu alaikum.
Thank you for your making the management of the time. In order to summarize what he has already discussed, he discussed on the two important things. One of the important, which is mentioned, is why and how to invest in the capacity building. So capacity building in Takaful is one of the things which is important, especially, and how to build this. The panelists, I will try to, is to build the bridge to fill the gap between the practice at the same and the academic, the practice and the people at the institutions. They are the one who will help the industry players in order to develop, to build the capacity building. The second point, which is also very important point, is the management, the capacity building, the human resources, and the management of this. So without further ado, I would like to ask Prof. Binta, in order to, what is the contributions of the institution, the university, in order to build the capacity building, and what are the things which is needed from the market players, those who are in the markets. Thank you.
Assalamu alaikum wa rahmatullahi ta'ala wa barakatuhu. Thank you very much, moderator, for this important question. And thank you, Mr. Noor, for the presentation. Among the aspects that have been highlighted in the presentation regarding capacity building, I think the university comes in as an important player in terms of, the human resource development issue. That is our major area of expertise. For the International Institute of Islamic Banking and Finance, we are set up primarily, to offer degree programs in the area of Islamic finance. And we offer both professional and academic masters, as well as postgraduate diploma in the field. However, we came to realize that, more is needed, much more is needed in terms of building capacity, apart from simply offering degree programs. And therefore, the university started deploying hands-on short certification programs in different aspects of Islamic finance: Takaful, capital market, and banking. In addition to that, we also realized that there is a major disconnect as far as the regulatory aspect is concerned. What makes Islamic finance Islamic is the Sharia governance, most certainly. But we discovered a disconnect between a lot of our Islamic scholars and the Islamic finance industry. And therefore, we have been deploying, interactive sessions with Islamic scholars through our Sharia Scholars Forum to bring Islamic finance, to the table and discuss it with the Islamic scholars in order to enhance their understanding as well as their buy-in into this important field. Another major thing that the Institute has been doing is enlightenment, mobilization. Whether we like it or not, our major challenge in the industry is lack of awareness. Even, unfortunately, among the Muslim majority communities, there's very little awareness and understanding of Islamic finance. And for us to succeed, we have to increase awareness creation. And what we found out is that, especially in the northern part of Nigeria, lack of awareness is compounded by the problem of lack of or inadequacy of financial literacy, and which is, you may extend a product of, our level of education generally. So to enhance this buy-in, we need to improve financial literacy, we need to improve awareness creation, and the Institute is doing a lot in this regard in collaboration with some of the players in the industry. But coming now to your second question, what do we want from players in the industry? Well, one thing, support. We definitely would need players to come together and support our type of institutions so as to enhance our capacity to deploy, training and capacity building. So what I will ask is, when you make those profits, please reserve some of them, for institutions that you are benefiting from. Because when I came in, I looked at the audience and I saw that many of the faces are familiar to me through the, either they have gone through our master's programs or they have participated in our short training courses, And I also know that so many of our students are doing well in virtually all the non-interest financial services organizations in the industry. They are occupying key positions. So you need to start to be giving back, build our capacity by supporting us. You know, today, Islamic finance and the institutions that are working to build capacity in this particular sector need themselves to be strengthened. So this is what I ask, this is what I expect from the industry. Thank you.
Thank you so much. One of the important area, which is in academic or in the university, which mentioned by Prof, is that the industry players, they don't invest in most of the courses which has already developed, either on Takaful. So these are the things that, so we'll ask question when it is time. So now, without further delay, our doctor yesterday, Kasim. So we would like to, my question is that in our meeting in the A's, we used to say that, the agent in the Takaful who do the marketing, most of them, they have, the brokers, they have the training, from the insurance. So what are your institutions, what is the contributions you have done in order to develop the capacity for the Takaful insurance in order to make up the market? So, and what are the courses you have in place? So in order to help to build the capacity and human resources in the Takaful. Thank you.
Thank you, Mr. Moderator. Again, let me quickly clarify. My name is Yesterday Oyetayo. I'm not the Kazim you're referring to. Okay. Yesterday Kazim is there in the crowd. Anyway, I am director of the College of Insurance and Financial Management, and we actually have been lucky to partner a lot with New Takaful. We've not only offered courses in Takaful insurance, and we also partner with them in terms of enlightenment. I know I've been on one of the road shows of North Takaful. We organize training in the area of Islamic finance and Takaful insurance. But however, let me quickly say that Islamic finance is not only about Takaful. And when you talk about Islamic finance, it encompasses the capital markets, Islamic capital market, the equity market, the banks, insurance, and Takaful. What I find is that we are doing our capacity building in silos. And I think if you are an Islamic finance expert, you shouldn't only know about Takaful, because all of these different aspects of finance, Islamic finance, belong to one body that if one of the subsystems does not work well, the other subsystems will not work well. If the Jais Takaful is doing well, insurance is there to complement it. So I think there should be a holistic approach in terms of, and this is what I want to ask from the operators, that we need to develop a holistic plan of capacity building that involves a different aspect of Islamic finance. Because what I have found in my experience is that people think, okay, because I know so much about Sharia, I should be able to do Takaful. But there's a whole lot to Takaful than Sharia insurance, Sharia law, although that is the basis of Takaful. You need to know about finance, Islamic finance, how you can get people to buy. You need to know about marketing. All this goes into your skills that you require to make Takaful grow. And I also know that sometimes when we advertise these programs, we don't get support, we don't get subscription. People don't come for the training, and this might boil down to the fact that not a lot of companies are offering Takaful. And secondly, because Takaful insurance operates within the insurance sector that already has a negative perception and low subscription, low penetration. So I think there's need to do more of what I see No Takaful do, go on road shows, enlightenment, try and get people to understand market women and be able to know, to get them to know about Takaful, while as well trying to promote and trying to find out what their own risks are that Takaful insurance can make. I know one of the panelists did talk about getting to know them, research. This is an opportunity for you to relate with them and find out product development shouldn't be about the Takaful insurance alone. It should involve the market women also. And these are kind of skills that I think we need to build into our Takaful business. It's not only about we knowing what insurance is or what Sharia is, or there are a lot of other skills you need to build in. And I also want to refer to what the speaker had said about capacity building. Is not only about human resource capital. If there's a synergy between all the different subsystems within the Islamic finance system, some of this capacity building we need, or funds that we need, may come from within this system itself. We may not need to look outside that ecosystem of banks, capital market, Islamic, all those sukuk and everything can actually support this Takaful in the same way that Takaful insurance can support the Islamic banking. So there needs to be this cooperation, and it must come from holistic plan of having capacity building. We must work together. I see that the last session was about collaboration amongst Takaful providers, but I am talking about a larger collaboration between all the elements, all the different segments of Islamic finance, so that we can achieve that we want to achieve individually, collectively. Thank you.
Thank you very much. My question to Ms. Abimbola is that, as we know that in Takaful insurance, we used to say that there is no religion in insurance. There is no religion in finance. Finance is finance. Takaful is takaful, whatever. And the insurance is that to manage the risk based on the Sharia rules and principles. So from the Nigerian insurance institutions, do you have a course as capacity building for Takaful insurance? Thank you.
Thank you, Mr. Moderator. As a date, in theory or in practice, on the syllabus, yes. However, we've not seen any subscriber to it, not because they don't want to. The textbooks are under development. We're currently working on it. And the plan is this: Takaful is part of insurance. So the approval that we have for such courses is you must have the basic associate certificate. That means you must have done the basic insurance professional examination before you can come as a post-qualification in Takaful exam. So anybody that wants to do that, you must finish the AIN, then come for the course. However, we have short-term courses that the college run, which we advertise regularly to companies. So I would just like to encourage people that while waiting for the post-qualification, like the paper presenter said, we need to start thinking of succession. When this current set of leaders, industry leaders in Takaful leaves, who are they going to hand over to? If you want to be part of that team, you have to start developing yourself now. How does that happen? Start taking courses on your own. Start reading up on your own. Pending when the development of the syllabus comes up, I know in the next 2 years, we should run those courses. We started with broking. Elan 2 is on, that's the loss adjusting. The next one will be Takaful and oil and gas. So that's where we are currently in Nigeria. Thank you.
Thank you very much. And I will ask I want to have 2 questions from the audience. As we have regulators here, we have some academic people here also. So 2 questions. So in order to, what are the contribution of the market players in order to develop the capacity building in Takaful and Islamic finance in general? 2 questions. Yeah, I know this time is a time that, okay. If there's no any question, I would like to thank the panelists, the speaker, as well as all the okay. Okay. Please, speaker.
Good afternoon.
Yeah.
My question goes to Mrs. Oyetayo. Concerning, no, sorry. I'm missing it. Abimbola. Now, don't you think that having to qualify as an insurance practitioner first before taking on the Takaful, what's it called, track, is a barrier for anybody willing to get into the Takaful space?
That's the question.
Yes, please.
Do I think so? What I think really does not matter for now. But the thing is, we looked at the industry and we discovered that for us to have the maximum impact in dissemination of knowledge as it relates to Takaful, we need to have a basic understanding of the core insurance that we were doing before. On that basis and on that strength, the people that, because we had professors and some other people, industry people, the people that developed the syllabus came up with a recommendation that before you can say you are a Takaful expert, an oil and gas expert, a broker, or a loss adjuster, you must have first finished the basic insurance understanding, which is the AIN. Then you qualify with just about 2-3 papers at the next stage. So it was based on industry survey and some other things. Yes, can we do better? Maybe after we have tried it and we see that there's no need for the AIN before that. But let's start something first. And when we see from the results there, we'll be able to make better informed decision if necessary. Thank you.
Thank you very much. Now, with that, because we have our time is exhausted, the same also most of the participants also are I think the time no more energy. So the most important thing is that in order to conclude our section is that there's a contribution, because why and how to invest in capacity building, it is the thing which is needed between the market players, the regulators, and the institutions, the universities. So these are the things, because the market players, they need also to invest, to have, as mentioned by Prof. Binta, that we need also to have a special budget in order to send our staff, to send them to, to these institutions to do more training. So either in the insurance institutions or in the university institution where they have Institute of Islamic Banking and Finance, or if you want to also to send them up outside Nigeria, is that to have them, to send them to United Arab Emirates, where they can have also with Kitme Smart Consultancy. So we have most of the thing which is needed, it will also provide to them. We need in Nigeria Takaful professionals. We need in Nigeria Islamic finance professional. We need in Nigeria the Sharia professionals in Islamic finance. Thank you very much. Wassalamu alaikum wa rahmatullahi wa barakatuh.
A round of applause one more time, please. Our panel of academics has done well. And perhaps we missed a chance to say that the speaker on this panel, Farhan Noor, there's no relation to Noor Takaful. It's a coincidence, if you like. Now, thank you so much for your time. Very quickly, this next panel takes on a little bit of a twist. We are expecting someone to join us virtually. And while they prepare the stage, it is my pleasure to introduce to you the very next panel. The discussion is Takaful as an emerging sector in Africa. And the moderator on this panel is with more than 45 years under his belt. He's been working for longer than the very first millennial generation and the very last Gen Z on that spectrum. So it must be that, there's quite a bit to learn from listening to him moderate this panel today. It's my pleasure to introduce to you a man, once again, with more than 45 years experience. I keep saying that just so that you understand exactly what I mean. He happens to have served on multiple boards, more than 20 of them, national and multinational. He is a chartered insurer in the United Kingdom, a fellow of the Chartered Insurance Institute of Nigeria, a fellow of the Nigeria Institute of Management, a fellow of the Institute of Marketing, and a fellow of the Institute of Director. If I may say so myself, it seems like he is a jolly good fellow. I'm sorry, I was right there, I had to take it. Bala Zakaria is on the governing council of the Alumni Association of Lagos Business School. He's the past president of the Chartered Insurance Institute of Nigeria and happens to be the pioneer and current chairman of the board of FSB Reinsurance Limited. A round of applause as he takes the stage.
Yeah, Assalamu alaikum. Distinguished ladies and gentlemen, the MC tried all she could to intimidate me with my age, but she failed. First of all, let me thank Noor Takaful Board for this very bold initiative of arranging this very wonderful seminar. I think one of the things I learned from the time I came into this hall is that we lack knowledge about Takaful. And the best way to do that, to get knowledge, I think, is this type of gathering. I also would like to thank them for finding me worthy to be here to moderate this very important section of the event. We've been talking about Takaful since morning. We are now going to talk about Takaful. Again, people will ask, what is Takaful? I mean, it's like diverting away from what you are familiar with. Reinsurance. Well, let me go back to the conventional side. Just like most of the members of the insuring public go to their insurance companies to insure themselves, insurance companies come to us to insure themselves. So it's very, very capital intensive. And that is why Takaful has to be something that must be considered, as part of the ecosystem for Islamic finance and Islamic banking and insurance. So I'm very privileged to be here to organize this session, and I'm happy to say that we have some of the best people to talk about Takaful today. We have Bilal, we have Mohammed, we have Bameke, some of the finest people that I know who are trying to develop the Takaful business in the African continent. And so I'm happy to be part of them. And I also would like to thank the Noor board for putting the time for this session at this time when half of or all the hall is having a nap. So we'll do whatever we would like to do without anybody noticing. Everybody is tired, everybody is exhausted. This is the best time to hold a microphone because nobody will listen to you. So I thank you very much. Like the MC said, we have a unique situation. Our speaker is going to join from Cairo. Also, Yusuf is he's the MD of Africa Takaful, one of I think the only standalone Takaful practice company on the continent. And it's a privilege to listen to him. I have read his paper, it's very good. And my team, that's the people that are going to discuss the paper, have had a discussion in the green room. Unfortunately, it's not green, really. When I was told there would be a green room, I was thinking it's going to be green, but it was actually brown. Be that as it may, what I'm doing now actually is to save you a lot of time, because by the time I finish, when Bilal, Mohammed, and Mameke comes, and we listen to the paper, that is it. everybody will go and have some. Oh, okay, sorry, we have another paper after that. So, distinguished ladies and gentlemen, let me quickly say that I hope the organizers are ready for the paper. But before then, I would like to call Bilal, Mohammed, and Bameke to join me. Like I said, they are some of the best people that can talk about Rita Takaful. I wouldn't even be able to talk as much on Rita Takaful as they will. So I'm happy to just be able to put them together. But I think quickly we are going to discuss some few things. Well, the paper has spoken so much about Rita Takaful, but I think we pick during our green room meeting lack of talents, and I'm happy the last discussants or the last people discussed the issue of capacity building, especially as it affects the human capital development. That is one of the major things that is lacking in Rita Takaful. We also have to increase the market size. We also have to create a universal regulation. All these have been discussed since from morning. And I'm happy that a lot of progress has been made in the Takaful side, and I believe it's also the same problem that we're having in the Takaful. And then, of course, there is the issue of ethical options for investing income coming from the practices of practices of Takaful, because as it is the practice of Takaful, you can only invest in ethical funds. And they are very, very limited. These are some of the things that the panel,
I am ready,
presenter, will deal with. And I'm happy, like I said, to have some of the finest people to be able to conduct this session of the seminar. I'm sorry I've taken so much time, and I hope the organizers are ready to connect us to Yusuf from Cairo. Are they ready? Is Yusuf ready?
Yes, I'm ready.
Backup. I told them that sometimes it can be very, very dangerous to say that you are going to link up, especially with the glitches, with the networks and what have you. So we have a colleague of Yusuf from Africa Re. Is he here?
Yes, I'm ready.
Hello, sir. We're ready for you now.
Hello, yeah, I am ready, but I don't know, you say that you didn't see me. I don't know, maybe the light. Is it okay now?
Sorry, can you speak?
Yeah, I know, no problem with that.
No, okay.
Yeah.
It's blank.
I don't know, the camera is open.
Just hold on. There's no video there.
Yeah,
so you can speak,
that you can remove the spotlight because you put the spotlight. Yeah.
Thank you so much. We are from
Assalamu alaikum. Good afternoon, ladies and gentlemen. I am very pleased to be here with you on this very distinguished conference, which is called African Takaful Conference. And I am very proud that on the very selected good name, which is maybe a driving force and motive for the future success of the Takaful industry in Africa. And I am also happy that to speak on the Takaful as a major sector in Africa. And would like to thank Noor Takaful and the moderator for his introduction, and also welcome my colleague in the panelists. You can move the slide, please. If you can,
hello, Mr. Yusuf, can you
move the slide?
Continue, Mr.
Yeah, move the slide, please. Or allow me to share my screen. Yeah, okay. Yeah, from this slide is very brief on the international Islamic financial system. It comprises of three main parts: the Islamic banks, Islamic capital market, and Islamic Takaful insurance companies. And we have other two groups, which is Islamic financial institution and Islamic index provider, as providing and supporting to the international financial system. And we see that the Islamic financial system is international, it is spread everywhere, and this is a driving force for the Takaful industry, because Islamic bank will not work efficiently without having Islamic insurance company and Islamic Takaful companies. And also the Islamic capital market cannot work unless there is also support from the Islamic Takaful. So there is a close interdependence and interrelationship between all those parties, and also the Islamic financial institution, as we see that from the previous presentation, that they are providing learning and transfer of knowledge, and also support the industry. And Islamic index provider also provide good services for evaluation of the company. So those are important part of the international financial system. Please, you can move the slide, please. Yeah, yeah, please move the next. Next, please. Yeah, from the global Takaful market driver, we see that the Takaful industry is growing rapidly and gaining momentum. That if we see from the Asia Pacific to GCC and also the Africa, there is a growing Muslim population, and that the Muslim population is the major driving force for the growth of the Takaful, and then also for the Takaful, because as far as the Takaful industry is growing, it needs the Takaful to step behind, and also at the same time, it is an exchange and support of each other, and by that it drives the growth of the industry together. I would like also to totally agree with Dr. Tariq Saif that Islamic insurance is a product, or Takaful is a product. Once it is put in the place, it should be seen as not only open to Muslims, it is open to all mankind, regardless of whether they are Muslims or non-Muslims. And we when we are marketing the Takaful, we should put into consideration that it is open to all mankind. You can move next slide. Here we see that the Takaful, global Takaful contribution or premiums from by the end of 2023, it is around almost like $30 billion, and it is expected to reach 45 or 46 billion by 2027. And this is almost that the growth is at 2 digits. It range between 14% to 20%, and it is a good growth rate. Just like this. Here we see that the distribution of Muslim population around the world, and we see that the opportunity and the potential for the Takaful industry growth is there. If we see that in the African Saharan, Sub-Sahara, we see that 240 million population, and also we see that Middle East and North Africa, 315 million, and altogether we see that the potential for growth of the Takaful in Africa is huge, and this is a driving force for the Takaful, and we see that also the product is also open for non-Muslim. Next slide, please. Yeah. Here we have, in order that Takaful to grow or Takaful to grow, there are some key success factors that support the growth of the Takaful industry. We need a Takaful to step behind, and also to provide a capacity for the Takaful companies, ensure more spread of risk and sharing also of this, because the Takaful companies need support to further balance their portfolio and reduce claim fluctuation. And this is all is done by the Takaful. And this is similar to the way where the conventional reinsurance is doing when we are talking about the conventional versus Takaful. So the same is here, also balancing portfolio and reduce claim for fluctuation, and also improve direct Takaful insurance loss experience. And all those are important for the growth of the Takaful companies. Here also, for the Takaful company to succeed, we need that a Takaful company to have a backup from shareholders or a parent group like here in the Africa Takaful. And we have seen that many experience which is not good in the Takaful market, because some of the companies started Takaful operation, and after 5 or 6 years they stopped doing Takaful and the company has gone. And this is because you know that the Takaful, similar to the reinsurance, they have a very high combined loss ratio and very narrow margin. And so if they do not have a support from a strong parent company, or have shareholders who provide abundant or sufficient capital, they cannot exist or continue. The establishment is not difficult, but the to continue in the marketplace is that which is more difficult. Also, Takaful are required to work hard to meet the expectation of the core market. Takaful operator also should be in compliance with Sharia principles, and also the existence of legal and regulatory framework geared towards Takaful is very important. And we have seen this especially in some countries when they started to have a regulation for the Takaful. Immediately the market started, and the Takaful company started, and we have a good progress and growth and development of the Takaful. So it is very important to have a regulatory framework and legal, because we know that in order to have a Takaful company, they should undergo the license and all those processes in order to be regulated. And if the regulatory framework is not there, then it will not be easy to have a Takaful industry. And we have seen that also in the East African countries, when they also establish their laws and legal regulatory framework. The company started there and they are developing, and we have seen many Takaful companies on that area. Similar to Morocco, when they started having their laws and regulatory framework, also it helped the startup of the Takaful companies, and we have seen many companies develop on the last 2 years. Next slide, please. Those are some challenges. Yeah, and we need also to work on those challenges to convert them into opportunities in order also to be a driving factor or driving success for the Takaful and re-Takaful industry as well. The importance of capital is very important for the Takaful companies. Also, maintaining the existing capital and attracting new capital injection, and also the leverage between the policyholders fund and shareholders fund. And in doing so, we need that the Takaful to be attractive to the capital in order that the capital exists and attracting new capital. And this is should be in the formula built between the policyholders fund and shareholders fund, and how to maintain the capital within the Takaful industry. Next slide, please. Also, we have limited investment universe for the Takaful company, and this is very challenging because you know that in order to grow the fund of the policyholders and shareholders, we need investment. There should be a variety of investment opportunities in the market, and by that we can grow the capital, and we have more free reserve, and by that we will support a strong market. Also, the importance of the growing of the income from investment, and also when there is a lack of investment and opportunities, and this is also combined with very relatively low surplus margin and profit margin on the Takaful, the case will be very difficult for the Takaful to exist and continue. And we have been in Africa Takaful, we have seen that without the support of Africa all the time, that it will be very difficult for Africa Takaful to continue and deliver its support to the African Takaful industry. Also, lack of standardization of the following: the regulation and regulatory framework, operational framework and legal framework, and uniformity of the all those regulation and operational. And if they are standard there available, this will make it easy for the countries where there is no Takaful experience, that the experience can be transferred to those countries very easy. Also, shortage of human capital and technical expertise, and we have seen this in the building of capacities on last session, that the Takaful industry need expertise and need training and retraining, and also collaboration of the institution, educational institution, and also collaboration of the Takaful and re-Takaful together to provide training and retraining of the expertise, and also to have some sort of succession planning in order that the young generation also have the competencies and expertise to take on the. Also, we have relatively very low awareness, and this also have been discussed in the previous sessions, and we need, in order to grow fast the Takaful industry, we need also to have awareness between the population that the Sharia compliance product in place. Also, the competition from the conventional insurance, and despite the fact that the insurance, the Takaful and re-Takaful industry has its own distinguished product, and the product itself attract its customers, but also the existence of the conventional competition from conventional market is also there. is a challenge. Also, the compliance is overseen by a Sharia advisory board, and this is very good for the Takaful industry, that each Takaful company has many levels of the governance, that is the board of directors and Sharia board and regulatory authority. So those are different bodies governing the operational of the Takaful industry, and this is very essential to put the Takaful industry in track and to overcome any deviation in practice from those of the. Thank you very much for listening, and I'm available for further discussion. Thank you.
Mr. Yusuf from Africa, read Takaful, good paper. So, Mr. Yusuf has mentioned a couple of challenges we are facing in the industry. Now, from experience, I personally was from Kenya Reinsurance Corporation, and we actually had established the Takaful window at Kenya Re. And we have the market experience. And now we are in the brokerage field as well, reinsurance brokerage. And we face more challenges, especially when we get to work with the Takaful businesses. So one of the challenges we just mentioned here was about Takaful pricing. Now, why do we have higher Takaful pricing? The first thing is that we have lack of Takaful operators or Takaful securities around the globe. We have seen many examples of fully fledged Takaful companies which have actually gone down. Why is it? I think Mr. Yusuf mentioned in his paper is that because of strong backup. So, Takaful companies is a unique, or rather Takaful itself is a unique way of doing insurance, okay? So you need to have proper backup. Now, Takaful companies take a huge risk. Takaful companies have a certain limit or capacity to take risks. But Takafuls, they take the major part of the risk. Now, if they don't have strong backup, when claims come in strongly, then they will be doomed, basically. So you need to have a strong backup. You will look at many of these companies' windows. They are running, like for example, Africa Re. Africa Re is running because it has a strong backup from the main company. Kenya Re has been running now for the past 10 years. Why? Because it has a strong backing from the company. The same thing applies with Tunis Re, and the same thing applies with other companies as well. So standalone becomes a bit challenging if they don't have a proper backup. Now, because of that, we have lack of Takaful securities. Now, if you don't have enough Takaful security, that means we don't have enough capacity. So that Takaful industry actually lacks capacity. Now, when you lack capacity, what do you end up doing? You end up having a couple of companies whereby they can give you quotations on Takaful, they can place the businesses. So you'll end up having a couple of Takaful companies giving you quotations. And these quotations, the pricing will be high, definitely. Okay? Now, if the pricing is high, the Takaful companies shy away. And when they shy away, that means Takaful, they don't get businesses. So what happens is that Takaful companies opt to go to the conventional reinsurance, conventional securities. Okay? Now, why do Takaful charge higher prices? They charge higher prices because their businesses are small, number one. Number two, 5 minutes only. Oh, thank you. So I just need to finalize so that we finish. Yes, yes. So that means that the Takaful pricing basically goes up because they have few clients, they have few business, so they need to hike up their prices so that they can run their businesses. But one question we need to pose to the Takaful business: why do you shy away from halal business? You know, if you have pork nearby here, which is much cheaper, and you have halal meat over there, which is expensive, would you go for pork or you still go buy that halal meat? You'll definitely go and buy that halal meat, even if it's double the price or triple the price, right? So why shy away in halal businesses, right? So this is what I would like to pose to the Takaful companies. Because of time, I would end here. Thank you.
Yeah, thank you very much. Bilal is a broker. You know, when you give them a microphone, they will continue to talk.
Oh, thank you so much. I'm given only 1 minute, so I'll make it very short. Mine is to discuss on the lack of talent or technical expertise. And one of the challenges we face in Takaful is basically inadequate Takaful expertise. As you all know, Takaful is a bit technical, especially on treaty. So getting underwriters who are expert in that area is really a big challenge, especially combining underwriting and Islamic knowledge. I mean, that's very important because to ensure fully implementation of the module, if it's either hybrid module, Wakala module, or Mudaraba module, it's very important to have the knowledge of underwriting at the same time knowledge of an Islamic insurance. So that's one of the big challenge we face as a Takaful industry. The second challenge is also on Sharia board. Of course, we have Sharia board supervisor who oversee the Takaful business, but the challenge is the Sharia boards are expert in Islamic finance, but again, their knowledge on underwriting is not adequate. So that is again is a challenge, and most of the time is highly recommended we include someone who have an underwriting expertise in Sharia board. So basically that's my point, and I will let my colleague to discuss his point. Thank you.
Thank you very much. It's a pleasure to be here, and I think basically it's obvious that the potential for growth for Takaful insurance is there. It's massive, and because reinsurers follow the fortunes of the primary market, the Takaful business also have a potential for growth. I think one area where both sides can work really, really well together is an area where traditional reinsurers have always worked well with the primary insurers. which is in the area of product development. Takaful companies, because the nature of the operations will take them to as many jurisdictions as possible. They tend to write businesses over a wide area. When a local, say a Takaful insurance resident in Nigeria is trying to do business and doing new products and new policies, they should really, as a rule, work very, very closely with the Takaful companies that is covering them, because they can't share a whole lot. They have resources that may not be at the disposal of the primary Takaful company. The Takaful companies will do a lot of work in supporting them. And if there are areas where there are going to be issues, I think combined knowledge between the Takaful companies and the Takaful underwriters will help to produce a product that is going to be, as one of the presenters earlier talked about, that will really be appropriate for the market, and they can deal with the pricing up front. Not that the primary insurer will have gone ahead and done something, come to the Takaful company, and then they will say, no, the pricing is off, I want to do another set of pricing. That will help streamline things and really help to develop the potential that is there. I really do think that the potential is there, because basically we do have the population. If we go after the retail market, I think there is the opportunity is boundless. Thank you very much.
Thank you, distinguished ladies. Can you help me join in thanking these distinguished people who have contributed? I will not take any more of your time. I would like to apologize for staying longer than it is necessary. But I hope we've been able to at least transmit some of the information that you need on Takaful. And I thank you very much for the opportunity. Thank you very much.
A round of applause one more time, please. Thank you. Right. After a couple of hitches, we're more than pleased that the tech aspect of this conference went on eventually without a hitch. Talking about the speaker we had in this just concluded panel, it would certainly have been something if we had opened up the day talking about the role of technology in growing Takaful, and then we couldn't get it right. Now, just very quickly, our final panel, they have the esteemed honor of keeping your attention while you smell the food in the room, but they are up to the task. It is my pleasure to introduce to you a panel that will be speaking on the effects of global standards in Islamic finance. And the man who has the esteemed honor of moderating this session has a 30-year career. He's managing partner of Ahmed Zakari & Co., a leading small and medium-sized accountancy practice firm. He also serves on the board of directors at the International Federation of Accountants. It's a position he's held since 2019. With previous roles, such as president of the Institute of Chartered Accountants of Nigeria, he currently serves on a board, which brings us back home. It is my pleasure to introduce to you Ismaila Zakari. He is non-executive director and chair of the Audit, Risk and Compliance Committee of Nur Takaful. It's very apt as he brings us to the end of today's event.
Thank you very much for this introduction, Nabila. Actually, Nabila came round to the green room, or is it the brown room, and talked to us about how to speed up to get you to lunch and closure of this first day of the African Conference on Takaful and Islamic finance. Well, the panel in the green room decided that we need to have the rapt attention of all delegates so as to try and close early. So please put aside your devices and pay attention. Ladies and gentlemen, a very warm welcome to this session on the effects of global standards in Islamic finance. It is an absolute pleasure for me to be here with all of you at this as the session moderator, and I'm truly honored to have the opportunity to engage in this vital discussion. The topic of effects of global standards in Islamic finance holds tremendous significance, particularly in today's interconnected world. As Islamic finance continues to grow and gain prominence on the global stage, understanding the implications of adopting international standards becomes paramount. This discussion is not only crucial for the success of individual institutions, but also for the broader development of Islamic finance in Africa and beyond. Islamic finance operates within a framework of diverse global standards set by reputable international organizations and regulatory bodies. These standards play a vital role in ensuring the stability, credibility, and harmonization of Islamic financial practices worldwide. Some of the numerous types of global standards that impact Islamic finance include accounting standards, Sharia standards, auditing standards, ethical standards, sustainability standards, governance standards, risk and management standards, regulatory and supervisory guidelines, etc. There are so many. Compliance with these multiple global standards, whether mandatorily or voluntarily, enables Islamic finance to thrive as a robust and ethical alternative within the broader global financial system. To do justice to the topic of this session, the organizers have assembled some of the brightest minds in the field, each of whom has played a significant role in shaping the landscape of Islamic finance in their own rights. I am delighted to introduce our distinguished panelists who bring diverse perspectives on the subject to the table, and their collective wisdom and experience and insights will be instrumental to driving meaningful discussions throughout this session. Although we are guided by time, please join me to welcome our distinguished panelists. The first I will mention is Fatima Abdurrahim. Fatima is a fellow of the Institute of Chartered Accountants of Nigeria and also a certified Islamic professional accountant. She currently is a doctoral student of Islamic finance and an assistant director, director in Supervision Directorate at the National Insurance Commission, NICOM. Fatima plays a pivotal role in ensuring NICOM's financial sustainability as the head of levy unit. I'm sure that the operators here understand what that means. Our second panelist is Mr. Farhan Noor. Farhan is the Executive Director, Capacity Building Programs at AOFI, which is the accounting and auditing organization for Islamic financial institutions. Welcome, Farhan. Farhan has had previous experience as a Takaful operator and was also a one-time head of Islamic finance at Sharia Actuarial and Learning Advisory Firm in Bahrain. He is a co-author of a chapter titled Takaful as a dedicated wealth management tool, published in a Euromoney publication in 2008. Our third panelist, certainly not the least, is Professor Abdussalam Ismail Onagon, a professor of Islamic economics and finance. He is currently the managing director at Kitmir Smart Consultancy and also an adjunct professor at Hamdan bin Muhammad Smart University, School of Business and Management. Professor Onagun is also a member of the Advisory Council of Experts on the Nur Takaful Insurance Limited. In addition to our distinguished panelists, we are privileged to have an esteemed expert and scholar of Islamic finance as our lead speaker for the session. Please help me welcome Dr. Abidin Adeyemi Adewale. Dr. Abidin is the head research, publication, and statistics at the Islamic Financial Services Board, the IFSB, whose expertise and dedication has enriched understanding of this evolving field of Islamic finance. Dr. Adewale's lead presentation will undoubtedly shed light on the impact of global standards on Islamic finance, guiding us towards new horizons and opportunities. As the aim of this conference is to foster an environment of collaboration, knowledge sharing, open dialogue, and exploring networking opportunities, I encourage all the delegates to actively listen to this discussion with rapt attention and engage by raising thought-provoking questions. It is now my honor and pleasure to invite Dr. Abidin Adeyemi Adewale to begin our journey into the seventh and last session of this conference today. Thank you.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. And a very good afternoon to everyone. Inshallah, I've been asked to run through my slides in 10 minutes, and I hope to do so. May Allah make it easy. The title of the presentation is The Effect of Global Standards on Islamic Finance. And I have 5 key items I would be running through very fast. The first one is that the standards, are basically documents, and whether it's Islamic or conventional, they are basically in various forms. Could be core principles where you talk of, a high-level standard, or it could also be very granular, where you talk of the guidance notes or maybe guiding principles, or perhaps how they are applied in terms of technical notes. But whatever the case, these are documents that are developed and endorsed by most likely international organizations or perhaps regulatory authorities with the intent of ensuring the safety, soundness, resilience, stability of the industry, and of course covering a wide spectrum of areas. It could be in areas of capital adequacy, risk management, and so on and so forth. But the most important thing is that while these standards may be specific, at times they also would vary. And this would reflect the level of complexity of the industry or the development of the industry from jurisdiction to jurisdiction. But again, they are not necessarily binding, but then adopting them would further enhance the development of the various jurisdictions. So there are various forms, and I think maybe Farhan will be speaking more on the accounting aspect. So we have accounting standards that mimic what we have in a conventional space. We also have standards that speaks to various aspects of prudential regulation. It may be in the industry, in the banking industry, or it could be in the insurance industry or the capital market industry. But of course, we also have supporting regulatory institutions, those that look at deposit insurance or those that look at issues that relate to financing of terrorism or maybe money laundering and so on and so forth. So why do we need Islamic standards then? If we already have the conventional standards, it again speaks to the fact that we have the specificities that either by happenstance or by design, the conventional standard setters would not have taken into consideration when the standards are developed. So as a result, 2 basic reasons why we would need to have our own Islamic finance standards would be basically, first, the industry itself is getting bigger in size and is also getting, more dynamic in terms of its structure. In 2002, when IFSB was established, the industry was worth about $200 billion then. But today it is a $3.2 $2-3 trillion worth industry. And not only that, if you look at the various specifics, we now have Takaful, we now have capital markets, we now have the securities commissions, and so on and so forth. And if you also look at the distribution along regional divides, you see that there is the need to reflect the fact that this industry would not just have grown this much, if not because of the fact that there are prudential and other forms of regulations that ensure that there is a form of standardization, and the industry has leverage on that. The other thing is the fact that the industry also has its own specificities. We just take some basic examples here. This is a typical balance sheet of an Islamic bank. On the asset side, you have certain items that you don't find on the balance sheet of a conventional bank. For instance, you have inventories in terms of real estate, automobiles, or you have profit-sharing transactions on the asset side. You will not have this kind of arrangement in the conventional sphere. Let's take an example of Musharaka Mutanafkisa. At the point where the transaction is entered into, both the bank and the customer jointly own the assets. But over time, especially towards the end, then the customer would have paid as much as he needs to, then he owns the asset. It follows, therefore, that in the early stage of the ownership, the bank is highly exposed to both market risk and impairment risk in that particular asset. But this risk will fizzle out as they get to the end of the of that particular contract. It means, therefore, you cannot have a blanket risk management strategy. You have to reflect, the various stages of the contract. And if you look on the liability side, you also have the deposit, which again may be protected by deposit insurance, but you have the investment accounts. Again, based on Modaraba, you may realize that being a profit-sharing, loss-bearing contract, then the Rabulmal, the providers of the fund, would have to bear the incidence of the loss in the event that that occurs. So because of that particular attribute, you don't have this kind of arrangement in the conventional arrangement. So it means, therefore, these specificities may have to be taken cognizant of. So it therefore manifests in different types of risks, whether it's credit risk, market risk, or operational risk, as the case may be. These are the three components in any way that we use for the computation of our capital adequacy. The point I'm just trying to marshal is that the manifestation, the propagation, and origination of this risk may have the peculiarities of Islamic finance. Yeah, I see you coming. So again, that also speaks to the risk mitigation techniques that you may have, as they may be concerned, and as well as the liquidity risk. Now, for the capital market, of course, you can raise funds through Sukuk, you can raise funds through Islamic Collective Investment Scheme, but then they have to be Sharia compliant, not only in terms of source, but also in terms of the application. And similarly, in the insurance sphere, Takaful is different from conventional insurance in many regards, but mainly because there is segregation of funds. And for that particular reason, it comes with its own specificity. So along this divide, what is the effect of these standards? The first is that when you do the financial sector assessment programs, the one that IMF or World Bank would come for, they will not have been able to see what impact these systems or these Islamic financial institutions have to the financial sector. For them to be able to do so, it is important that they rely on the core principles that are related to this industry. It could be that for banking, that for capital markets, or that for Takaful, as the case may be. And in the case of the IFSB, these two core principles were adopted in 2018 and 2019, respectively. So the effect will reflect in terms of growth, in terms of deepening the liquidity, harmonization of practices and standardization of regulations, strengthening stability, avoidance of systemic risk, cross-border transactions are facilitated. You support the SDGs, especially the financial inclusion. I think a lot of discussions have been made on that earlier today. And of course, responsiveness to emerging risk. It could be due to the risks that are coming up because of digitalization or sustainability or climate risk-related risk, and so on and so forth. So in that case, the industry has been able to survive these various headwinds. And as reflected in so many of the charts, I think this will be shared with the participants. The highlight is just to say that even during COVID, we were able to still maintain the minimum thresholds across the capital standards, capital adequacy standards, liquidity standards, and so on and so forth. The industry remains very, very resilient, either in terms of Islamic banking, in terms of capital market, or even in terms of the insurance market. So from the IFSB, what do we do? As a standard setting body that complements the activities of the Basel Committee on Banking Supervision, Association of Insurance Supervisors, and the International Organization of Securities Commission. We look at these three sectors and we address the specificities to ensure that we cover those. Based on these 6 objectives, develop standards, implement standards, ensure there is a database to support that, provide guidance, do continuous research, and ensure continuous contribution. So we have so far issued 41 standards, and they are all available on our website, free. I encourage that you go through them. And not only that, we have ongoing work that relates to Sharia governance, liquidity management, corporate governance, conduct of business in Takaful, recovery and resolution, and so on and so forth. We know this will not make any sense. You just keep producing standards, nobody would implement because they may not know what it entails. So we have a series of implementation activities from workshop to policy advice to technical advice and so on and so forth. And our standards have been translated not only into French, Arabic, but also into Russian language. And we have various international collaboration with international organizations and strategic partners. And on this point, I end my presentation. Thanks so much for your audience.
Thank you, Dr. Abedin. So we have listened to the lead speaker. Now we're going to go to our panelists. And I would like to start with Fatima. So I will pose a question to Fatima to respond, and also to give her a few minutes to give her own perspective on the topic. So Fatima, the question we have for you is, what are the benefits and expectations of insurance regulators in the African region, such as NICOM, from what you derive, the benefits derived from membership or collaboration with global standard setters such as IFSB and AOFI?
Assalamu alaikum warahmatullahi wabarakatuh. The 2 standard setters, the IFSB and the IOFI, they play a very critical role in regulation in Africa, Nigeria specifically. For the IFSB, they are dealing basically with prudential, while IOFI, they deal with financial reporting. So my own contribution here is we need more collaboration with the 2 standard setters in terms of capacity building. Some earlier speakers have spoken on the importance of capacity building to deepen insurance, especially Takaful. So we need more collaboration with IFSB in terms of training, and also IOFI in terms of financial reporting, because we need those ones. If you have proper regulation, you will be able to ensure comparability, consistency, transparency, and integrity of Takaful business. Also, we require the standard setters to help us from time to time to translate their standard, to break it down, so that we'll have effective and efficient supervision. There's one thing for you to come up with all kind of standard. There's another thing for you to break it down into guidance notes so that we'll use it to do proper regulation. That's my take. Thank you.
Thank you very much, Fatima. I would like to now go to Farhan and ask, do you think that multiplicity of global standards that are applicable to Islamic finance industry are a benefit or a hindrance to operational efficiency of the industry?
Okay. Hello? Okay, so if I rephrase the question a little bit, what you're basically asking me is whether we can adopt conventional standards in Islamic finance industry. And the answer to this question is a big resounding yes. We can adopt conventional standards in Islamic finance industry as long as they fulfill 3 conditions. The first condition is that the provisions in the conventional standards must not contradict and contravene the teachings, the principles and rules of Sharia. This is very important. The second condition is that the provisions in conventional standards must not, rather should, accurately reflect the true nature of Islamic finance business model and transactions. Okay, so this is the second condition. The third condition is that there shouldn't be any gaps in the conventional standards which doesn't account for the uniqueness and specificities of Islamic banking business model and transactions. As long as these three conditions are fulfilled by conventional standards, there's absolutely no reason whatsoever to abandon the effort that Western conventional institutions have put in, the time, the effort, the money they have put in to develop those standards. There's absolutely no reason for any regulatory and supervisory authority or Islamic financial institution to develop standards on their own from scratch, rather, in fact, reinvent the wheel. But here is a big question. Who's going to determine and establish whether these three conditions are actually fulfilled or not? Because everybody is going to have different interpretation of it. And that's why standard setting bodies like AOFI and IFSB, where the infrastructure is in place, where more than 500 Islamic finance professionals, some of the leading minds from different countries are already there to identify whether these conditions are fulfilled or not. I'll just very quickly give you an idea with the help of an example. Just recently, in recent past, IASB issued IFRS 17 standard on insurance for the insurance sector. Now, can we adopt this standard in the Takaful industry? So AOFI actually spent 3 years, roughly 3 years, studying this standard, trying to identify where the infractions are, where the gaps are, whether the standards are accurately reflecting the true Islamic finance transactions, Takaful transactions or not, and then address those issues where they found it in the form of FAS 42 and 43, I believe, where we have clearly given guidance to RSAs, regulatory and supervisory authorities, on what is the best approach to recognize and measure and present and disclose Takaful information. So to answer your question in just one sentence now, yes, you can adopt, they are benefit, but as long as they fulfill three conditions which I mentioned.
Thank you, Farhan. And I will now go to Professor Abdusalam Onagun and ask from a Sharia Advisory Board perspective, how can we ensure that the adoption of global standards in Islamic finance aligns seamlessly with Sharia principles and values? And what role do Sharia scholars play in guiding the industry towards a harmonious integration of these standards while safeguarding the authenticity of Islamic financial practices?
Thank you, Mr. Chairman. It's a very important question because I started working with the IFSB when it started in Malaysia in 2006. So one of these questions is the questions whereby create one of the standard or response to the problem which we Islamic finance is facing. So as a regulator and as standard setting body, which is recognized by all over the world globally, so they see that there's a need for the standard for this, because any organization or any stakeholders in Islamic finance, either accountant, either Sharia board, so Sharia scholars, they need to be regulated. And what is their role? Because during that time, there's no any standard to guide them. What are the principles and what are the things which is needed? In response to that, the IFSB come with a standard which we call Sharia governance systems, which one of the things that if you have a membership where you have the GCC, the Arab world, you have them in the organization, so you have to translate that. I'm the one who translate that from English to Arabic, because if you then want them to contribute, especially the Sharia boards, that time, those who are pioneer of this industry, since maybe 40 years ago, most of them, they are high authority for the Sharia board. You will see that most of them, they don't understand English. So, and that is the reason why the IFSB will translate the standard, the Sharia governance systems, in order for them to know what is their role, and also to discuss it, to pass this message to them that you need to be regulated. It's not a very easy task. But the IFSB, as a standard setting body, they try to manage that. So that's one of the things. So the second role, because even though to the industry players and most of the regulators all over the world, most of the people think that if the standard make it clearly that if you want to have Islamic financial institutions, either Takaful or Islamic banking or Islamic capital market, you have to have in place Sharia board who will oversight the Sharia compliance. So in the standards, Sharia governance standards, so they make it clearly that this is their role and this is their requirement. If you want to get, for the regulators, you want to give a license, NICOM, but I also remember that before no Takaful, one of the requirements is that you have to have in place those who will sit in your Sharia board, the ACE. So these are the things that the role of IFSB. And I will see that it is very important for the market players like Nur Takaful also to be a member in this organization. Why? Because there are some specific to the market players. So the standard risk management, policy, conduct of business policy, all these things, they have standard for it in response to that. So to come back to the role of Sharia board or Sharia advisory council is that you have the IFSC make it in the very clear. And I know that NICOM, they benefit from this standard when the Nur Takaful and other Takaful operator, they apply for the license. Because the reason why is that there's no any Islamic financial institution, either Takaful or capital market or insurance. You need also to have in place the Sharia who will oversight the Sharia laws. So this is the benefit of this standard of the IFSB, and it is very important in order to, in terms of training, as mentioned by NECOM here, Ms. Fatima, that it is very important to help them in the implementation of this standard in order for the industry of, for the stability of Islamic insurance or Islamic finance in Nigeria. Thank you very much.
Thank you, Professor Onago. Just we're now about to wrap up. I've been told that we have about a minute to go, but I still want to go to Dr. Abidin Adewale. In your opinion, sir, what are the most critical areas in Islamic finance that require further harmonization with global standards? And how can standard setters and industry stakeholders collaborate to address these gaps?
Bismillah ar-Rahman ar-Rahim. I think the whole journey of standards development, I've gone through three major phases. There was the era of regulatory reform, there was era of regulatory adjustment, and now we are in the era of regulatory enhancement. New risks are coming up, issues related to climate risk, digitalization, like I mentioned earlier, and so on and so forth, smart contracts, blockchain, AI, and so forth and so on. So the point therefore would be that for standard setting bodies to also align with these realities, we don't necessarily have to reinvent the wheel. just 2 weeks ago, I think the IAIS insurance core principles were released, and IAIS 14, ICP 14 and 17 are very much reflected already in the IFSB standard. So we don't have to reinvent. Once they have done, if it is applicable, like Farahan said, we go ahead. But otherwise, we also cannot stay complacent. The fact remains that standards development takes in the minimum about 2 years because the processes involved. But the way things are happening are quite fast. So industry must continue. So what I would say in that case is that as we take note of development in the conventional space, we also take care of our own specificity. What can be adopted should be adopted. What needs to be adapted should be adapted with requisite consideration for the Sharia specificities so that for the industry to grow, we are doing the right thing and we are doing things rightly. Inshallah. Assalamu alaikum.
Alaikum assalam. Thank you very much. I know that the delegates have been very patient, and we are standing between you and lunchtime and closure. So please, if we have any questions, kindly, we will take one question. One question, please. Yes, Ibrahim Show. Can we get mic to Ibrahim Show, please?
Hello, yeah, very good session, I must say. I thank everyone there. We are very well informed. But there's a point that was made, and I just want to get, the regulator is here, seated. Mr. Farhan is here. Recently, NICOM had adopted, let me say the last 2 years or so, the FRS 17 standards, and it's already being enforced. And as Takaful, we really find it challenging. And you said there are 3 conditions that were met. I don't know whether your response to this will actually help NICOM now adopt the right steps to take. I just want to ask you how, and you are conversant, of course, with IFRS 17, whether it is actually proper for Takaful companies to adopt hook, line, and sinker. Thank you.
Farhan?
If I heard it correctly, what you're asking me is about the 2 recently issued FAS on Takaful and whether the institutions, Takaful operators, are ready to adopt those standards. So first of all, we never issue a standard with immediate effectiveness date. That is, the standard is issued and you're supposed to adopt it from the next day. There's always a 1-year gap, 2-year gap, and within these 1-2 years, you are supposed to build your capacity in understanding what the requirements are, what the provisions are, what the gaps are, if any, and you can always discuss and talk to us how we can facilitate you in understanding those provisions. So there is always a gap, and this is true for IFRS as well. The effective date is always much later down the lane. So you have ample time to build your resources, build your capacity, and understand what exactly is required from you. I understand IFRS 17 and our 2 FAS standards are very comprehensive, sophisticated, complex. These are not simple, and it's going to have profound impact on the way you do business as well, and you present information. So I understand and I hear what you're saying. But at the same time, this is what's expected from the convention side. This is expected from the Islamic finance side. You have to build your capacity. You have to take the plunge and understand what the requirements are and then implement it with the help of the regulator, obviously. I hope that suffices. This is the best I could come up. Okay.
Thank you, thank you, thank you. As I bring this session to a close, I ask all of us to appreciate our esteemed lead speaker and distinguished panelists with your resounding applause. Thank you very much. Nabila, I hope we tried.
A big thank you once again to our panelists. So as they take their photograph and leave the stage, I want to, of course, start by thanking you. You have been an enduring audience. You stayed this long. For those of you who zoned out and zoned back in, you have our deepest gratitude, because it is clear that your passion for Takaful and Islamic finance comes through in the fact that you're still seated in this hall at this hour. Now, I will not be the impediment. I won't be the stumbling block between you and a good meal. This is the least we can do for keeping your attention for as long as this. Tomorrow, the journey towards ensuring that you are able to tie your camel and hold on to it continues. Thank you for joining us on the very first day of the very first African Takaful and Non-Finance Interest Conference. It's been a pleasure. And see you all tomorrow, bright and early. There is food, assisted buffet. So if you just make your way down the line, you'll see a selection and there'll be someone to help you with whatever you want. Thank you once again.